what happens is you don't know when you have your vintage of 2021, and the warranties they pop up. So it's not, we hope that I'm pulling for Jim Baker. No buyback. It doesn't matter how much cash they seem to have. They don't want to buy back stock. And it was not a good quarter. It just wasn't a good quarter.
Good morning.
Anyway, opening bell here. Breath a little bit negative at the big board. It's Paramount Group, a REIT in New York City and San Francisco, celebrating 10 years at the NASDAQ hydrogen fuel cell company, Plug Power.
Talk about a loser.
Really quick, finishing up Ford. Model E losses a little bit smaller than expected. Doesn't matter?
I thought that was good, but no, because I would have thought that the internal combustion engine division would have done much better. The hybrid division business was good, but not big enough. Truck business very good, but in the end, you come back and you say, guys, you can't keep doing this. You can't keep missing after what you just, you can't say 10 to 12 billion EBITDA and then come in at 10, particularly because there's always something that pops up. Painful call. Painful call, because you can detect that the analysts are saying, you know what? No, GM blowing the numbers out.
Right, and particularly in the ICE side of the business. On Ford, what do you, if you want to be positive on the company, which I know you have been, what do you attach that to at this point?
You have to hope
their growth in EV, which seems very uncertain.
You have to have if the warranty problems would end, then they would have done, I think they could have done 12 build. Now, they do have a lot of inventory. Now, Jim Farley takes his good inventory, and they'll sell it. But now we've got, if you look at a D.R. Horton is basically, if you want to draw an analog there, says that you're not going to sell that inventory. So I was sad about it because I really felt that this was the quarter where they were going to be able to do it, and they just didn't do it. And Carl, we're all getting tired of the company saying, look, we almost have it. We almost have it. Because they almost, this is not horseshoes. Jim Farley must know this is not horseshoes. You know horseshoes?
I do. I know.
A little knife here.
Horseshoes and hand grenades, yeah.
No, but I'm saying that's the problem. It's like so close, but it's not close enough. And that's the problem. And I just feel like, oh my God, because when the number comes out, the stock's up 67 cents immediately. Because people feel like, oh, well, they did it. And then you start parsing it, and you get to Lawler, and Lawler's very good. These are all good people. And you say to yourself, are you Turkey? Like Turkey? Huh? Turkey? This isn't Thanksgiving. Are you kidding me? I mean, Turkey in the country, is that important to them? And then you say, I can't deal with it anymore. I throw my hands up like Adam Jonas and just say, you know what, I can't do it.
You think it's a bit of an exhaustion bit?
It is. It's exhaustion because they have the best trucks. They did not lose as much money in EV. Yes, they're number 2 to Tesla, but they're not making any money. And it just comes back to say, you know what, my Maverick, the recalls don't stop. I mean, it's recall. And when you agree, and they're even talking about how they're like fixing the recall business, but this is a recall per share. It's a recall per share, and that's the problem.
We got an election a week away. I don't know if people know that. Obviously, early voting has begun in what I think it's 44 states. Is that right here in the New York area?
40 million have voted.
Yeah. Wow. Interesting to note shares of. Yeah, we're going to have...
You're not going to go to DJT, are you?
I am. I'm going to go to DJT.
Wait, do you have any particular reason?
No, my insights simply are based on wanting to mention it in part because a number of people mentioned it to me this morning, and there's a lot of regret, as you might imagine, amongst the hedge fund people that I speak to, that they didn't buy it when it was 15.
They were busy shorting.
Which was not that long ago. If you want to use it as a reflection of the likelihood that former President Trump regains that office, go ahead. Clearly, that's got to be a key reason. I would note, we've got him at 114 million shares. Remember, the lockup has expired.
And yet, President Trump did not sell it.
5.7 billion dollars is his current stake. And Jim, I'll leave it to you to opine on what happens to the stock if he wins versus what happens if he loses. Well, I assume if he loses, it goes down a lot, but I'm not sure how much it goes up if he wins. You're talking about an over $10 billion market value.
Well, we've never really had a stock that has really no prospects be up so much. It's almost like a share of the Green Bay Packers.
No revenues to discuss this.
Right. But it doesn't matter. There's some people who just say, "Well, I want to be part of the drain the swamp." This is drain the swamp.
When you could imagine a scenario under which many of his communications are over this platform, and therefore because he's president, we're going to have to
He would be
monitor
competing
it with
against his
regularity.
#1 fan.
Elon Musk. Well,
Yeah.
there's also speculation, completely made up.
Are you going to say that he's
That right? Would he buy it? Seems kind
you
of
just put
ridiculous,
that,
but
you just put that out there
Well-
and then shot it down, which I respect.
thank you. I like the ongoing commentary on my commentary.
Well,
That's what I live for.
it's a reverberation chamber. In the end, I like what he's saying, but I looked at the stock today and I said, if I were President Trump, I would file a $1 billion shelf and just block every other ad. I mean, I'm watching the fabulous Philadelphia Eagles this weekend. We went from firing the coach, of course, to giving him an extension, and that's theoretical. And every other ad is an ad for Trump or for Harris. This is 10 days. Jim, just spend $1 billion and just blanket it so that nobody else gets to advertise. That was what I would do if I were President Trump.
I mean, the other Trump trades that are pricing this stuff in, Jim, rate options, Bitcoin, 5-month high.
Yes, absolutely, and the president has totally acknowledged Bitcoin.
Wait, which president?
President Trump.
Oh, he's not the president. Gets confusing.
Do you think that why this price action's happening? Some argue it's because the policy that you'd get out of a Trump White House is more defined and more out of the money, perhaps, than a Harris presidency. Does that make sense?
Yeah, but there is a thing called the bond market, and you sure don't like the prospects. I mean, the bond market is wrecking the stock market. Although, yes, we're at a high, but today is the day after the bond market. But I like that analysis, but what I really think is there's an animal spirit enthusiasm for Trump media. It's kind of like, damn, you can just shoot this down, but people went in, and they finally they can't just buy a piece of Trump, but they can buy a piece of Trump media.
Percent. Yeah, some headwinds still.
McDonald's.
You have the ongoing crisis in the Middle East. You also have some headwinds in China, so that put pressure on global comps. But again, we're looking at the markets shake off these numbers and focus on the big picture, where it looks like the worst is behind.
I'll be right back. Make my coffee, and I gotta go do something.
One of the concerns
I don't
with
want, but
regard to McDonald's. One of the things that has helped them is the value meals. So that has helped them in terms of propping up their numbers. They remember earlier this year, they said they were going to start doing that. Other companies were following suit. Top brass said they did expect a challenging 2024, and that this has been like below their expectations. But again, the market's shaking this off.
Okay, so progress, I guess, and maybe recovery to some extent. We're still above $300, so we have got like $20 to go. McDonald's is going to resume back to its high. Think that kind of getting some of the negativity out in the commentary certainly helps in the market's mind. And I also think, frankly, that McDonald's has been a pretty reliable and good trade. So the notion of dip buyers.
If you look at a 5-year chart, absolutely.
Looks great.
If you look at year to date, is certainly trailing, obviously, the broader market. Now, today's move brings it positive for the year. So with this, a little more than 1.5% advance, it brings it positive for the year. If you look at it on a year-over-year basis, it is up double digits. It's up more than 15%, but trailing the S&P 500. So they needed to put this most recent challenge behind it. They already had challenges with sales. They managed to turn the corner on that in terms of U.S. comps. So, they have to continue the steady as she goes.
Okay. All right. I also do wonder, though, if the economy is going to take this leg up that it seems the market's bracing for. Maybe the McDonald's kind of staple trade is not as necessary. I don't know. I feel like it's McDonald's. It's always necessary. Let's talk some more movers and earnings. Yesterday we had a nice session in the cruise lines and airlines. Let's talk RCL, which has had a little bit of a dip and then a rip just this morning alone.
Yeah, Royal Caribbean hit a record close yesterday. You're right, it dipped at the open, but now it's higher. I missed that move higher, so it's up nearly 1% off the back of its latest numbers. So Royal Caribbean reporting adjusted EPS of $5.20 a share. That was better than expected. Revenue came in at $4.89 billion. That was virtually in line with expectations for Royal Caribbean. They talked about demand for 2025 looking good as well. There were some metrics that analysts were a little bit concerned about when we're looking at passenger ticket revenue. That was a little below what consensus was looking for. That did rise 18% to $3.47 billion. Onboard and other revenue, you know, the money that people spend on board the cruises, that rose more than 16%. So that did beat expectations. The amount of time that cruisers are cruising was an increase more than 12%. That was in line with expectations. Occupancy improved as well. I mean, we've been seeing more than 100% occupancy since the, you know, revenge spending trends that we saw that really benefited the cruise liners, and that's been continuing with the cruise liners, and they expect that to continue for 2025. Jason Liberty saying they're very early in the planning process, but they expect EPS to have a $14 handle.
Okay. All right. Look, I mean, what can you say? It's been a really nice comeback story. It seems like
Great trade.
yeah, really, you know, to some extent, kind of Royal in a world of its own.
Yep.
Whereas like Carnival still way down post-COVID lows. Norwegian, same story. This was
That's right.
now in retrospect like a massive competitive shift. COVID, it seems like, where whoever, I guess the CFO at Royal, or I don't know if it's their marketing, or because it seems like the financials are a lot better, but it also seems like their marketing and their ships have been very popular. So I mean, they're crushing it.
Well, they've been the leader. I mean, Jason Liberty was the CFO, now the CEO, so obviously he would have the financial component
There you go,
handled
good knowledge,
well,
yeah.
even though, yes, even though he's handed over the reins to the new CFO, so that's a big piece of the puzzle. And then, of course, they had the new ships that they were launching, the Icon of the Seas, which there was a lot of fanfare around that. But to your point about how the stock has performed compared to, not just compared to other cruise liners, but even if you compare it to other members of the S&P 500, it's in the top 5 performers this year.
Okay. Yeah, what a move. And yeah, I mean, booked load factors, they're locked in. You know, it's kind of like I have this weird thing because I'm so obsessed with the stock market that I feel like my personal opinions now are like formulated by the stock market and informed, or like, you know, like I make like personal decisions now based on, now I want to go on cruises now because I look at the chart. It's such a beautiful chart. They must have something going for them.
I never wanted to go
Me
on a
neither.
cruise before. About a year ago,
Until the technical breakout.
I had to. Yeah, it wasn't even big. I had the chance to sit down with Jason, and we did it on a cruise. That was docked, but that was the first time I ever wanted to go on a cruise. It was, I have to admit, Royal Caribbean has beautiful ships.
Yeah, all right, there it is. Apparently, they're the way to go. Overbought, hot stock, ripping. PayPal, not exactly as hot.
Yeah.
It had been sort of
Yeah.
building this kind of comeback story around new leadership and integration into so many forms of commerce, but earnings are always, I mean, like of the last 10 earnings, just kind of back ahead, it's like 7 of them, at least 6 have been disaster. Is this another one?
Yeah. Well, it's a mixed picture here. Adjusted EPS came in at $1.20 a share. The expectation was $1.08. Revenue came in a little light, and it looks like they're being penalized both for that and then kind of what projections are going to be. Revenue coming in at $7.85 billion. The expectation $7.86 billion. They've been trying to better monetize their acquisitions. That's been a challenge for them. Payment volume was up 9%. For the fourth quarter, they're forecasting low single-digit growth. So it looks like they're being penalized both for that top line miss and wondering about guidance. So that's one of the challenges, you know, that seems to be facing the stock today. Although, yes, compared to peers in the industry, they have been performing better year to date, but it looks like they are taking a hit today.
Okay. All right, ugly, and even though the revenue is up, it's, you know, the earnings are not. So there's a financial mismatch there for sure. That maybe is disappointments on how the business is running right now. But they definitely are still doing a lot to, again, integrate themselves into all of the banking and the commerce system. I will say that it is very much an important tool and like an alternative. It really is kind of becoming a bank alternative for many, but they're not alone either. I mean, that's the thing, is that it seems like a lot of these payment stocks are having a lot of competition. SoFi, another kind of new era financial business, down 12% too, which kind of interesting at the same time as PayPal, because they have similar trajectories in the last two years.
Yeah, they do. Yeah, SoFi taking a hit this morning as well off the back of their latest quarterly numbers. And they're certainly not performing as well when you compare them to, say, PayPal. They are obviously a little bit different than a PayPal in terms of, while they are a fintech platform, it's a different kind of environment. Adjusted EPS came in at 5 cents a share. The expectation was 4 cents a share. Revenue came in at $689.4 million. The expectation $637.3 million. They did raise their guidance. They're expecting revenues in the range of $2.54 billion to $2.55. Adjusted earnings expected to be a range of 11 cents to 12 cents per share. That's above their guidance. And, honestly, analysts were expecting around that. I'm trying to find exactly what has been wrong with the results, because
Nailed
I'm
it.
not finding exactly what's going on. Origination volume did increase as well. Personal, student, home loans. Student loans, obviously, we know it's been a headwind for SoFi. They've been, in the camp that have been pushing back against the Biden administration's efforts to forgive student loans. They're a big beneficiary of, that vertical. So, that may be one of the concerns as well. And they had talked about this year being a transition year, and that has reflected throughout the year for SoFi. And the stock, even though it's slightly higher year to date, this hit is something it certainly didn't need today.
Yeah, okay, ouch. All right, well, look, it seems like some of the expectations for these payments and fintech businesses are still pretty high, and it seems like a lot of them are still really going for customers. I feel that they really are in a land grab state of mind still.
Yeah.
So when they talk about strongest quarter, I feel like that's where they're coming from. But for PayPal and SoFi, it seems like financially still the market wants more from them. Thank you very much, Diane.
That's right. You got it.
Great stuff. When we come back, let's talk tech. Let's do some trading. Advanced Micro and Alphabet to kick off the big tech earnings. Alphabet a little bigger than AMD, but of course there are implications for AMD given last week's strength and some of the underperforming semiconductor names like Texas Instruments, Western Digital, Lam Research even got a little bit of a bounce. Will AMD get the same?
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Deer, 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 deer.
Okay, we've got big tech on the way. Alphabet going to be key for the whole market. AMD will be a very interesting piece of information for chips. Ivana Galevska rejoins us from Spear Invest, founder and CIO. And Tom White's here looking at some options trades. Ivana, welcome back. Thanks for being here. AMD, not as I feel like important maybe as Alphabet, but in terms of the semiconductor trade, one that really represents the potential for non-NVIDIA winners. What have they got to do to prove they have a role there?
Well, Oliver, thanks for having me. I think the setup for AMD here is pretty favorable as the stock has underperformed year to date.
Oh?
So as we look into next year, the key is going to be their guide for AI, not just for this quarter, but any indication for where they're seeing that going into next year is going to really be key for the stock. And just for background here, AMD, if they're only able to achieve 5% market share in the near term, that should be huge upside for the stock. So that's really the play here. Outside of AI, all the end markets have been very weak, but that should already be known for investors. Like you can see the manufacturing PMIs, they've been under pressure for 2 years now. So really the focus is on AI and how they deliver on that front.
Last week we saw some strength in Lam Research, Texas Instruments, Western Digital, few that haven't exactly been the hottest of trades. So I guess if they can do it, then AMD better at this point. How many earnings can they go through without showing big numbers before the stock really starts to turn around?
Well, the stock has turned around, right, since the beginning of the year. So I don't think they necessarily need to show huge numbers.
Okay, fair enough.
But yeah, we do expect some sort of an inflection in the non-AI businesses as well.
Okay, so for growth and outlook, what are the numbers here that Lisa Su's got to put up? I mean, AMD has been in like a different tier. NVIDIA is doing triple-digit growth. Where then should AMD, should we expect them to hit, Ivana?
So here for AMD, the key will be they guided to $4.5 billion of AI revenues for this year.
Okay.
Buy-side expectations are around $5 billion. And the key is going to be for next year. So for next year, we're looking at something around 10 billion of revenue. So that's really going to be the key driver for the stock here.
So they're going to be looking basically, if my estimates are correct, that's going to be like anywhere from 15 to 25% top line growth. I mean, they're trading at 45 times earnings though. NVIDIA's 49. If I've only got $1 to put to work, do I not put it in NVIDIA every time about it?
Well, NVIDIA is a much better risk-reward here, I believe, because you are protected on the downside versus AMD does need to deliver. So I wouldn't disagree with that. I think both look attractive here. One is a market share gain story, so there is some execution risk there. The other one is all about maintaining leadership position, which we believe they will be able to do. So I do agree with you. NVIDIA looks a lot more attractive on a risk-reward basis.
Got it. Okay, in terms of Alphabet, and I think firstly the search, which 8 months ago people were talking about AI eating away at their market share. Oh, anybody can replicate search. Microsoft's going to deploy a new Bing. All this stuff. Has there been any evidence that Alphabet's core cash cow has been disrupted at all?
Well, so far we have seen some evidence of it, and we're just in the early innings of this trade, right? So we're seeing companies like Perplexity enter the market. They've been able to gain significant share. They're raising money at pretty big valuations. So I think there's going to be a lot of change and disruption on the search side and how we do search. So I would stay clear of Alphabet here.
Okay. How clear are we talking? Is it a short because of this stuff? I mean, Mark Zuckerberg and Meta, they're saying that they've got some pretty great search tools that they're developing. And I've seen some of them are pretty impressive.
Yeah, so the valuation is not necessarily out of control to a point where this is a short, right? And they do have the cloud business, where they're gaining some share, and I think they have their own internal development, some chips that could be interesting. But if you look at the upside, really the search business is the crown jewel here. So if that's coming under attack, even if they lose small share there, it's going to be.
SPY just hit the 200.
Okay. Ivana, do you have a favorite among the whole suite outside of the NVIDIA trade? Who's your favorite here for earnings?
Well, we also really like the networking side, Oliver. I think it's going to be interesting to see how that plays out. There was a pretty big event going on in California where all the companies showcased their networking products. And as we look into next year, I think custom chips, the ASIC side, will be very interesting, and Marvell stands out on that front.
Okay. Good stuff. Like it. Thank you, Ivana. Appreciate it very much. Nice addition there with the overlooked potential winner for the tech season, Marvell. All right, Tom, let's do some trading here. Let's go to AMD first. You got a bullish trade. To Ivana's point, the risk reward is a little different here. It's more about market share take as opposed to being the leader.
Right, and they got hit last earnings due to the fact that they guided a little bit lower than the street wanted. She mentioned some of the expectations going into fiscal year 25. I think it's going to be key for Lisa Su on that conference call. But if you want to take a bullish stance in here, there's ways to do it using the option market and using implied volatility levels, because there's wide dispersions. Option market's priced in about a plus or minus 6% move in the shares post earnings, just over $10. Either way, the stock's off nearly 30% from those all-time highs that we saw in March of $227. So if you think it's going to go up post earnings, this type of strategy takes advantage of it. I looked at a call diagonal, really short-term positioning, going out to the November 15th monthly cycle. I'm going to buy an at-the-money call, the 160 strike call, and then against it in the near-term November 1st weekly options that expire in just 3 days. I'm going to sell the 172.5 strike call. So a bullish $12.50 wide call diagonal to the upside. You're paying roughly about a $690 debit for that. There's your risk, $690, and it's nearly half the width of the call diagonal strikes in there. So that's key. Why is that? Well, there's vol dispersion taking place here, where the implied volatilities in the November 1st weekly options that you're selling on the 172.5 strike, those are trading about 105% implied volatility levels on aggregate in that series. And then out in the November 15th monthly options that you're buying that expire in 17 days, you're buying that 160 call. That's at about a 65% implied volatility. So that's why the $12.50 wide call diagonal is only priced at $690. You can see here the break even about 164 to the upside. Anything above that's going to be profitability. You're shooting for that 172.5 strike, but anything above the break even is going to be profitability. And you'll have one opportunity or two opportunities to roll that short option. If the stock goes up, you'll collect more credits. That'll increase potential profitability. But that might be the way to play it if you think the stock's going to go up, taking advantage of those differentiating volatility levels in the series that you're buying and selling.
Okay. All right. So then you get some good upside here, and you're also, though, because you're still on the 175 or 172 and a half, you're taking advantage of the vol being elevated into this. So,
right.
All right. Reasonable approach, and you only needed to get to 164, so you got to get like $2 higher.
Yeah.
Alphabet, though, maybe a little bit more up in the air.
Yeah.
So I like the way you're doing this trade, which is basically looking for a swing.
Yeah, looking for a move in this type of trade where, hey, the stock could disappoint. The stock could go down the 6.5% of the option market, or maybe it goes up.
What happened there?
Definitely underperformed. Still up 20% so far this year, but lagging. And valuation
SPY just broke out.
The other Mag 7 name. So I looked at a different strategy here. Same type of theme, though. I want to take advantage of the implied volatility level. So I looked at a double calendar position where if it goes up, about that plus or minus $10, $11, I can profit, or if it goes down. But I've got a nice wide range in this position also. So looked at the double calendar. On the call side, I'm going to go out to the November 8th weekly option, so 10 days to expiration. I'm going to buy the 157.5 strike put. And I'm also going to buy the 177
job jolts
call. So buying it out of the money call, buying it out of the money put around the current share price. And then I'm going to sell the near-term November 1st weekly options, those same strikes, the 157.5 strike put, 177.5 strike call, double calendar, 1 week wide. You're paying roughly $1.25 debit. That's it. 125 bucks at risk per spread that you do. But you can see here from the risk profile, my break evens are going to be about 150 on the downside, about 185 on the upside, where I can remain profitable. So while I want it to go to either 177.5 or down to 157.5, I'm okay with it between those ranges. I don't want it to stay where it is. I'm not going to profit that much, if at all, there. You got 10 days in this position, and like I talked about with the previous example, the vol dispersion is why this thing is so low, such a low price at $1.25 debit. You're buying about a 58% implied volatility on aggregate in the November 8th options, and then selling about a 90% in the November 1st weekly options. But double calendar gives you some exposure to upside and downside. You don't have to pick a direction. You just don't want those 2 or 3 standard deviation moves to the upside or downside.
Okay, so you're looking for contained range,
Yeah.
but a wide one. You know, you're looking for a swing, but not like a maniacal one. So
Right.
it's interesting. Okay.
Yeah.
All right. Nice. Thanks, Tom. Appreciate that. Jolt's coming in, by the way, as we cross into the second hour of the show here. Going to get you that number because bonds just caught a little bit of a bid as job openings came in at 744,000.
Yeah.
A little lower than the 800,000 expected in prior. Also, whoa, there's consumer confidence that just slammed 109. Present situation 138. Just a monster beat for consumer confidence. So we'll see if whatever bid just came into bonds can hold up to that. That's a pretty impressive number. We'll be right back. This election season, stay out of the muck and the mudslinging with Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself
She's a
out there
boogieing.
and test yourself, find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading
What kind of question is that?
not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome back to Morning Trade Live. We're in hour 2 here, and the market's just got some pretty interesting information there. And
Well, what is it, brother?
Just it came in below expectations, but we did get a consumer confidence number that went absolutely skyward there. So a couple pieces of economic data to process. 7.4 million. Misspoke there on the digits for Jolt's. Consensus was for just shy of 8, so that number does continue to come in, and that might limit some of the bond selling today, which it did in the moment as that figure came out. Bonds spiked higher, but then consumer confidence ripped through expectations. 109 versus prior of 99, expectations of 99.5. So we'll see what to make of that. Dollar cooled off a little bit on that JOLTS number 2. Market definitely prioritizing the jobs market as opposed to the sentiment and confidence readings, which does make sense. So JOLTS should carry more weight than confidence. And so we get a little bit of dollar pushback and some selling in the greenback, some buying of bonds. That should also help firm up the weak small caps right now. The Russell, which has been down in the session, getting a little bit of a bounce and some further strength in crypto markets with Ethereum now 5.3%, Bitcoin up more than 3%. Gold also is moving from this morning higher too. So should be helping out some of those markets. We're going to trade Visa.
Market's flat.
As we continue to look at fintech stocks and earnings, that one's coming up too. That's our morning trade. Looking at the report ahead of this afternoon. We're also going to be talking some really impressive numbers and trends in the medical device business of ResMed, which has been rallying a ton.
Well, I'm going to go get some paper towels.
Shares of RMD.
I hate to leave, but I got to go do it.
90%. Last 52 weeks, about 82%. We've got the CEO joining us to give us an update on the earnings. And then we're looking for some more earnings ahead. Chartmaster getting technical with Snap, Corvo, and then CMG, which, by the way, got some pretty darn good brisket. Tried it last night. It's true what they say. A little taste of Texas. It's delicious. All right, George Tillis joins me, our senior markets correspondent. GT, let's talk those numbers real quick. JOLTS missing, but confidence red hot. How do we marry those two?
Well, I mean, if you look at consumer confidence, it's sort of a blowout number at 109 versus the estimate at 99.5 and quite a bit higher than 98.7. So anything that grows month over month demonstrates there's confidence from the consumer standpoint, which we know from a economic standpoint is about 70% of our total output. So that's good. And of course, that's positive for the economy. But we're really, I think, focused still on some inflation concerns out there. And so there seems to be some abatement in that regard with the JOLTS number. That number came in 7.44 million versus 7.98 million. So we're seeing sort of decelerating trends in the job openings. And what we're looking at
Yoko wanted a 257 pull back for Tesla.
In the job openings market, and the labor market for that matter. Like I said, if you just go back and look historically, average unemployment rate, which is non-accelerating, of inflation is around 4 to 4.5%, so we're right in line in that regard. And then if you look at JOLTS, just going back to 2019, prior to the pandemic, it was around 7.5 million job openings. So I think this is a good sign that the labor market is normalizing. The ratio of those unemployed and also the job openings is still favorable for job openings, but nonetheless, it's normalizing.
Good job, Randy.
So, George, the normalization of jobs kind of expected, right? But still, as it becomes reality, the cooling of it in the midst of a series of economic data that have been surprisingly positive, it seems like this might be able to put a bid into bonds for the moment. I don't know if it's going to last because then the confidence is just red hot. But then we also saw for the sentiment number, that was really skewed by political expectations too, because Republican respondents hit like a year-long high of sentiment in the consumer figure because they think their guy is going to win, and that could happen to either side. So like, I get that these are sentiment numbers, so they should rank second, but it still is a really big confidence beat.
It is. I mean, I think that speaks to, the strength of the economy, and I still think that if you look at the fiscal flows, they're tremendous, OJ, just going back to last year. So that's been buoying the economy, irrespective of rates, which are still remaining to the upside or high. So, we're in the process of switching policies, and it's very difficult to navigate when you're essentially reducing or, implied increasing monetary easement through lowering rates. Then again, the assumptions are that fiscal policy will be restrained coming forward, especially if there's a Republican sweep. I think if you look at rates, I think that's confounding a lot, especially those who are going long bonds, especially long duration bonds, because that's the strategy one would take, or a portfolio manager would take, undergoing a weakening economy. And the economy is still strong. and we're actually seeing that reflect in long-term rates. With the 10-year, I saw it earlier, I think it hit 4.35. So we talked about this pivot point at 4.25. I said it'll either go to 4.5. Can't say which way it'll go. It seems to be moving higher, maybe closer to that 4.5. So questions is what is it reflecting? I mean, if you look at the housing stocks today, they're down. Building supply companies down. Utilities are down because they're sensitive to higher interest rates.
Damn.
You know, if you think about the Republican sweep, there may be tariffs. Tariffs are inflationary. So I'm just throwing out one variable.
We don't want it.
Considered here as a culprit as to why.
We don't want to sweep, guys.
Okay. So, George, all right, then back to the jolts here is the most important print. It's a drop-off. It's a continuation, though.
We do not want
a
it.
huge surprise. I mean, it is a little bit, considering they were expecting 8 million. But this is also a number that was uncharacteristically very high for a long time. I mean, that being said, though,
correct.
7.4, you got to pull back the chart a bit.
Woo! There you go.
The lowest reading that we've had in some time.
Now what are they at?
So that's kind of where I can get, you know, maybe some of the bond buyers might come in here. I mean, this you got to go back to basically 2021 to get to 7.4.
The 580s are looking very nice.
Yeah, I mean, if you look at
The
2022,
582s.
it's over 12 million. So, you know, looking at this number,
Let's put a
you know,
30th.
coming in less than expected, one would say, look, this is bad for the economy, and I'm not surprised or concerned, to tell you the truth, because like I said, if you just look at normalized trends, you know, outside of population growth, you have to consider the working age population, and those are in the labor force. So that's what we're looking at is the ratio of job openings to the labor force, and it's still skewed positively towards job openings. So there's still flexibility.
We don't want to sweep.
But one could say that maybe that's a little bit more wage.
We get a sweep, we'll get a well. If you want to crash in the market, I mean, we're set up for it, but we need it. I mean, this country needs it to teach. But I don't know. I mean, I'm starting to where I don't want to talk politics anymore. I did it way too long.
Economy, that which is a good sign for rates to stay high, and everyone's really looking at, you know, mortgage rates and the housing market. Well, normal rates are where we're at between, let's say 5 and 7%, around 6%. The only time they've been abnormal was past, Great Recession, and that's when the Fed essentially implemented QE and bought mortgage-backed securities and suppressed long-term interest rates, which, you know, unless the economy goes into the toilet, they're not going to do. So everyone just has to get used to higher, longer-term interest rates.
Okay. All right. I like it, George. I think it's a good take. I think that it's, that is the regime that we're in. Some of these things might be a little surprising on the margin, the rate at which perhaps they develop, and so Jolt's missing. But then you got the confidence hot. So ultimately, we just kind of pull back and say, look, we know some of the jobs market has slowed. That's kind of a given. But it generally has been resilient, and the rest of the data suggests there still could be some juice to squeeze from the economy.
George!
So, we still have bonds down on the day. Dollar still bid. Stocks taking it in stride. Appreciate that, GT. Thanks for the thought. Good stuff.
We're flat, brother.
All right, let's talk some earnings ahead of us. A big one related to the consumer and the economy, of course, is Visa. Jeff Pierce joins us. Jeff, this has gotten a little choppy in the last couple months. High of 293 coming into the report. So what do they need to do to regain that high?
Yeah, a little bit of choppiness and a lot
I'll
of
be
it's
back.
in the antitrust case, which this company's not used to, or it's definitely used to these type of situations.
Don't
But
gotta
I think
go, but I
investors
gotta
are
go.
concerned that this one could have an
Gotta
overhang for a
go.
long time. Having said that, the stock has made up quite a bit of ground since we saw that fall in September. I think going into the support, expectations are high. They're going to be looking for more of what we saw last quarter with a couple of better numbers coming in. Expectations, $2.58 on earnings, revenue about $9.5 billion. That would be up about 10% year over year. If we, look at last quarter, the numbers were pretty good. Earnings per share met at $2.42. Net income was up 17%. Revenue, even though it missed slightly, is still up almost 10%. Some of the numbers that were disappointments were payment volume. Total volume growth was just about 7% in the quarter. That's down from the 9% we saw in Q3 of 2023. It was also the weakest quarter for payment volume growth since Q4 of 2020. Similarly, the total cross-border volume growth was just 14%, down from 17% the year prior. So those numbers were a bit of a disappointment. I think investors are hoping for more as we go into an environment where we've got some lower inflation, we've got interest rates coming down, that we're going to start to see some more spending from the consumer. And, hopefully Visa is going to start seeing more of those fees stack up in the form of revenue.
Okay. So, it's still for the most part is a volume, transaction, health of the consumer game. There's a few things on the edges here that are idiosyncratic to Visa, legislatively, competitively, the charges per transaction that were also a point of discussion in policy-wise, but for the most part, if the consumer doesn't break, Visa don't break, right?
Right. And yes, and the policy, the legislation, all of that is definitely a concern. And I think that's why we do see investors maybe not jumping into Visa, as quickly as one might expect by just looking at the numbers. I mean, if you look at the fees they charge, 1.5% to 3.5%. They've got, with MasterCard, they control about 90% of the global payment processing market. They get roughly half of the payment volumes, roughly half of total credit cards in circulation have a Visa branding on it. 15 trillion in processing volume over the last 12 months. Those numbers have looked very good. Up to 2023, we saw the growth rate around 11% in terms of revenue. Earnings growth about 16%. We saw that slow down, certainly due to inflation, certainly due to higher interest rates. But looking forward, some analysts are expecting that growth rate to get it back to about 10% for earnings, about 14% for earnings, 10% for revenue. And you have to focus too on the profit margin side. Very high for Visa. Over 54% in Q3, operating margin over 67%. They also have some smaller sides of their business that are really starting to pick up some speed, especially the digital wallet side, but that new flows, as they call it, that increased in transactions by about 41%. So definitely some good numbers there. I think this antitrust case is something for investors to be concerned about, to watch. The problem with this case is that it's likely going to take some time, and I think that's part of the overhang. Something they're used to, but definitely something that investors are going to have to pay close attention to.
Right, a pretty good looking chart. Nothing to dislike really in the long term. Just kind of steady as it goes. Jobs hold, checks keep coming in, people keep swiping. Appreciate it, Jeff. Thanks. All right, let's bring in Tim Bigham. Let's do some trading as the option strategist at Buy Alerts. Tim, you ready to fade the U.S. consumer? You can't when you're wearing a shirt like that, because I know that thing is not cheap. That is designer. It's and Tim Bigham, you're the face of the consumer, my man.
I think so, but it's not designer. Although I probably
don't tell us. We're going with designer.
Okay, we're gonna stick with it. All right, I'll take the one uptick in my lifestyle whenever I come out here. So. But I think Visa probably will have kind of a muted reaction to earnings. Certainly the options market only implying about a 3% or so move. Stock nearing that high again, right around the 293 level. So I think it might have trouble poking through there with conviction. Certainly with that overhang on the antitrust, I don't think you'll see a lot of get up and go to the upside. I think earnings should probably come in just fine. As you alluded to, the stock looks very good on the chart now. Series of higher lows here, did hold that 20-day moving average. So I think we'll probably just see the stock maybe bleed out sideways to up a little is kind of my trade structure that fits into it. So I'm just going out buying next week's 292.5 calls, selling this week's 292.5 calls, paying just over $1 for that spread. Like the price on that for a almost $300 stock, certainly. And selling over a 40 IV, hedging with about a 30 IV. And I think, barring an absolute blowout one side or the other, you'll probably see the stock just kind of continue to maybe grind higher here until that, litigation gets removed, which, as you talked about, will take certainly probably several quarters going forward.
Okay. All right. So, Tim, at this point, you're looking for it to basically hold where it's at, and you get a little bit of range. You got some vol in there, right? You can swing around a little bit, but not too much.
Yeah, absolutely. And this is not a high vol stock or a high IV stock for that matter. So that term structure vol edge, although it's only 10 points on this stock, is pretty decent, right? And I kind of like structuring the trade at that overhead resistance level, triple top right around that 292 and 293 range. So I think it'll have trouble getting through there with conviction. So a move up towards that would be ideal for this trade. And even a little move lower because of the term structure vol edge should work out just fine as well.
Okay. All right. So this is a way to take advantage. There's a little bit of vol in here, but not a ton, right? Like more than usual for Visa.
Yeah, absolutely. Everything in IV world is on a comparative basis. And for Visa, it's actually fairly richly priced, certainly given the kind of rebound we've seen in the stock here. So I think they may be overpricing the short-term options versus the longer term, hence the trade structure as well.
Okay. All right. Like it. Tim, always appreciate the trade. Appreciate you, sir.
You bet, anytime, and thank you for the shirt compliment.
You're the man. You know I love you.
I'll get you a shirt too. I'll send you one.
Hey, you've been telling me that for like 2 years. I'm waiting for it.
Okay, well, you're not my size anymore. Not many people are as I continue to age and get wider in the midsection.
You're the man. Thank you, Tim Biggin. Option strategist to buy alerts. All right. And of course, the most sartorial talented of our guests. Coming up, let's talk some healthcare. Let's talk some medical devices. ResMed shares are up almost a double in the last 52 weeks. We got the CEO coming on post earnings next.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Shares of medical devices business ResMed are up more than 80% in the last 52 weeks and holding on to those levels after earnings. Joining us is CEO Mick Farrell from ResMed, ticker RMD. Back on the Schwab Network. Mick, thanks for being here this morning.
Happy to be with you, Oliver. Great to be back on the show.
Likewise, glad to have you here again. So give us the update from last time. The shares are up 40% on the year. You're near the highs of the year. Tell us the latest.
Well, look, Oliver, it's been an interesting couple of years. We had two mega trends that have come into our industry. The number one is from the consumer tech side, where around 6-7 months ago, Samsung got de novo clearance, FDA de novo clearance for their latest Galaxy watch to detect moderate to severe sleep apnea, straight from a watch, just using pulse oximetry from a handheld sleeping with a device watch. And then Apple followed, maybe just last month, with FDA clearance from their latest generation and second latest generation with a software update, Apple Watch, to be able to also detect sleep apnea. So huge megatrend from the consumer tech industry to help the 1 billion people worldwide who suffocate from sleep apnea. And another megatrend that Oliver, you and I talked about last time I was on your show is regards to the pharma industry with this new class of pharmaceuticals on GLP-1s, Eli Lilly and Novo Nordisk, both coming to market with their GLP-1s having an impact on bringing patients into the primary care, and potentially Eli Lilly Zepbound having an indication for use for sleep apnea, which we think will bring a lot of patients into primary care seeking care for their obstructive sleep apnea. They'll get partial treatment from pharmaceuticals, but full treatment comes from non-invasive, highly efficacious, low-cost, continuous positive airway pressure or automatic positive airway pressure, CPAP and APAP, that ResMed is the number one provider of worldwide. And I think that's what you saw in this great recovery these last 12 months.
The conversation we had last time, I kind of joked that I might be an interested customer. I've got some big old tonsils, but for the most part, I'm doing okay. Part of it, though, is to your point, I got this little whoop right here. So I can keep pretty good tabs on the sleep. First of all, how accurate are the wearable devices in knowing what's going on back there, Mick? I mean, it sounds like they're pretty good at identifying at least the binary, is it problematic or not? But like, how detailed, specific, and reliable are they?
Yeah, Oliver, that's a good clarification question. And you obviously do not have a high body mass index, right? But you absolutely could be a candidate for obstructive sleep apnea. It's not just about the large neck, the large stomach, the middle-aged male who's centrally obese. It is about young, athletic female folks as well, and that's what I think these consumer tech companies are looking to target through these wearables. Look, the sensitivity and specificity, so false negatives and false positives, these wearables are actually quite specific, meaning they don't have many false positives. Particularly Apple's data has shown quite high specificity, sort of in the 90s. So if they say you have sleep apnea, you very clearly almost do, and you really should get straight to a primary care physician and see them. And to your point, it's beyond just Samsung with the Galaxy Watch, Apple with the Apple Watch. It's Whoop, like you're wearing, Oliver. It's Garmin. It's a whole bunch of other wearables. We know Google's Fitbit have sleep monitoring as well. So we think all of these wearables are going to help the 1 billion people worldwide who suffocate from sleep apnea find their pathway to a primary care physician. And then it's ResMed's job to be this sleep health concierge, to help people find an easier pathway through the healthcare system. Right now, healthcare systems are disjointed, not connected, and we want to make it seamless, frictionless, and easy. Once you have that consumer technology, that wearable saying, I think I might have a suffocation problem. Let's not call it the Greek word, apnea, without breath. Let's call it suffocation. Make it real and say, I need to get back to sleeping well and breathing well, because it could save my job, could save my marriage, it could save my life.
Totally. And that's where the connection, because we talked about this last time, but just to be very clear for those who might be tuning in for the first time, you're selling the machines, the mask, the CPAP, the things that address the problem, whereas the devices identify then the problem. So it all works in a kind of natural cycle. So You've also got the software side too, to maintain the information flow as well. The app, when your sales, how do those sales break down right now, Mick, in terms of the product purchase versus the recurring rate of income as well?
Yeah, look, it's a really good question, Oliver. And sort of if you break our business between the hardware and software, it's like 85% hardware. But then if you break that down into the recurring parts of the business, the masks and accessories is a very good chunk of that, sort of approaching 40 to 50% of that part of the business. And so recurring revenues, if you think about it, from masks and accessories and from the software as a service that we sell, is well over 50% of ResMed's revenue. So it's really, if you think of it like a Gillette razor blades, we have a lot of recurring revenue. As you said, we're the #1 provider worldwide of CPAP, APAP, bilevel masks and accessories, the non-invasive, low-cost, highly efficacious treatment for obstructive sleep apnea. We have over 26.5 million 100% cloud connectable medical devices sold in over 140 countries worldwide. And what that does is it liberates the data to the cloud. And we now have over 20 billion nights of medical data in the cloud. And what do we do with those big data? We create value. We have over 8.3 million people worldwide who use an app called myAir. And we just last month, launched an application interface, an API from our ecosystem into Samsung Watch and into Apple Watch. So you can now get your own data, how you were sleeping, how you were breathing every night, not just on your app, myAir, but on your phone. And that integration, if you like, of your sleeping data, your breathing data, with your cardiovascular data, with your diabetes data, with your simple health and fitness data that you might get from your app about how many steps you took or what your dietary intake was in calories, how much you exercised, all in the one spot, we think creates an environment of digital health for individuals that's going to help them participate in their whole healthcare. And certainly for us, we know if you are using the digital health parts, the software parts of ResMed's business, you're going to be more engaged in your healthcare. You're going to have better outcomes, and you're going to use more masks and accessories, and you're going to have a higher adherence rate, which means you're going to have a lower causes of stroke, heart attack, and even mortality events. So you get a high survival rate, 29% higher survival rate for people who are using our device versus those who are non-adherent. And we have those data from a large study we did in Europe called the Alaska study. So really important to use your medical devices, Oliver.
Yeah, absolutely. It just naturally compounds, right? Both health-wise for the customer, in theory, should save them financially too. But that's kind of the least of your concerns if there's mortality events as well. But in the meantime, obviously, of course, as you're selling these and you've got the recurring revenue, you're also building up a pretty decent cash pile. Your free cash flow in the trailing 12 months, according to Bloomberg, is about a little less than $1.5 billion. Is there any more of the supply chain or ecosystem for you to own or be involved in, Mick? Are there any points that you would like to bring even closer home, or is this more about still the sales, the marketing, the understanding, and the growth for the core product?
Yeah, Oliver, look, it's a combination of both. Obviously, we're laser focused on our core business of sleep health and breathing health. But we just had our Investor Day just a couple of weeks ago at the New York Stock Exchange. We were celebrating 35 years of this great ResMed brand in the market, 25 years on the New York Stock Exchange, 100 quarters. And we launched a whole new approach of our 2030 strategy. Our strategy is to help 500 million people to sleep better, breathe better, and live better lives outside the hospital with healthcare technologies in the home that people love. And when you go that broad and you talk about healthcare technologies in the home, certainly we are looking to do some tuck-in acquisitions, and we said sort of in the range of that $100 to $500 million range. As you said, we generated over $1 billion in cash flow. Just this quarter, $300 million in free cash flow was generated by ResMed. So we're really excited about the cash flow. We put that back into the business, 18 to 20% in SG&A, 7%, really importantly, into innovation. ResMed is an innovation machine. We put 7% of our revenues, trailing 12 months, it's $5 billion in revenue, so $350 million into making the smallest, quietest, most comfortable, most connected, and most intelligent medical devices on the planet.
Okay.
But we have made some interesting tuck-in acquisitions. We acquired a company called Ectosense and a wearable called Night Owl. And this is a wearable, think of like a Band-Aid with a sensor on your finger. And it's very sensitive and specific to be able to diagnose you. So as I was saying earlier, Samsung or Apple or Garmin or a Whoop, as you have, Oliver, might screen you or get you into the healthcare system. Something like Night Owl is a wearable that can be a diagnostic used by a sleep physician, and then a respiratory therapist can set you up. Another acquisition we made was a company called Somnoware, which is software for the pulmonary and sleep medicine practice clinics, the people who diagnose and get you prescriptions for care. So ResMed is really thinking about end-to-end care, all the way from screening, I'm a sleep health concerned consumer, all the way to I'm diagnosed, treated, and managed for life. Because we don't create a cure, we have a treatment for life. And our goal is to have you adherent, buying masks and accessories for our business, but more importantly for you, getting the sleep you need, the breathing you need to stay out of hospital healthy and well, and to live your life to its fullest potential.
Great stuff. Thanks, Mick. Appreciate the walkthrough and the update on the earnings.
Thanks, Oliver. Look forward to talking to you next time.
Absolutely. You guys doing good things. All right, RMD, ResMed up 80% in the last year. Mick Farrell's the CEO. Coming up, let's get ready for some earnings this afternoon. Chipotle Snap in Corval. I'm not sure brisket bowl's going to help your sleep apnea, but it'll be delicious.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out there.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. All right, let's talk some charts here. Earnings this afternoon. Chipotle kicking things off. Mr. Alex Coffey taking a look at the shares and the brisket, doing a channel check. I did a channel check last night. Pretty good stuff.
Yeah, I was an advocate of...
Yeah, your recommendation.
I recommended to Kevin Hinks as well. He came back with glowing reviews. But that's it's not just around the network office here that it has fans. Analysts actually expect it to boost sales. It's a limited time offering, but very popular and also pricey. Oliver, you may have noticed it's
what the heck is with that?
And so that is seeking to boost some of those same-store sales metrics a little bit year over year. Earnings are expected to grow about 10%. Revenue expected to grow about 14%. Same-store sales around 6% year over year. When you look at how analysts are shaped up here, about 2/3 of them are in the buy camp. About the other third is in hold. There is one sale rating. Average price move one way or the other is over 7% over the years in Chipotle, so something to think about, Oliver, when you're looking at this name. And also, ever since it's split, kind of lackluster performer over the last 6 months is down about 4%.
Okay, that's pretty fun stuff to process here, because the higher price point for the brisket puts them in a fun spot. Rick, you got to try the brisket.
I will definitely give it a shot. I will report back. But when we see our shape of our chart recently, we hit our high point here, 69.26. That's our 52-week highs after a nice rally, pretty consistent. But then a abrupt downward, sloping trend line here in blue. We can see fell below the 252-day EMA before stabilizing here. Some big swings, to the low end there, near like 48 or so. Now, more recently, a rising wedge type shape. Price has recovered above our 3 moving averages that we follow: yellow 21-day, orange 63-day, purple 252-day exponential moving averages. The faster ones are outpacing the slower ones and crossing above each other. They continue to diverge farther apart. The trend, by that measure, is still improving to the upside. We also crossed above our volume profile point of control, the area with the most trading. It's looking like we are breaking to the upside beyond a long-term red downward sloping trend line on the RSI. So momentum is also breaking out. However, price, we haven't really broken above this key area here, this red line, this old high point, low point, and now it's where we're kind of stuck once again, 60.48, around 60.50, let's call it. If we were to move upward, another volume node right here, an area of congestion and heavy trading, around 66 would probably be the hurdle to get to the next set of highs. Plenty to choose from to the downside, between about 56 to 58. All the stuff I mentioned previously, all those technical indicators.
Yeah, it's a pretty interesting one, because you do have this short-term momentum upwards, but then the long-term RSI seems to still be kind of mired in a downtrend, but that's certainly pushing up against the line for that RSI downtrend. And Chipotle usually doesn't underperform for too long. I mean, it certainly is still not underperforming. It's up more than the stock market on the year, up 32%, but off the highs. And I think just last time there was sort of a just repricing basically going into earnings, which then did form the low. So, I mean, earnings still have generally been a positive for it. So, especially if they can push up the margin, the brisket margin. All right, nice. So, always fun when we know what companies do and have personal experience. Let's talk some Snap, Alex, which, as I've talked about, I use it now for the content. You get a lot of quick hitting shows. It's where I watch The Family Feud and other things, people catching lizards and snakes and stuff. It's fun.
Yeah, it's your version of TikTok, I suppose.
Yeah,
I'm more of a YouTube or Instagram Reels guy myself, I suppose.
Yeah, no TikTok for me.
When you look at this particular company, I think the first thing to consider is that the U.S. market is pretty saturated. They really haven't grown in North America in a few years now. And we know that that's when it comes to these digital advertisers. It's really any company. It's the highest margin. It's the highest kind of dollars available for a market. So the fact that they're not growing there influences the fact that their top line growth is really pretty anemic for a tech growth firm here. It's expected around 14%. It's okay, but maybe one of the reasons that you see kind of tepid analyst positioning around this, you got 2/3 of them in the hold camp, about a quarter of them in buy, and then you do have 3 sales of the around 50 analysts that cover this stock. The price target for the consensus amongst them is around $12.50. And the interesting thing is we're just talking about Chipotle having about a 7% move on average. This stock has over a 20% move on average around earnings. So while 12.5 is about 20% away, it absolutely could be there as soon as tomorrow after these earnings.
All right. This one has a lot of earnings volatility, Rick, famously. In fact, that's probably what this business now is actually most known for, is like its stock volatility. Here we go. Gap down last time, gap up the time before, gap down the previous one. It's like, this is still a super fun stock to trade.
Oh, it's a really interesting chart just from an analysis perspective here, because the first thing I notice is that we really just cannot really push above this repeated ceiling at our blue line here, near like 1730, around that area, just constantly being rejected every time we get close here. Heavy volume at these upper levels too, so a lot of people were probably pretty disappointed when we got down here. Just kind of churned sideways for a while. Give giving us our volume profile point of control, the area of heaviest trading. I kind of shaded the general zone, like this is the high volume area with you know, and that happens to match up with kind of the middle of that range, really. So this is an important area for us to remember here because we're coming up to it again right now. We kind of keep topping out around the same point here. We have had a nice rally. We made a higher low after hitting our 52-week low at 829. RSI is improving. We are trending upward here and above the 50 midline here. We also crossed above our 21 EMA, but now we have to take out the highs and our orange 63-day EMA, the orange line 63 EMA, 1079, volume profile point of control roughly matches up with the highs, 1115, and then the next stop here, 1270. High point, low point, and that's also the gap to fill now here. So that's the next area to keep your eye on to the upside.
Boy, pretty wild chart. It never is encouraging to have resistance right ahead for snap earnings. I mean, not reliably, but notoriously volatile. Kind of makes it difficult, I would think, for them to blast higher, unless you really have strong feelings about having to close gaps. But I mean, to Alex's point, still, as much as I kind of like it's like non-linear TV, but they take TV shows and they like break them up on Snap. Whereas like, just people don't really like to watch that anymore. So I'm definitely like an outlier there. Whereas to Alex's point, like people are, you know, TikTok has taken away all their, viewership. I feel like. All right, last one, Corvo. I got no axe to grind on Corvo. What's up, Alex?
Possibly the numbers to hit kind of where they guided. That's sort of the assumption by analysts at the moment. There's going to be potentially strength from iPhone, but it's seasonally weak for Android devices right now. Mixed, kind of broad-based demand as well when you look at kind of the weakness that they've seen in sort of their industrial and auto segments, but then there's strength in defense, aerospace, and Wi-Fi. So it's a situation where it seems that the biggest kind of change variable right now is going to be iPhone demand. So as we look ahead, especially as we hear from Apple, they're going to be in focus, Corvo will, because any type of optimism they have for the quarter might be seen for optimism for Apple. When you look at the actual numbers, expected to decline revenue year over year by about 7%, and you'll see shrinking earnings by about 22%. So again, not the strongest of times for the company. Average price change is about 6% around earnings to keep in mind, so it's actually the least volatile of the group. Analysts are pretty mixed, kind of in a holding pattern. The majority of them, 60% in the hold camp. About a third of them, a little bit less than that, let's call it 30% in the buy camp, and then the balance in sales. So Oliver, mixed holding pattern. We'll see what they have to say for guide. A lot of exposure to the iPhone.
Absolutely. So I guess that would be the only thing that I'd have to add to is I still remain dubious on the notion of the iPhone refresh cycle. Boy, it looks like the stock is kind of poised to pop, though, Rick. I gotta say, it looks like it's got pretty well-formed support at $100 even.
Yeah, maybe. We'll see. I mean, my headline here would
tell
be
me.
downward price action, descending triangle forming. You know, here we have this horizontal support or downward trend line, slipping below volume node, bearish move on bearish RSI.
All right, so it's kind of losing some momentum.
Yeah, I mean, kind of, once again, not uncommon for momentum to wane as you head into earnings. The point we're at right now is kind of this like pivot area, though. You can see we have this range right here that gives us some boundaries to watch to the downside, like 95.30 would be the lower edge. But we're below all our moving averages. We're kind of breaking. We're at the low end of this range with the upside being 107.20. That's the area to beat. Earnings could change everything, though, very quickly here. If there was no earnings, it would be a much more bearish read, I think. But, you know, big question mark.
Well, it's interesting because if you clear that real quick, the Apple chart basically is the opposite. The Apple chart is going like this right now with like an ascending, or rather, sorry, no, it's actually like Apple chart is like this right now. Sorry. So it's kind of inverted.
I knew what you meant. Yeah.
Yeah, right. Yeah. So this has got like a descending triangle kind of, and the other one's got ascending triangle. So there's some tension there between the two for sure.
Yeah, I mean, you know, descending triangle, typically bearish, like the name says. I mean, this would be the support area to watch if we get a break to the downside around 95.30.
All right. If Corvo breaks down, then Apple might, need to be revisited a little bit here. Okay. Thanks. Good perspective, Rick and Alex. Appreciate that, guys. Come up. We got a little market meetup discussion. Stocks firming up across the board.
Calibrate your market knowledge.
And shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Some strength in stocks. Diane King Hall joins us from New York, senior markets correspondent. Mr. Dan Grant, senior specialist of retail trading, here with me in studio. Stocks trying to firm up a little bit. It's mostly big tech, though, Diane, but that's also kind of the most important thing this week. So I guess a good session here.
It is. I mean, where we are right now seems to be par for the course. We knew this was a week that macro wouldn't matter as much, and we've got kind of a tug of war in that. In that area. I mean, you had jolts coming in weaker than expected, but consumer confidence stronger than expected. The amount of consumers expecting a recession over the next 12 months has fallen to the lowest level since 2022, where you had so many, whether it was Main Street or Wall Street, worried about that happening. But that seems to be kind of a rear view question right now, and it's really all about micro. And what does big tech tell us about the state of spending in that space? AI spending, we know that, we're looking out for Alphabet's numbers after the bell today. That won't be the big kickoff of this big week, the biggest week of earnings season of this cycle. So a lot of attention is going to be paid. So what does that look like? Because you recall in the last quarter, the CEO said they were spending more on, there was going to be a bigger CapEx spend. They couldn't afford not to spend on Gen AI, especially when you think about how ChatGPT has also been coming for the search business as well. So that's something that we're going to want to pay attention to. What also does the search business look like coming into that report?
Yeah.
Okay. The potential for tech to really take the lead here seems like still a story of the hour, Dan. I mean, we got some interesting data today.
And where's the path of least resistance in the market? Yes. And we had the consumers are very confident in saying there's not going to be a recession.
How about that report?
108.7.
Pretty wild stuff.
It seems like a blowout number to me.
Yeah.
It's not a made up number, but it's a survey, and that's what we seem to be trading off of. Bond market's still subject here, still very vulnerable right here. After a massive sell-off in bond prices last week and continues, we'll have to see where that ends. I'm not sure. Are we going to uninvert the 3-month to the 10-year?
Tell me what you make of the reaction here so far this morning, Dan, because when we got the JOLTS number and the confidence at the same time, bonds caught a pretty nice bid, and now been given some of it back, but not all of it, because JOLTS did come in light.
Right, still showing low end of the range in bond prices, and I don't know that we're going to get any kind of new data on that front, whether we're going to get the bond market to recover. I don't think it is.
Right.
I think it's still vulnerable.
Well, I think it kind of the confidence mixes pretty well with the stock story, Diane, because to your point about big tech, I mean, even though there's a few that are lagging, of course, and there's some separation within the Mag 7, that group, just measured by the MAGS ETF, is close to the all-time high. So I'd be shocked if confidence weren't going up.
Oh, there's my keys.
Yeah, it's true. And I think the other factor that is at hand, and we expected this for we're literally a week away from the election, so that's certainly triggering some of the moves that we've been seeing in the bond market from last week through this week, and the expectation for who will be the next president. And, although the one thing that we haven't seen yet in terms of this last week heading into the election is there was the expectation of a possible downdraft this week because of the previous two elections, 2016, 2020. We saw the weeks before the election that the market took a leg down, although historically, and obviously history does not always repeat itself, the market has come back no matter who won the election.
Okay, that's true. That's a good point. I do wonder if some of these sentiment confidence figures are politically motivated to some extent. We did see the sentiment showed some political skew in it last week, Dan.
Yeah, I don't want to touch that, obviously, but it very well could be showing that there's going to be a change.
Well, because they literally will have respondents, say what party they're affiliated with, and you can see the confidence go up accordingly.
Yeah, and whether the Fed cuts between now and the end of the year is still in play, right? I mean, as these consumer confidence, and we're going to get some PCE on Thursday and unemployment on Friday, we'll have confirmation of what the Fed is actually going to do next week, 2 weeks, right?
100% for it's after the election, day after.
Day after, okay, so next week, so 1 week away.
You think that's 100% locked in?
I think it is,
25?
yes. I think it is. According to the Fed funds, it's not anymore. It was if you talked to me this time last week.
Boy, well, by the logic of what happened since the 50 bips, and the economic data have only improved, then yields will probably go bananas if they cut again.
I think so, and I think that's what they want, which would give us a positive yield curve as opposed to this negative yield curve we've had.
All right, okay. All right, fun stuff. Thanks, guys. Appreciate it, Diane. Thanks for the help all morning. Thanks, Dan Grant. Good stuff. Good catch up here as always. Trading 360 from New York is up next. Hope Pelolides coming to you. I'll see you this afternoon at 2 p.m. Central Time. This election season, stay out of the muck and the mudslinging. Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself, find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
She doesn't have a heart.
It is potentially a human superpower.
Trading is a human superpower.
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's
No.
The old guard is saying, away, off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean?
Have you set yourself up correctly? Ah! No. China had a big breakout this morning and pulled back. Nice 3 black crows. Right here on the SPY. I was gone when that happened. 3 white soldiers, 3 black crows. I would have jumped on that. Well, I voted for the Reagan landslide, but I didn't see that coming. I was too young. But now our country's been so dummied down. I don't know what to expect this election. I usually can predict them pretty easily, but after the last one, you just can't trust it anymore. Just can't do it. YouTubers. Moonrock. Bobby's here.
Next year. So a tone of more optimism, I think, on the conference call softened the blow of that disappointing international story, and it was enough to turn the stock around.
Yeah.
All right, thank you for that. Alex Coffey, good to see you, senior equities contributor here with a look at McDonald's at $299.92. Let's get some insights of the news shaping the markets. For that, we welcome in Kevin Mons with us, President, Chief Investment Officer at Hemi and Walsh Asset Management. Some of your thoughts on the market. I was noting the moves we've seen in the NASDAQ and tech in particular, up 8 days in a row, and will we make it 9? Some of your thoughts on the action we've been seeing.
Yeah, Nicole, you have to question how much longer this bull market run can actually run. But from a historical perspective, there's actually a good outlook for investors. Consider this. We did the research at Smart Trust, and we went back to the 1940s. And what we
Woo! I was looking at that this morning.
Markets historically over that time frame, not counting the current one we're in. And what we found is that the average length of those bull markets is 5.3 years, with an average cumulative return of over 177%. This current bull market run, we're about 2 years into it right now, with the cumulative return of just over 64%. Now, while of course this time could be different and past performance, as you know, Nicole, is not indicative of future results, just applying that historical average means we might have a couple more years to run, and we might have about 100% more worth of potential gains. Now, that's over the longer term. Over the shorter term, I see more potential bouts of volatility, given all of the uncertainties around next week's election, the geopolitical uncertainties overseas, what the Federal Reserve will or won't do, and also the lofty valuations of the stock market in general.
When I look at the 10-year at 4.3%, and people are really talking about
SMCI's up.
Summer, July, where are yields headed? And does 4.3% today, what's your interpretation? What is the market really saying?
The 582s are at 180.
Is that we no longer
I called him out this morning on SPY.
Yielding more than the 2-year, and we weren't in that type of a situation prior to the past couple of months for the prior year and a half. So that's a good thing, as inverted yield curves generally are a leading indicator of recession. However, I think what the bond market is now telling us is that the Federal Reserve can't be as aggressive as they may want to be with respect to cutting interest rates. In fact, I think they take a much more gradual pace of accommodations going forward. As we know from their last meeting, they were forecasting 2 more rate cuts this year in their final 2 meetings of 25 basis points each, and then another 100 basis points in cuts next year. I think they adopt a quarterly pace of 25 basis points in rate cuts going forward, and that though is what the bond market is telling us right now. Time will tell, of course, and we don't want to try and play the Fed guessing game because they are data dependent. The data changes and their outlook changes, but I think we have at least 1 more rate cut of 25 basis points this year, which would bring us to a total of 75 basis points in rate cuts in 2024, which was exactly where they were, Nicole, at the beginning of this year when they were forecasting 75 basis points in rate cuts in 2024.
Raymond James saying the bull market will continue. Meanwhile, Goldman Sachs has come out with a 3% gain only, over the next decade. So a lot more cautionary tone there. What say you about where this market could be headed going forward? Do you see new highs this year?
I think we could get a Santa Claus rally if we have some of the uncertainty behind us, hopefully with respect to the presidential election. Once we know what the Federal Reserve does after that November and December meetings that they have in place, that could give investors the certainty to come back into the market or take more money off the sidelines. But beyond this, Nicole, the next decade is going to be very different than the last.
How's that?
Investors can't just invest in the areas that provided all the growth to the markets, particularly over the last 2 years with respect to the Mag 7, and expect that story to resonate over the course of the next decade. And I think that's what Goldman Sachs forecast is getting at. We're going to have to be a lot more selective to find pockets of opportunities going forward. Fortunately, there are some areas related to the overall AI revolution, and they might be in areas that many investors don't expect. Areas such as utilities, remembering that these data centers require tremendous amounts of energy. And as it stands
Meta I
now,
talked about yesterday's up $9.
Manufacture their own energy, so they have
Adobe.
to turn to the utilities of the states that they operate within, whether it's electricity, whether it's natural gas, or now, as we're finding out, nuclear power.
Woo! The nukes.
That has become most popular. Something we really weren't talking about over the
Brandy,
last
the
couple of years,
nukes.
and now it's certainly front and center. Amazon's on your radar. Why is that?
I think Amazon is a play from 2 different facets. One, they are the hub of the the e-commerce ecosystem. They are forecasted to report earnings this Thursday, and I think we're looking at a consensus estimate of around $1.14 per share, which would represent a 34% year-over-year increase. The forecast for this holiday shopping season is good, but not great. And if there is a more frugal consumer, generally that's to the benefit of companies like Amazon as investors go online to shop for the better deals. But they're also a play into the AI revolution, as they announced recently their partnership with Dominion Energy for SMRs, these small modular reactors for nuclear, to power their own generative AI ambitions. So I think Amazon represents a play in AI as well as e-commerce, and that's a pretty impactful duality.
Excuse me. You also have DTE and LMT. Tell me a little bit about that.
So DTE is a utility play. They have a yield right now of about 3.2%, trading with an attractive PE of around 17. They also happen to own the Fermi 2 nuclear power plant in Michigan. So not only do they supply electricity and natural gas, but they also have capabilities in the nuclear realm. I think utilities provide an excellent means to provide some downside protection, good income potential, and now a backdoor play into the AI revolution. LMT, Lockheed Martin, the single largest defense contractor in the world. We know as a country we need to replenish, upgrade, and modernize our military warfare capabilities. The F-35 fighter jet from Lockheed Martin is just one example in that area. And they also pay an attractive dividend yield of 2.3% with a reasonable valuation with a PE less than 20. That's hard to find in the aerospace and defense sector right now. So Amazon, DTE Energy, and Lockheed Martin, I think, are 3 good areas for investors to consider.
Yeah, understood. We have a strong dollar, 104. We've had gold at highs. Bitcoin surged to some new recent highs here. So what are some of your thoughts about any of these things that have been pressing on the upper end?
everything's working right now. If you look at the outlook going forward as well, if in fact the Fed does continue to cut interest rates, if yields, at least on the short end, continue to come down, if inflation continues to moderate, and if in fact economic growth can start to stabilize over the next 2 years, which that is a question mark right now, that provides tailwinds for both stocks, bonds, and commodities. But if any one of those outlooks does change, all of that comes into question again. So I just think that speaks, Nicole, to the need for investors to diversify, to blend together different types of asset classes with different correlations to help manage through these periods of uncertainty, but also to stay invested in the market, because we all know that trying to time the market is an exercise in futility. So stay true to your risk tolerance, stay invested, diversify across many different types of asset classes, and try and stay disciplined to meet your longer-term financial goals and objectives, as opposed to reacting to shorter-term economic and market news.
All right, Kevin Mon, thank you so much. Great to see you. Henny and
You
Wealth
as well,
Asset
Nicole.
Management. Thank you, Kevin. Yeah, good to see you. Okay, Trading 360 up next with the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the technicals. Jessica Inskip from stockbrokers.com will take us through the trades. For Meta Platforms, Amazon, and IBM, Trading 360, Schwab Network. We'll be right back.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts here to take us through the trades. Jessica Inskip, Director of Investor Research, stockbrokers.com. Good to see you both. Jessica, how are you feeling about the market? Yesterday, we saw the Dow higher, so snapped a 5-day losing streak. The NASDAQ is up 8 days in a row, could make it 9 today. Some of your thoughts of the action, and do you see more highs ahead?
Yeah, good question.
Absolutely wonderful to see you again, as always, Nicole. I think it really boils down to removing some uncertainty from the market. That first component, of course, is the Magnificent Seven earnings that we have Google kicking off. Where are the hyperscalers spending money? Where does that translate over to? Last earnings season, we saw a spike in NVIDIA. Then we have this emergence of data centers and that PE ratio risk being energy. So I think that uncertainty being removed as we kick off Google. And then, of course, we have the election. So it's really all about uncertainty. Once that's removed, we are really primed, in my opinion, for a rally after that.
Okay, let's see and talk about your first name, and
She
that
said
is
it.
Meta. We'll hear from Meta tomorrow after the bell, along with Microsoft. Some of your thoughts on where Meta could be headed and why?
Yeah, absolutely. And so much of earnings kicking off this week. So it's going to be an interesting ride. But I'm thinking about more of the emerging risks and headwinds that are coming with AI. Talk about that quite often. Then one component we've noticed within social media is misinformation, perhaps increased scrutiny from a regulatory perspective. And so that emerging risk of misinformation is heightened with generative AI. There's deep fakes. It makes it feel so real, especially to even a certain generation. So Meta is taking components to have its own search engine, which I think could be something that could help lead or take away that increased regulatory scrutiny or that potential misuse that we could see with generative AI by having their own search engine. Certainly there's going to be risk from Google, so I want to hear what they have to say this evening or posting from that conference call. However, I think this is an emerging trend that I want to pay attention to, especially with that headline where there was a partnership with Reuters. Scraping for good information to take out the bad information is something that we need to see as AI keeps on, that revolution keeps going, Nicole.
Okay, let's see what Rick Ducat has to say about the charts, please. Rick.
You know, I agree with much of what Jessica said. The old saying, you know, the lie can get around the world before the truth can get its boots on. You know, it's such a hard thing to deal with here. And when we look at the chart, though, we can see that, you know, it's important to not fall for misinformation with technical indicators as well, too. Because you can see, by one measure, price is in a short-term downward sloping channel between our two blue lines with the broader shape and upward sloping channel here. We're coming very close to breaking out to the upside beyond our blue channel, but the RSI recently held the line at our green sloping upward trend line and our 50 midline and is pushing above our red downward trend line. So we're invalidating the downtrend in the RSI. But price has not broken out yet. Price is the more important one. Price is more of like the truth, you know, to kind of go with our analogy earlier. The RSI, you know, it could be good, it could be a clue, but you want to wait for the close, especially make sure this this crossover doesn't evaporate. And it seems though like we are indeed primed for, you know, some upside activity here. Kind of looks like a bull flag type pattern here after a big gap up, a little bit of consolidation heading into earnings. The obvious upside point to watch around 603. That's the high point there. So that would be a spot many traders would probably be considering. To the downside, green line 561. We hit the bottom there recently.
Yeah, and we think about how these names will actually monetize AI too. I'm really looking forward to hearing from these names this week, hear what they have to say about that going forward as well. Any final thoughts here on Meta?
Point, Nicole, and my thinking is targeting ads, especially as we have more data on the consumer and we looking for increased ad spend even for something like Meta. So I think that's a wonderful lens to put on it, absolutely.
Yeah. All right, next up, Amazon. We talked briefly about Amazon a short time ago. Are you feeling more bullish on this name?
Yeah, it's still same sentiment with Amazon. They're bullish, or really, I'm bullish because of the AI narrative. There's exposure to that accelerating AI-driven cloud demand. That's the top reason that investors like to own Amazon. And then the concern, of course, is the retail demand front, the different revenue streams that Amazon has, regardless of the biggest behemoth that it is. However, when last time we spoke about Amazon, it was about this TikTok shop partnership on that e-commerce side. And if you've ever been on TikTok and hit that shop button, it's really this new integration of the way that retail is going to go to this next view, I think, utilizing all of this AI coming together. So I think that concern would be alleviated. But again, I want to hear it from the conference call. That's going to be really important to me. Forward-looking guidance is going to be really important to me. However, they've got a really good role in generative AI. The big headwind, aside from that we've talked about, another one is just really faster iterations, faster chips. And so if AWS is offering those AI machine learning models that make custom AI chips that are going to enhance performance and reduce cost, and then offer that on an enterprise level, that's certainly a positive exposure to that accelerated AI-driven reason to own Amazon. So I think that'd be offset with the concern with retail demand, but I want to hear more about the retail demand. So the same sentiment before, something that if you don't own it, perhaps wait till after earnings until adding it to your portfolio.
Yeah, earnings on Thursday. Amazon will wait to hear more from the company. It's at 189. Rick, what do you say about the charts?
I guess the headline for this one would be kind of mostly range bound, but with some really big fake outs here, because you can see we have our light green line here and our dark red line here. That's kind of the boundaries for where price typically has stayed within here. Most recently, that's been a very persistent ceiling. Price has really struggled to break above this area near like 190 or so. Then we've got our light green line. Frequent stopping point for price as well. Support area, that's also where volume really starts to drop off according to our volume profile study here. Also, you can see the same thing happening on the top. But, you know, when you look at that range, though, we've had these huge swings to the upside and the downside as well. Even this one, this was, you know, a notable downward move that probably felt pretty scary at those low points there. So, you know, a lot of caveats in this one. But the main theme of the chart recently, we broke through this trend line that began down here. Our sharper blue trend line has given way to kind of this triangular shape between our two white lines. One trend line extending downward across the highs, one going up across these lows. We're above our moving averages. We're above the volume profile point of control. RSI is above 50, but we are kind of stuck at resistance once again.
Not again.
You know, I would be surprised if we got any big fireworks before earnings, but you know, those would be the points to watch. 190 to the upside, then 195 up here. That's another set of highs. To the downside, we've got several technical indicators, our moving averages, but this green line here, a high point, then a low point. If we start getting below like 182, that would be noteworthy.
Yeah. All right. And look, I mean, I'll tell you, Wall Street also, a lot of scrutiny, a lot of names this week have been kicking it off with down arrows. We saw Crocs, we saw PayPal down arrow, DR Horton, SoFi, just to name a few. You know, it's just not so easy to have a double beat and knock it out of the park.
No.
So there could be some volatility this week on all the names. Any final thought here on Amazon? Well, then we'll get to IBM.
Yeah, I absolutely agree with you, Nicole. I think it's an interesting earnings season, and I'm paying more attention to forward-looking guidance as in that broadening story. You're right, it's a little more difficult this quarter, but that puts more of a lens on the Magnificent Seven, which has been carrying the market last year.
Do you like it, my dear?
The theme is the other 493 this year.
Yeah. All right, next up we have IBM, which year to date is up 30%, 1 year up almost 50%. It has been a great name, which hit a high recently, but has since pulled back. Is there opportunity, or are you nervous? Jessica?
Absolutely. IBM is something we talked about, I feel like so long ago, Nicole, but it's this looking to translate generative AI from those hyperscalers that are creating it into enterprise solutions, and that theme until we see revenue coming back from productivity from those other type of companies, like I'm thinking financials even. Those type of companies have so much regulation and scrutiny, and even healthcare and sensitive customer data. So a potential headwind or a real headwind with implementing generative AI is safeguarding your data. Software that is going to allow you to have data privacy, that's going to allow you to have security, that's going to be within your compliance guardrails. And we talked about Watson emerging all of a sudden. I'm even seeing commercials all the time now. And that, it to me, speaks volumes, because this is taking a headwind that we're seeing within those type of regulatory scrutiny verticals and making it a tailwind. And IBM continues to deliver that. On the software side, it's broad-based growth. It's
There's another one that doesn't make sense.
Total revenue, so that piece is growing. However, from their earnings perspective,
Pfizer.
like you said, it was mixed, and that weakness is really on the consulting and infrastructure. So perhaps that will move over, but the software revenue growth was driven by transaction processing, hybrid platform solutions, and both of those were up 9 and 10% year over year, respectively. So I'm still bullish on that aspect, and I think it will overcome the other.
Yeah, okay. Let's see. So she is feeling bullish, at least on one aspect there. Let's look at IBM, which has had a nice run this year, but has pulled back some. Rick?
Indeed, for sure. A nice run here. We bottomed out a couple times right near our purple 252-day exponential moving average back in the spring months around like April or so. Here we can see we had some big volume at these lower levels here. We had our ceiling around this area and then a big push to the upside. You know, from this low point over here, like 160 to 210, like 30% or so to the upside here. But we're kind of slipping recently. You can see we had our white channel here going upward, ending with our yearly highs and actually some good volume at these elevated levels anyway. But earnings, was a pretty good sized breakdown here. We kind of slipped below our low point here, and now we are pretty close to that other low point here at our green line, 210 and 215, those levels respectively. We can see we're actually slipping below our orange 63-day EMA as well here. RSI falling off a cliff, but above the oversold area, but a more bearish lean right now. So I wonder too as well if this blue longer-term trend line will come back into play here. It was looking pretty far away, but we're getting fairly close to it right now. So 210 to the downside, 215 to the upside, and then ultimately right here as well, 224, a high point, also where our 21-day EMA is. Those would be the marks to beat for further upside.
Okay, thank you, Rick Ducat. Final word, Jessica Inskip.
Absolutely. The market does not like uncertainty. So as soon as we get that uncertainty removed, which is Mag 7 earnings and, of course, the election, a lot to pay attention to.
Okay, thank you both. Jessica Inskip of stockbrokers.com and our own Rick Ducat there on the charts, looking at the technicals. Thank you both for the big three today.
Very good job.
Next, we're going to spotlight Ford. Earnings came in strong, but guidance disappointed. Shares are down in reaction. Let's get a good glimpse at the automakers, EV makers, CFRA's Garrett Nelson is next on Trading 360.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
We're done with the commercials.
Where you get market news. It's Market on Close. Join me, Oliver Rennick.
Oliver.
Earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free. Only on the Schwab Network.
Oliver. Not another one, please.
Welcome back to Trading 360. I'm Nicole Penalidis, live on the floor of the New York Stock Exchange. We want to spotlight Ford. The company came out with its earnings yesterday afternoon, and Garrett Nelson, Vice President, Senior Equity Analyst at CFRA Research, is with us. We're going to be taking a look at Ford and having this discussion. Right now, we're seeing it down about 9%, sitting at $10.36 a share. You know, it's had some pros and cons. It did beat the estimates, but has high inventory, still seeing some pressures from EVs and some other costs, especially warranty, that has held back the earnings power. We have a lot to discuss with Garrett Nelson, and we'll be right back.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Commercials again. We don't appreciate it.
Knock, knock. Number one broker here for the
Schwab.
number one hit maker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Schwab Network's like no other financial media you've watched because it's all markets, all the time. It's 100% finance. We look at everything as traders and investors. And everything we say, everything we do is through that lens. There's no ulterior motive, and there's no subjectivity. There's no random guesswork about what we think. We are following the numbers all the time, relentlessly. We have the best CEO interviews, hands down. They're longer, more thorough, and tailored specifically to our audience. We never take our eye off the ball, which means we're always ahead of our peers.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim. With robust charting and analysis tools, nearly endless customization, and up-to-the-minute news and insights. Trade brilliantly with Schwab.
I just now noticed something about that chart.
Welcome back to Trading 360, live on the floor of the New York Stock Exchange. We're spotlighting Ford here after the quarterly reports. Joining me now, Garrett Nelson, Vice President, Senior Equity Analyst at CFRA Research. Good to see you. I mean, there's certainly a feeling when I was reading through some of the notes, a global price war, the battle for all of these auto companies that they're facing. Also, overcapacity, another issue. You know, are these Ford issues or automaker issues in general?
Yeah, thanks for having me. So we think those are mainly well, it's a global issue, but it's especially bad with the U.S. automakers right now. You look at Ford, Stellantis, GM, really inventories are well above average across the board. And so automakers and dealers are having to resort to rising incentive in order to move vehicles. Of course, fundamentals have been very difficult for the past several quarters in this rising interest rate environment. And interest rates are still at a level where it's acting as a major headwind for Ford and others still.
I see. So what do you make of Ford in particular, which is trading down 9% today? Obviously a big move. What within the report merits a move like this, if in your mind that's correct?
So it's mainly being driven by the disappointing guidance. So they said their full year adjusted EBIT would come in at the low end of the prior guidance range of 10 to 12 billion. So they're guiding for about 10 billion now. And that's despite a better than expected quarter in Q3, in which their earnings came in about 2 cents above consensus when looking at the adjusted EPS line. So, the market's forward looking, and so is really disappointed, by that guidance. And it basically implies that Ford management has a more bearish outlook for the fourth quarter than they did previously. So I think that's why the stock's selling off.
Yeah, you currently have hold, price target 11, is that correct?
That's right. Yeah, we lowered it $1 to 11. And, if I could say one thing, I think what really stands out here is, Ford is sitting on about $28 billion of cash when you look at the automotive segment at the end of September. The current market cap of the company is only about 41 billion. So that's a massive amount of cash relative to the market cap of the company. What we think they should do is exactly what GM did starting last November and announce a massive share repurchase program. I think that would do wonders for the share price. If you look at Ford, their adjusted earnings through the first 3 quarters of this year are down 17% year over year. Compare that to their arch rival GM, whose EPS was up 35%. So you can imagine how that's going over in Detroit right now, given the rivalry between those two companies. So we think Ford should really resort to buybacks here.
And EVs still not a winner for the company at all.
Ford is taking more of a balanced approach, which we applaud them. We think they're taking the right approach, in this new environment of EVs and hybrids. So they're taking a more balanced approach. The hybrid market has actually been growing faster than the pure battery EV market. And so we like the fact that Ford has been investing in hybrids. They've had some success on the sales side, especially with hybrids such as the F-150 and the Maverick pickups, as opposed to GM, which hasn't invested anything in hybrids basically over the last 4 years. So we do think Ford is taking the right approach, but it's been a very difficult fundamental backdrop. You see that with the fact that their revenue was only up 5% year over year during the quarter, and also the fact they're really struggling on the margin side from the new UAW labor deal that went into effect late last year.
Does the EV makers here at home, right? Because we know you just talked about Ford making their EVs and GM and Stellantis. Do they even stand a chance to get in the EV game when the pricing pressures are on? You have all of these Chinese companies pumping everything out. Is there room for all these companies to make? I mean, we know Tesla has been a leader. We know BYD has been a leader. And we've heard exciting things about Rivian and this and that. But is there room really for Ford and Stellantis and GM and all these other names, particularly our names here at home? Can they get in this EV game and make money on it?
Well, it's going to be very tough to compete with Tesla, but we do think there is a spot for these companies just because they generate so much of their earnings from the North American market. And so it comes down to the protections in place, the tariffs, to protect these domestic manufacturers in the North American market.
My next trade is coming up. I am drinking out of a Vixie cup. One, two, three. Just hit a triple top. 1, 2, 3. Just hit a triple top. We will find out shortly what we were going to do. Are we going to jigsaw around or are we going to break out? One, two, three is a triple top. 1, 2, 3 is a triple top. I'll meet you at the fork of the road. It'll be at the top of the pattern. It's a triple top. Triple top. Triple top. I bet you we're coming back to the 200 EMA on the 1 minute time frame. Oh yeah. Let's see what the option is on the 1 minute. This is the SPY. Probably I want to watch this paper trade. This one. SPY. The 30th. We go straight to the 580s. At 150. Whoa, big mistake. So I'm watching October the 13th, the year of 2024, looking at a put. See if we can knock it out the door. We just hit a 1, 2, 3 with an inverted hammer layered down. Here comes old Johnny at Caverns Town. Johnny says, pass me a beer as I watch this stock fly. I'm getting ready to buy a put and I hope this stock dies. looking at the 580. That was the old number 9. Right now we're bullish because we're sitting above that, what do you call it? Line, yeah. So he's going to take a break and he's going to go to his mouse. He's going to draw a trend line of resistance to break. It looks to me like we want to break it. Okay, right there. Not yet. So we got a 1, 2, 3, yeah. There's the other, there's your flag. And we just broke it. We just broke the one. We just broke the 1, 2, 3. We just broke the 1, 2, 3. Now we're running up on resistance lines. There ain't nobody out there that'll sing to you and talk stocks at the same time. So let's give Washboardjim a hand. Applause, please. All I hear is crickets. Woo! Hey, did you see that cuckoo over there on, he calls himself James Howard? GME popping again? Somebody here, Mannequin has a 582 bullseye. Calm Down Jim. I could do that all day.
The conference said that consumers' assessments of the current business conditions have turned positive, and that's reflected in the numbers we see here. As you mentioned, it's a 9-month high. It's the biggest monthly gain we've seen in 3.5 years, reflecting some of the positive macro conditions that are occurring. We've seen optimism around the stock market, rate cuts from the Fed, some optimism around, cautious optimism around job availability, and reduced recession fears, all that are fueling this as we close out the year.
Oh.
So hopefully that optimism will carry through, especially as we come through the final days of the election season, to just create some more certainty as we look beyond.
So it's interesting how this is the biggest gain in 3.5 years. We're at 9-month highs. The jolts came in, fewer job, and those are in fact at a 3.5-year low.
We don't care.
It feels like we get so many mixed numbers, Jordan. What's your takeaway on the confidence of the consumer?
Great point, and consumer confidence is one of our 3 key measures that we incorporate.
Oh, really?
The overall
You're just saying that because Nicole's there.
US equity market risk environment. Our measure internally for consumer confidence actually turned bearish for U.S. equity risk back in late April. And, this morning's print, while it certainly feels strong and has a lot of positive anecdotal information contained in it.
You see what I see?
Looking at these numbers over the years, our experience
I see the 200
we should have
getting
some
hit
caution
here.
in putting.
Hey, Mr. Jordan, how dare you? Before you rattle on anymore, let's get this score over with. The 200 EMA on the 1 minute. If that doesn't hold, then it'll be the 200 SMA. What do you think about that, Mrs. Lai? Oh, Jimmy, you're right again. It just comes natural to you. Look at that. One penny off. Make that 2 cents. Yep, 2 pennies. And that could have been an inaccurate line drawn, illustrated. And you're right, Mrs. Yang.
Jordan, how do we digest these numbers and how that could impact investing trends?
Yeah, Jordan.
I think to some of the points that Amanda just made, we want to always look at this, evolving landscape as part of a bigger picture, right? So, we tend to look at the environment for equity risk in, through the lens of 3 measures, consumer confidence being one of them. Another measure that we tend to look at is the fundamental economic strength.
Oh, really?
We measure that through economically sensitive asset relationships.
I didn't think about
And so
that.
you can think of that like a tug of war between assets that tend to benefit from underlying fundamental economic strength, cyclical expansion, and we look at those, the performance of those
I got a
assets
problem.
relative to assets that are
I'll get that fixed real fast.
more risk averse in nature or tend to get a bid.
Thought I just said that
when you
out.
see underlying concerns about much of what was covered in the consumer confidence report this morning. That measure for us turned bearish as well back in late July. And so, relative to some of the older economy industries and spaces that we talk about, if you think about assets that get a bid from that type of space, like copper and lumber, things that go into auto purchases, things that go into appliances, home sales, furniture, etc. We see that as a bearish underlying trend as well. Our third measure is price direction. That is clearly still a bullish indicator for the market.
Yeah. All right. And look, we're going to hear from a lot of the retailers, right? We're getting a lot of the tech names, some of the fast food names, then there'll be a lot of the retailers. Amanda, we always talk with you about a lot of those names. So we'll have a lot to discuss in the weeks ahead. Amanda Lai and Jordan Rizzuto, thank you both very much. Good to see you. Thank you both all them and all of you for joining me here on Trading 360. I'm Nicole Petalides, live at the New York Stock Exchange every day, 11 a.m. and 2 p.m. here on Schwab Network. You can get the Schwab Network app. It's available in the Apple App Store for free. Tune in 24/7, schwabnetwork.com. Fast Market is next.
This election season, stay out of the muck and the mudsling with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
That's a good question.
Being lucky
drug
in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
That's right.
The best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
You're getting ready to say is as if you don't have a heart.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price could go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in
Calm
any
down,
sector.
Larry.
There's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Here on the Schwab Network. I'm Tom White. We've got a great lineup for you today, including market discussions, and then we'll have option strategies. In big tech, we're going to lead off with Alphabet, which is up about 20% so far this year into their earnings report after the close, and AMD, which is consolidated recently, into their quarterly report after the close. And like Foliover, it's going to break down consumer sentiment data. And Visa, credit card company stock, is just below all-time highs into their earnings report. Now, let's take a look at the major indices, which continue to hover around the flat line. The S&P 500 up just over 0.1%. Dow Industrials off over 75 points. NASDAQ 100 up 0.6% as big cap tech leads once again to the upside, and small caps down about 0.5% on the day. To help me break down the market action, let's bring in my co-host, and that's going to be Kevin Hinks. Kevin, give me your take here. It seems like the calm before the storm ahead of more data and then also a lot of earnings.
here's how you sum up what's going on with today's S&P 500. Right now, 8 of the sectors are down on the day. One is basically unchanged, and that's industrials is up 0.1%. But the S&P is up 0.2% because information technology and communication services are higher.
Right.
And that is the dominant section of the S&P. So 8 sectors down, 1 unchanged, and 2 up, and the S&P is up on the day.
Yeah, and if
that sums up the S&P 500.
Yeah, every stock name. Apple is relatively flat. Tesla's slightly red, but then all the other Mag 7s are in positive territory, leading us to the upside as far as tech goes. But if you take a look at that data, what changed at 9 a.m. Central Time, consumer confidence number. Yeah, Jolt's also coming in lighter, and they revised the previous months, August months, down lower. So the data causing some volatility here.
And here's the question. The consumer confidence number, I think that's a little more pure. That's just a good, strong number.
Right.
The Jolts, I wonder if it's stale, and I wonder if it's affected by, 2 hurricanes and 2 labor strikes.
Right.
I don't know if that's happening, but at some point this data is going to start getting a little wacky. And so it makes me discount it, but consumer confidence, really strong. Jolts, 7.44 million. I don't go to the third decimal, Tom, sorry.
I get it.
I don't go there.
That's minutia.
Two is enough for me.
Yeah.
Thank you.
Yeah.
Thank you for the third decimal point, but I don't need that. Thank you. But 7.44 million, it's a nice, it's a pretty good drop from last month. So, lowest level since early 2021, and layoffs have picked up in labor turnover. So, but that being said, I still think this is a dry powder day where, think about it. All the names that are going to come out with earnings over the next couple of days, and all of them, almost all, of the large cap debt will affect NVIDIA in some way.
Yeah.
NVIDIA, they'll all funnel through into NVIDIA. NVIDIA has a market maker move today.
Yeah.
Based on just today, AMD and Google Alphabet. But it'll be Meta, it'll be Amazon, it'll be Apple, it'll be all of them. Microsoft, of course, sorry.
Yeah, for sure.
What's that?
All lead to NVIDIA.
Yep, that's right, because they're giving NVIDIA all the money.
That's right.
All the capex spend.
We like when our customers do well.
Let's expand this conversation.
Did we blake it?
Kevin Green, senior markets contributor here on the network.
Question is, did we blake it? Everybody's got their eye on the Donald today. I had a liberal come up to me and say, "Have you been watching the Donald?" I said, "Yep." And that was when it was under 12. And today we are up there and around the $50 area. Woo! This is when history repeats itself. So the market thinks that Donald's going to win. But I don't think they understand how stupid our country is, how rigged we are. This nominee didn't even get nominated. That's what makes it so bizarre.
About both of them today. That's AMD and Google Alphabet, right? These are both names within, Google
Let's keep
Alphabet
right on AMD.
that actually the bar is pretty
double
low
top.
going in.
I agree completely. And you could say that about a lot of large cap tech. Remember, they underperformed the S&P in the third quarter. Remember that.
Yeah.
And if you look at NVIDIA, I wrote it down. NVIDIA on June 20th hit 140.76. Look where it is now. It was under that to start the day.
Yep.
So it's been flat
Correct.
this whole time. There's a lot of consolidation. Google Alphabet it was 190. They've sold that off. We've talked a couple times about the chart in AMD and NVIDIA going in different directions.
Right.
I mean, there's some low bars in this area of the U.S. economy. It's pretty incredible.
Yeah, Microsoft, $38 off of its all-time highs. Amazon's starting to consolidate below all-time highs.
Remember, they killed Amazon the last earnings play.
Yep, and that was based a lot on their CapEx.
On spending, yes.
On spending. KG, crude oil now down, was up over 1% earlier in the
That's
day,
interesting.
now down after that 6% fall yesterday. This kind of lends credence to, hey, consumers going to be, feeling good about oil prices coming down. But I did notice Atlanta Fed GDP now that was above 3.3% last week, now down under 3% with those expectations coming for Q3 GDP reading later this week.
Yeah, so we did see a little bit of a revision of the downside. I believe that came in at 2.8% for the Atlanta Fed GDP Now forecast here. So crude is seeing a little bit of a slide. This is actually after an Axios report that Israel's Netanyahu is actually looking at having discussions with some of the ministers in order to potentially come up with a settlement to end the war in Lebanon. So that's exactly the reason why we actually saw that sell-off in crude, kind of finding some support here at around $67. But we're going to see if this is going to be able to maintain. If you get more
In the war in Lebanon,
comes around when it comes to the geopolitical front, that's going to be a headwind for crude, as the global expansion story just hasn't really been there, and the China data set just really hasn't supported prices for now. But that's why we saw that fade. I don't know how much the consumer is actually going to feel at the pump, though, Tom. Actually, if you kind of look at the disparity between what the futures prices are doing compared to what we are seeing for retail gasoline, there hasn't really been a one-for-one or even a close correlation. Retail gasoline prices are still primarily in a downtrend, even though we saw that blip to the upside when it came to crude and even some of the gasoline futures. So I'm not sure how much it's going to be a tailwind for inflationary metrics like CPI or PPI in the coming weeks or months. I think that was more technical or mechanical in nature, the trading markets rather than the physical markets out there.
Yep. 65 level over the last 2 years is held pretty steady to the downside. Just above that now, around 67, as KG mentioned. But Kev, let's pivot over to earnings. McDonald's a little bit weaker, actually flat now.
It's up.
It's actually rallied back up.
Yeah.
Maybe some.
Look at where it traded pre-market.
Yeah.
I mean, it traded as low as 286 overnight.
And the impact of the E. coli did not come out in this earnings event, but we've had that massive pullback from all-time highs just ahead of that E. coli outbreak at this point. If you look at gaining share with lower-end customers, the $5 meal deals taking place and doing well, they extended that into December. Strong start to Q4, the CEO came out and said. So maybe some commentary on the conference call, riding the ship here, but 1.5% decrease in comparable same-store sales. That's not good. That's not positive, and most of it's international.
Yeah, I still think, though, McDonald's, it's unfortunate that this happened because McDonald's looked like it was kind of turning around and getting their ship going in the right direction.
Because of the $5 meal deals.
Yeah, exactly right. And then this kind of derailed it. So I think that's why, though the stock is still not back up, but it's up on the day today. So it's recovering. Remember, it's sold off pretty significantly. It's down basically $20 off its highs where it was pre-breakout. So, but yeah, it was down as low as 286 and up on the day now. And it never, I think it opened at 297, so it was never really down once the market opened.
Right.
It was down pre-market.
Pre-market, yeah.
Yeah, so there were some comments that they actually see the recovery being pretty fast. So, hey, listen, for everything, remember, we talked about it. Be transparent, be honest, and take care of the customers. And it looks like they're doing that as much as they can.
I just can't imagine the fallout from the E. coli when it comes next quarter. Same-store sales are going to be down again.
Yeah.
And, you know, this might be one of those things that drags out a little bit as far as traffic goes, even though they're taking the onions out of most of those quarter pounders that they're putting back on their menu. But KG, on the flip side, one that seems to be weakening, DHI, D.R. Horton in the housing. You know what? Everybody's talking about there's not enough houses. These home builders are doing real well. DHI was just off all-time highs. But this was, I looked through the numbers, it was a bad quarter for this, you know, lower starter home type of home builder, right?
It was. I'm sorry, I do have to go back to McDowell. I think it is exactly the guidance. They actually reaffirmed the guidance, and they said that they don't believe that there's any material impact to the business because of E. coli. I think that's the reason why I turned around. And they're not actually expecting a reduction in foot traffic within the stores. Let's see if they're going to be able to hit that expectation. D.R. Horton, I just feel like this is a stock, and this is actually an industry when you're looking at the home builders that are way too overvalued right now, and I think the market's really trying to right-size this. The expectations were very high going into this print, but now they're starting to see maybe some of the impacts of higher interest rates as well as competition hitting the space. If you're kind of looking at new home sales, I mean, we're hitting pretty much close to records right now over the last year and a half, while existing home sales are actually hitting almost 20-year lows at this point. And so I think there's going to be a little bit of a disconnect, and I think the market's starting to recognize that, and they are seeing some of the pressures here. Now, if rates are going to get cut, that could put a little bit of a spark within their business. But you also have to think on the other side of that, Tom, rates get cut, are existing homes going to flood the market, and are they now going to see more competition within the space, which they have not seen since COVID?
Yeah, and I knew they were doing discounts for the mortgages because now the 10 years back at 4.3%, that's where the 30-year mortgage is based off of, right, Kev?
How are home builders not doing extremely well? I don't get it.
Well, we said that about airlines in the summertime when they were all falling. We were like, hey, TSA numbers are at record levels.
Yeah.
The airlines can't right the ship, and now look at them.
Yeah,
you know, they exploded.
Yeah, it's kind of I'm sure there's a reason why it's happening. And I didn't read that much about it, but boy, you think the fundamentals of housing, especially new homes.
Yeah.
Existing homes, I get it. People are in at low mortgages, don't want to sell out, but new homes?
Yeah, but this is under 400K level for houses.
That
and they
should be the strongest.
But that lower to mid consumer is actually making choices and saying, hey, I'm not.
Maybe it's inflation affecting the
It's
lower end
expensive.
consumer.
Yeah, and it's expensive. KG mentioned home prices are at or near record highs. So affordability, and the CEO actually came out and said that in the conference call, affordability is still an issue for a lot of their consumers at this point. But then RCL on the side of cruise lines, 111% KG for RCL as far as their load factor. So they continue to do well, and it kind of a reflection that the consumer's still out there spending on travel and experiences, right?
Yeah, and they're able to backlog these voyages, if you will, right? They're still seeing a lot of demand going into 2025 and even going into potentially 2026 here. And it's not only the bookings or that capacity factor that you're kind of talking about. It's the fact that these consumers are getting on to these ships and they're spending money there. That's really where a lot of the margin is. It's the experience on those ships, right? And so they're seeing just a very strong amount of growth here. Also, too, when you're kind of looking at this industry, they took on a lot of debt during COVID, obviously, because travel was pretty much non-existent. But the growth rates that they're seeing on the upside here, or the top line growth, is churning out a fair amount of free cash flow, and they're able to kind of pay down that debt, restructure their debt too. So their debt burden is actually getting lower and lower, making them a little bit more attractive for investors. So nice report here today. Fuel cost has been a tailwind for them, but they have not seen a drop off when it comes to the consumer, and it really kind of matches the international travel trends that we've seen from TSA data as well, which has given the airlines, some airline companies for that matter, a little bit of a tick up as well, because those are higher margin businesses.
Yeah, airlines doing well today too, and I think you're right though. Those margins increasing when crude oil's at $67 a barrel. That's definitely going to help.
And Royal Caribbean has 3 good brands. They have Royal Caribbean, they have Celebrity, and they have Silver Seas. Those are 3 solid brands of boats.
Yep, and it's hitting a new, fresh all-time high. Big giant green candle on the chart there in RCL because stock's up 20 bucks from its lows that after it reported this morning pre-market. It's up 20 bucks from those levels. All right, let's take a quick break and get into this discussion about earnings and the tech sector. We're going to start off with Google parent Alphabet. The stock's up about 20% so far this year. They report after the close. Bar's actually pretty low on this one. Stick around.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Knock, knock. #1 broker here for the #1 hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Welcome back to Fast Market here on the Schwab Network. We're talking big tech earnings, kicking it off with Google Alphabet. Shares are up 20% this year, but off about 13% from those all-time highs that we saw in July, above 191 bucks a share. Kev, yeah, you know, we mentioned the bar's pretty low in here, and it seems like the commentary from everybody about competition in search, the amount of CapEx spend that they're, putting into AI, maybe Gemini lagging a little bit, but the bar's pretty low on this one because I think the headwinds, and then you throw on top of that the Department of Justice looking into them.
July 10th, this stock closed at 191.18. July 10th, not that long ago.
Right.
And they've hit it pretty hard since then. And you mentioned they've got Department of Justice. Over search, and they just got everyone in their kitchen, and it seems like they can't get out of the way of all these things yet. How about this stat, Tom? For the last 9 quarters, they've averaged between $15 and $16 billion in share repurchases. For 9 straight quarters, they've been buying back their own stock. That is incredible. In terms of how much they've bought back. So, this is a company that it's the cheapest of the Magnificent Seven, but they've got to figure out a way to get out of their own way. They've got a lot of clouds hovering over them, and competition is just one of them. The Department of Justice is another one.
Yep, KG, bring it in there for this conversation because they've got competition in search now, right? AI, ChatGPT, and then Perplexity, they're starting to get funded quite a bit. So search might change a little bit, but at the same time, I'm still going on Google when I'm looking for something, KG.
Yeah, it's going to take a long time for them to actually lose a significant amount of market share when it comes to search. Not only just the utility or the application itself, but all the data that they have behind that, as well as really valuable for companies that utilize their platform for ads and things of that nature, ad placement and other things. So the problem with this company, though, when it comes to earnings, is their ability to actually tell a story or the narrative. Their leadership team has not really been good when it comes to delivery of their vision moving forward, and even the product releases over the last year and a half are have been lackluster to say the least. But I do believe that the bar is actually very low for the stock going into the report. And if you're looking at it from a technical standpoint on a one-year daily chart, we are pretty much kind of hitting this inverse head and shoulders pattern on the chart where we could see a breakout to the upside above that 170 level. And so if that's going to be the case, you have actually 2 or 3 different gaps that you can fill to the upside, and this could actually be the catalyst in order to do so. And the other thing that does give me a little bit more confidence is looking at the flows for today for options. There's a lot of individuals that are targeting that 180 strike price on those calls going outright. So they do believe that we might see a pretty decent move for the stock. Market maker move is around 11 bucks, but there is some optimism more on the upside than downside right now, just on options flow alone.
Yeah, and advertising is a big chunk of their revenue, if not close to all of it. But the cloud revenue has actually been growing at a better clip than some of its competitors in that space, even though they're number 3 behind AWS and Azure. Stock's been trading between its 100 and 200-day moving averages. So consolidation here a little bit, but hey, ad revenue is supposed to be over $65 billion, KG. It's hard to kind of combat against that. Is it also competitive pressures in the ad market where now you've got Amazon picking up advertising? Walmart is. If you take a look at other areas that are expanding as far as more ad revenue, Netflix with the ad tier, all the streamers with ad tiers, it seems like, yeah, digital ad spend is picking up, but also the competitors within that space for that money also is picking up, right?
Yeah, I think it also depends on the platform or the venue of those ads, right? Sometimes we throw them all in one bucket and kind of look at it the same, but I believe all of those different types of strategies, especially if you're looking at Walmart, who was really kind of focusing on ad placement on the Vizio platforms and things of that nature, a little bit different than what we're seeing for Google. I think they're going to be able to perform. I think the biggest question mark is going to be the YouTube business. That has been something that has been meeting the street's expectations, but not really showing that level of growth that the market has desired. So that's one area of focus. And then also kind of looking at the Google Cloud business. Are they going to continue to take market share? How much is the spend on AI infrastructure within the space as a whole? And once again, I think they, from a valuation standpoint, they're cheap. They have a fairly low bar. Let's see if they're going to be able to pull it off. But I think it's more leadership. I mean, between Google and Meta, I'm not sure which leadership team does the worst when it comes to trying to talk about the narrative when it comes to their CapEx spend, as well as their vision moving forward for AI development.
Yeah.
Expected growth in digital advertising, 15.5% compound annual growth between now and 2030.
2030, yeah. Still growing, but
Still
I
growing.
think that's why that valuation is getting lower, because that growth rate has come down over the last couple of years. Department of Justice expected by November 20th to give more clarity about the potential breakup of Google Op, but that's going to be in the courts for years.
Speed bump.
Yeah, that's going to be in the courts for years. KG, you got an example trade for us, though, here with the anticipated market maker move of just over $10 either way.
Yeah, so this is actually a bullish trade example for today here. Looking at the November 1st, so expiring this Friday, looking at the 170, 180 call spread, buying the 170s, selling the 180s, doing this for a debit of $3.45. That would make the max loss on this trade, the debit paid, $345, and the max gain would be $655 if the stock is above 180 at the time of expiration here, with a break-even point sitting at around $173.45. Once again, buying a little bit of delta, trying to get at the money as close as possible. I already kind of talked about the fact that there's a lot of call buyers at the 180, so I'm utilizing that as my short strike if that is going to be the case, trying to give myself a little bit of wiggle room. And if the stock actually does move in my direction before this week's expiration, I also have the ability to kind of take the trade off if there's a market available for it.
Yep, a little more flexibility as far as management. But let's go through this one. Out in the November 1st weekly cycle, so really short-term positioning on this example trade. It's directional, it's bullish, If you think this stock's going to go up, this may take advantage of that. Buying the 170 call, sell the 180 call, bullish $10 wide call vertical, paying roughly about a 345 debit. It's a little, probably closer to 330 right now. Stock's pulled back a little bit. But if you pay 345, 170, 345, so you don't need a massive move here, Kev, to get above that break even. It's only marginal, a couple percent to get above the break even, but pretty straightforward directional bullish vertical.
Here's that trade-off that we talk about with vertical spreads is if you look at it, it's about a triple if you get it right, but you need a move, right? If it stays right here, this underperforms. You need that move through 170 and towards 180. Remember, the break even is probably 173.45. Yeah. If you look at that, that's where we you put it in. It's the debit plus the long strike is where your break even is. So you need a move, but like I said, if you get it right, if you get the direction and the move right, it's a triple.
Yeah, KG, you mentioned you've got 3 days to expiration on this one. You've got some flexibility as far as trade management goes. Like if this stock opens up at $180 and maybe the spread's worth $7, is that when you start, maybe if you bought 10 spreads, you start parsing that, or maybe you have the opportunity to just close it all, right?
Yeah, definitely. I mean, you could look at any type of like a 50% gain on a trade could be a decent area to take some profits if you have multiple contracts or taking the whole thing off. Once again, this is kind of technical in nature when you're looking at the technical landscape here. This is actually a fairly key breakout level to the upside. This could be that catalyst move, and then we have a gap to be able to fill too. So I think not only am I seeing that type of setup, I think the market's seeing that type of setup too, and this is a trade to be able to capitalize on.
Yep, option market pricing plus or minus about $10.30 either way into that earnings report. And you've got 3 days in it, so even if the stock does pull back, we saw that at McDonald's turned around. We've seen some other stocks do that also, so keep that in mind. But a good look at the bullish call vertical there in Google Alphabet. Remember, the debit you pay is your risk on that, $345. Thanks to Kevin Green, senior markets contributor here on the network, helping us break down markets and Alphabet. But coming up after the break, we're going to be joined by Andy Swan from Likefolio for a look at sentiment data in Visa. The credit card stocks up a modest 9-10% so far this year into their earnings after the closing bell. Stick around.
We're pulling back some here, folks. Looking good right here.
With me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's market on close. No place better than the Schwab Network.
Run out of pivot point.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading
Might be a little yummy.
Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
583s.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab. Schwab, a modern approach to wealth management.
Trying to know when is ready. There ain't nothing going on. SPY just now came back and hit support.
Welcome
The
back
first
to
one.
Fast Forward here on the Schwab Network. It's time for cash
Right here.
tags. For that, let's bring in our next guest. It's going to be Landon Swan, co-founder at Likefolio. Welcome back to the show, Landon.
Thank you. Good to be here.
Hello, Landon.
So talking Visa, they've got some Department of Justice sniffing around their debit card transaction business at this point. But, this is kind of reflective. We've seen retail sales data positive, right? People are still traveling, spending money. That seems to be like good news for Visa, right? Do you have the data to back it up?
Yeah, I mean, people are still spending. And what's kind of interesting is, when you look at, what's happened with interest rates, credit, obviously that's going up. It's going to put a pinch on consumers, but inflation's really, it's causing everything to be more expensive. And the data that we're seeing is that lower and middle class consumers are still spending more, even though their dollar's not going as far. They don't have the income to match the spending, which of course means that they're spending more on their credit cards. So, that's an interesting element. We've seen that credit card applications and accounts have gone up like 50% over the last 10 years, whereas like auto loans and other lines of credit are basically the same. So that's a bit of a, obviously that's a plus for Visa. And they're actually, you've got this chart here showing the debit card increase. They're really getting into the debit card game. They process about 60% of the 100 billion debit card transactions on an annual basis. So that is huge for them, and they actually have, lack of a better word, punishments for merchants and banks that don't go, kind of play by their rules, which is, I think, what the Department of Justice is looking into. But I will say that investors have largely kind of shrugged off that investigation. It doesn't seem to be like a big concern. And so, one thing that they're probably looking at is that they missed that revenues last quarter. Barely. They came in at 8.9 instead of 8.92. But overall, I think that the company's doing really well, and they're sort of the default when it comes to credit card processing. And, the data is in their favor. And even if interest rates drop, it's kind of like you're going to win one way or the other with Visa. If interest rates drop and they don't earn as much on those balances, people are more likely to spend more because it's more attractive. So what we did see is that even with interest rates going up, people really didn't cut back. They just kind of cut back spending their cash, and instead they're spending.
They did.
Which of course, is going to be good for the company.
Yeah.
Tesla new lows. I didn't look at Tesla yet.
American Express, though, Visa really doesn't carry balances.
Okay, we hit the 200.
Just the conduit for the swipe.
SPY did.
And they have a very asset-light model, but they could be hurt.
Oh, Tesla.
By, recessionary fears. But it doesn't look like those are coming. So what do you think the risk is? You just said 60% of the transactions they do. Well, that's not a monopoly. That's not
it's interesting.
That's not anti-competition. 60% is a good solid
Man,
number.
anybody ever say you talk too much?
Why are they constantly in trouble? Even though, they are just, they are the swiper. They make money per swipe. They don't make money on interest rates. They don't do that. Why? How do I say this nicely? I need like a better phrase for why is this happening to them when clearly it doesn't happen.
Right. Well, I think 60% is big enough that we can draw attention, obviously, but it's not a monopoly. you've got MasterCard, you got Amex, and I guess you can go Discover too. So there's options out there. Yeah. But you're right. I think it's just whether or not the consumer is swiping the card. And, we would think, I would have thought that inflation and reduced buying power relative to what things are costing would decrease spending. But really, that's not the case. And so I think that's kind of the big takeaway. And you get into a strong recession, I think obviously there's going to be less transactions, but there was a pullback. There was an economic pullback. We were struggling for a little bit. We can argue on which side of that we're at right now, but Visa came through basically just fine. So I'm actually pretty bullish on this company. It's not like a high growth company. I don't expect this to double or triple over the next few years, but I think it's a safe place to put your money where it's an easy middleman company where they're just going to make money no matter what the economy does, as long as it doesn't completely tank. And even a little bit of a pullback, as we saw, didn't hurt them. So I think they're in a very strong position here.
Yeah, Landon, your other chart, you got the global most valuable brands. I think that's key because if you look at the growth rates here, I mean, Visa's is up, what, 12%. Maybe it's already elevated enough where maybe those growth rates start to get a little bit tougher to kind of increase here. But with the Department of Justice, with the stock just below all-time highs, but they don't have the risk that, you know, American Express and some of the others do because of the asset-light model. I mean, what's your take here and earnings score going into this report? Because I still think the bar is pretty high on this one. It just doesn't seem like the consumer's pulling back on spending at all, even though credit card balances are starting to really rise.
Right, agreed. And just so you know, this is obviously it's not market caps on this chart. It's brand value, which is kind of measured by how much value does the specific premium brand able to charge, and how much can they extract from their brand name and their premium products. So sitting in between Nvidia and Facebook is not a bad place to be for a company. I mean, that's 7 on the list. That's amazing. And by the way, when you get into antitrust, we didn't show it, but number 11 on this list is MasterCard. So it's tough to say monopoly when you got 7 and then 11, right? So that's pretty interesting. But when we look at the earnings score from negative 100 bearish, positive 100 bullish, we're to plus 26. So, willing to take a bet. I agree that, the stock's done well. It's got that, it's got the Department of Justice kind of looming over it. But that's, I think, somewhat priced in. It is priced in, I think, to become not a big deal. So if it does go the wrong way, I think there's risk in that. But just if you can assume business as normal and the antitrust lawsuit doesn't turn into anything, then I think this is probably, a safe place to put your money. And I would look to the upside. Again, not a huge margin. This isn't a plus 50 or 60 score.
SPY did come down and hit the 200 close to it.
But not willing to bet the farm on it. So plus 26 is where we're at. But overall, love the company, love the model. It's just taking a little bit each time. And you pick out half a penny or a penny on 100 billion transactions, and you do a little bit more, 35 cents here. It's just an incredible business. I'd like to see more competition, but still, at 60%, there already is a lot of competition. So overall, slightly bullish going into this earnings report.
Yeah, and don't forget that I'm sure the guidance is going to be okay. If you've seen some of the National Retail Federation numbers, Adobe Analytics, where expectations for holiday shopping is supposed to rise pretty significantly. So
that's true.
This is their best quarter. I'm sure they'll do okay. All right, great stuff as always, Landon. Appreciate it.
Thank you.
All right, that's Landon Swan, co-founder at Lightfolio. Breaking down Visa now. We're going to look at an example trader cap.
580s look nice now.
Just over plus or minus $8 move in the shares either way.
Yeah, the trade that I wanted to do something, this is a paper money trade that is looking at a bullish scenario. Why? Because Visa was just $293.
Right.
And though I think the reason it's sold off,
he even said paper money trade.
Looking into them.
Wow.
I don't know how that affects
I
their
say
earnings,
it too.
Frankly, other than lawyer costs.
That's funny.
I don't know how it affects their earnings. So what I looked at here was, Tom, doing a 1 week diagonal, just a tight little diagonal, because what worries me, you could do, remember the trade-offs, you could do a calendar spread, but I'm worried about it moving past the strike.
Right.
So if you are worried about that, and
you're real money when you got me that one.
Easier to maybe a diagonal, but the trade-off is costs a little more money.
Right.
So
I would have definitely hit it.
285 call. Sold this week's November 1st, $292.
Watching Tesla here.
So a $7.50 diagonal.
Maybe they're after it.
$4.25. It's not cheap because you're.
They can't say anything nice about it.
The money. So going out 10 days. There's still a chance to extend duration into some type of vertical, but this one, it's not cheap, but it gives you a nice winner if it moves towards that 292 strike.
That's right. It's not cheap, but at the same time, we always talk about this, the width of the diagonal, right? $7.50. You're paying $4.25 for this. There's your risk, $425. So that means that there's probably some vol dispersion in there. And there is, but let's get through the trade here first. November 8th, weekly cycle, 10 days to expiration. Buy the 285 strike call. Sell the 292.5 strike call in the November 1st weekly cycle. $4.25 debit. That means your break evens about 287 here to the upside, so you don't need that big of a move, just a couple bucks higher to get above that break even. Kevin mentioned you'll have that ability to roll that short option as you get closer to expiration over the next 3 days. But I think the key here, Kev, is that in the November 8th option series where you're buying the 285 call, the at the money, about a 32% implied volatility on aggregate. Selling in the November 1st weekly options about a 45%.
Yeah, this is not a big premium name. That's why it may cost you a little more. It just doesn't seem, I mean, 32 vol and a 45 vol. It's just not a big, it's just not a big volatility name.
Right, and if you were just to look at, just for example, buying, buying the vertical as opposed to something along those lines. But out in the November 10th cycle, if you buy the 285 call, sell the 292.5 strike call. So basically, a $7.50 wide call vertical, you're paying over $310 for that at this point. So this is a little less capital intensive on that one, or that one is a little bit less capital intensive. But then you don't have that roll, which can increase profitability, potential profitability. Also on that one, and you just need a slight move to the upside to get above that break-even around 287. So keep that in mind. Also, good look at the call diagonal, and then also you've got some sign of risk on that short option over the next 3 days. But coming up after the break, we're going to take a look at another big name in the tech space, and that's AMD. Chipmaker stock has consolidated recently into their quarterly results after the close, after hitting all-time highs in March, above $227. Stock pulled back quite a bit from there. But we'll talk AMD when we come back.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at AMD, let's get a quick market update. Stocks are kind of mixed right now at this point. The S&P 500 is slightly higher. We've got that up about 0.1%. Dow off about 0.25%. NASDAQ still leading to the upside. A lot of those big tech names, including Microsoft up, Meta up over 1.5%, Google Alphabet up over 1.3%. Don't forget about NVIDIA up 0.75%. And then the Russell 2000 small caps lagging, down 0.7% on those higher yields. The 10-year yield now 4.33%. Dollar index continues to move to the upside above the 104 level. Gold hit another fresh all-time high today. Crude oil pulling back a little bit just near that $67 a barrel level. and then the VIX futures, or the volatility index spot, just above the 19 level. We'll see if that volatility remains firm going into the election next Tuesday. All right, now it's time to bring in our next guest. That's going to be George Tillis, Senior Markets Contributor here on the network. George, we're talking AMD, the kind of lagging its competitor NVIDIA, but they don't have market share at this point. George, give me your take here on AMD, because I think the bar is actually relatively low going into this one.
Yeah, I was just going to say, Tom, if you actually consider the growth estimates for AMD going forward, there might be something compelling here for the name. Now, you got to think about AMD, first off, as a CPU company. They have about 30% market share behind Intel, which has about 70% global market share in that regard. I think what's happened in the CPU space, there's been a lot of competition from China. They've talked about sanctions of using Intel's and AMD's CPUs and some other government computers. But at the same time, the growth areas for AMD really are their embedded processing chips for things like servers, and of course their GPU technologies or accelerator chips that are mostly used for inferential data crunching versus the graphics chips that NVIDIA has the leadership in. So if you actually look at the quarter they're about to report, 92 cents is the estimate for earnings, higher by about 30% compared to 70 cents for the same quarter last year. And sales are expected to be quite robust, around 16% higher, at around 6.71 billion, comparing that to 5.8 billion for the same quarter last year. So I think the expectations, if you go back to around February, and then of course early March, when the stock was trading at over $220, was the artificial intelligence element to its business, I think was far-fetched. In other words, it was really embedded into the stock price, but at the same time, you saw a lot of the other semiconductors ramp up earlier this year based upon the expectations of growing market share, but that hasn't manifested. But if you do look, what's interesting about AMD is the estimates for total earnings for the full year fiscal 2024, now this will be Q3 that they're reporting, is around $3.39. But if you fast forward, I see a trajectory of earnings which are ramping up every single quarter for the next 4 quarters. Next full year, 2025, it's estimated to be $5.42. So 60% increase between the end of this year and next year in terms of earnings growth. And right now, you look at the forward multiple around 29 times. It looks kind of cheap, if you ask me, compared to 5-year averages.
Well, George.
George, the question continues to remain, are they a serious Blackwell competitor? Can they compete? They claim the MI325X is cheaper and does close to a good job. They're a solid number 2, but are they? And they have some different businesses. The CPU market's a little more sluggish than the GPU market, and therefore, if you look at a chart, you lay these two, NVIDIA and AMD, on the same chart, they've been diverging for the last couple of weeks. Are we going to see just a snapback here? Because, frankly, Taiwan Semi, pretty solid earnings, have had pretty solid movement. Which should we look at? The divergence with NVIDIA, because NVIDIA is clearly number 1, or is the whole group going up?
Well, that's a good question. So, when I look at AMD, obviously we have to compare it to, both an Intel and then, of course, a NVIDIA. So it's sort of right in the middle, but at the same time, they do have their industrial automation chips, in other words, their industrial chip division. So I think AMD is one of the most diversified semiconductor players out there. Now, when you look at the competition for GPU technologies, AMD is second best, but NVIDIA is far, far superior in terms of graphics processing. Now, when you look at the MI300 chips, of which Oracle is now adopting into their enterprise technologies, they actually have very compatible inferential technologies. In other words, data crunching versus visualization and graphics. So in that regard, there's a lot of demand because they can do a lot. Their chips can do a lot that NVIDIA's does for a lot cheaper. But when you're talking about inferential data statistics and data crunching versus graphics interface, NVIDIA is still far ahead in that regard. I mean, just to give you some context, it's just pretty remarkable that if you look at the gross margins for AMD, it's around 53%. If you look at the net income margin of NVIDIA, it's 55%, whereas AMD is around 5.5%. It's almost like 10 times more profitable NVIDIA is than, of course, AMD, because they don't have the market share in the GPU chip space, they don't have the pricing power, and they're still essentially a CPU technology business which has lagged. I mean, look at Intel, and of course AMD is following in that regard. So I can see where the divergence lies. We've seen multiple compression, by the way, in AMD, a significant one. And like I said, and this is what Tom brought up initially at the beginning of the segment, is the future looks a lot brighter for AMD. It just happens to be, where is the promise going to be delivered from? Is it going to be from this combination of embedded chips, CPU, alongside inferential chips? If that's the case, we may end up seeing, sort of a major trend reversal, because if you look, this will be now the fourth quarter that the stock really hasn't been trading very well, absent, of course, the big run up in February.
Yeah, so George, real quick here before I let you go, everybody expected us to get a resurgence in maybe some of their laptop business, some of the CPU business that was supposed to, start to pick up. We haven't seen that at all. Is that going to continue to weigh on the stock? Because it doesn't seem like AMD is giving the guidance, blowouts that NVIDIA has, and that's why maybe the stock's been under pressure.
Yeah, so and that's exactly true. I mean, that's what I suggest is the problem with the stock is, we've talked about this too, about this sort of, resurgence in, everyone bought a new laptop or computer during the pandemic. Now about 3 or 4 years later, people are going to start buying new product. And this includes enterprise as well, especially with AI technologies starting to become embedded in computers as they come off the assembly line. That should create demand for AMD CPU chips. So that may be a catalyst. So there may be two catalysts: the CPU resurgence, which we've talked about, expecting in the last couple quarters, it hasn't manifested, plus the AI growth. So I think this perhaps may be a pivotal quarter for AMD. And the reason I say that is those technologies seem to be lining up, plus that seems to match the growing earnings guidance for next year compared to this year. Like I said, 60% increase is estimated for earnings growth for year-over-year comps, 24 to 25.
All right, great backdrop for us. Appreciate it. That's George Tillis, Senior Markets Contributor here on the network, breaking down AMD. Now we need to break down an example trade here, Kev, because the option market pricing in about $11.50 move either way in the share. So I was going to look at call diagonal. You took care of that for us as far as an example trade. So I looked at a different strategy where I can offset some of the costs. I'm still a bullish play. If you think this thing's going to go higher, this may work out in that type of environment. So going out to the same November 1st weekly cycle, so just 3 days till expiration on this one, I'm going to buy an unbalanced or broken wing call butterfly, where I'm going to buy one of the 162.5 strike calls, slightly in the money, sell two of the 172.5 strike calls. That's about that one standard deviation move to the upside where you want it to go, and then buy one of the 175 calls. So 1 by 2 by 1. Unbalanced, because you're buying a $10 wide bullish call vertical, selling a $2.50 wide one, paying roughly about a 310 debit, probably trading closer to 320 now because stock has moved higher. But the debit you pay on this is going to be your risk on it, $310 per spread, with a break even of 165.60. Kevin, that break even's only about $2 above the current share price, so you get all that upside because you made a broken wing, but you don't need that big of a move to get above the break even, right?
Yeah, the first half of that trade is a $10 call vertical. The second half of that trade is a $2.50 call vertical on the short side. And so that's why you see that peak up around 172.5 and then comes back down around 175 and then flattens out, because you've got $10 in profits potentially on the long call vertical and then 2.5 on the short call vertical if it were to go all the way through. And the difference is how much you spent on it, right? Add those three up and there's your profit. But you'd love for it to go right to the peak of that 172.5 price.
Yeah, and a lot of times we'll look at those called butterflies like this one where it's broken wing, where why do you sell that $2.50 wide call vertical that's embedded in there? Well, you're collecting over 60 cents to offset some of your risk on it. Now, if it blows out and goes above 175, you're still going to be more than a double in profitability, right, Kev?
That's a key point, because make sure when you're pricing these out that you get enough credit on the short call vertical. Don't do it if you're not getting paid for the risk you're putting out, because you're taking some of the risk off. Make sure you're getting enough, like 60 cents. That's enough for a $2.50 spread. So you make sure you get paid for the risk.
Yep, and as we mentioned, still more than a double if it goes above 175 to the upside. But definitely a bullish, unbalanced call butterfly as an example. All right, that's going to do it for us today here on Fast Market. Make sure you download the Schwab Network app, and available in the Apple App Store, and tune in 24/7 right here on schwabnetwork.com. Stick around. Next Gen Investing is coming up.
This election season, stay out of the muck and the mudsling with Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, away, off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector. Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab.
Schwab, a modern approach to wealth management.
Welcome to Next Gen Investing. It's October 29th, 2024, and we have one of the biggest weeks of the market year this year in front of us. We got a lot of stuff the rest of this week. Of course, we got the election next week as well. So in this 7-day period, tons and tons to explore. Market building on some recent successes of the last few months, although stalling out, is a little bit green despite its mixed nature today. S&P 500 a little bit higher, NASDAQ a little bit higher. The Dow and the Russell both in red territory. Rates continue to be a story. As you see, yields continuing to move higher over the last few weeks. That continues again today. Joining me today in place of Jenny Horn, who has a day off, is Diane King Hall live from the New York Stock Exchange. Diane, I've been kind of joking all week, and I'll say it again, like, this is a week to make sure you get a full night's rest every single night. Every single day is a busy one, and it seems like it only builds as the week goes on.
It's true. I mean, when you think about this whole week, it's the biggest week of earnings season this year, and then it's 1 week until Election Day, so it's a lot to chew on. And I think in terms of the action that we're seeing today, we can expect choppy action really through the close because we have so many heavy hitters that start reporting after the bell today. We'll get Alphabet, parent company of Google, so we'll get to hear more about what does the AI spend look like there. We'll hear from AMD. And then the rest of the week, we have so many of the tech heavyweights reporting this week. Microsoft, Amazon, we've got Meta platforms as well. All week it's going to be, and we talked about this last week, that this week was going to be a big focus on micro, and micro would be what would move markets this week more than the macro picture, although we have some macro data points today. But in terms of that, that's causing really a tug of war in terms of the market action today. So I really think that the trigger will be after the market closes today, but it does seem that the trend continues to be overall, yes, it's a mixed market action, but it seems like the bullish sentiment is still the overarching theme when it comes to equities.
Yeah, I think that's confirmed by the trend for those who take a look at charts. I don't even think you need to look at a chart. I think we know generally the S&P 500 has gone higher the last few years. And to your point about it being more micro or macro, I'm not sure ultimately. I mean, I understand the argument, but what I would say, and I think what I've said all week, is no matter what you look at, it basically is happening this week. From political headlines to inflation data to jobs data to some of the biggest companies in the world to cyclical companies. Basically everything is happening this week. You got healthcare companies. There's just tons and tons to explore. And we're going to do just that, or at least we'll do the best we can to look at some of those stories throughout the day here for our program. It's going to be earnings centric. I mean, I think it has to be with all of the names that are reporting earnings this week. We'll go through a ton of that are yet to report throughout upvote, downvote, and then ultimately in FOMO as well, where we'll highlight Alphabet, as you mentioned. We'll take a look at McDonald's, and we'll talk SoFi. So a lot of names, a lot of things to discuss here. Diane, let's start with an upvote, downvote, which of course, the upvote, downvote is not an endorsement or a recommendation or the opposite. It's just simply, whether or not we're going to continue to discuss a name into the next segment. Let's talk AMD, though. AMD is largely a member of this AI trade. Maybe not the general that NVIDIA is, but still an important piece.
It is. I mean, the expectation in terms of the results when they report today, Street's looking for 91 cents a share on adjusted EPS. Revenue, they're looking for $6.71 billion. Both would be a double-digit increase in terms of both its top and bottom line. But one of the big questions for AMD has been, where do they sit in terms of the AI space and following NVIDIA? There has been all this talk since last year through this year, and the Street has been very patient, but it seems like patience has been waning about its, what does its revenue growth look like for data center and AI segments, and it's really struggled to kind of gain traction behind NVIDIA. It was supposed to be number 2, but it's been trailing significantly. Yes, the stock is up year to date, but it heavily trails NVIDIA. Even if you think about recently, which I think was less than a month ago when they recently announced those new chips, right? The big one, the MI325, that's supposed to be, kind of the next one after after the MI 300, and it's supposed to compete against the Blackwell. One of the challenges for AMD is it doesn't have the pricing power that NVIDIA has, and it doesn't have the same, client base. I mean, now, to be fair, one thing that could work to its advantage is if it has lower pricing, it can beat NVIDIA on price, it may gain more market share that way.
Yeah, a couple things that I'll be watching. You mentioned the data center piece. That's going to be the big growth driver for AMD, so that number's going to be really important. But also just the expectation for some movement and reaction to this. The average price move over the years in AMD is almost 9.5%. So it's a pretty volatile name typically around earnings, and so we'll see if that continues. The next one on our list is Visa. Visa and MasterCard, I can't think of a network or, payments kind of related company between those two that has more visibility into truly, are we spending money or not? The world has become so financialized. There's so little, cash transactions happening nowadays. Like running through Visa, running through MasterCard, maybe American Express, Discover a little bit as well. I mean, these companies, this is the network where our funds are flowing through.
Yeah, that's right. So a lot of attention is going to be paid to what does volume look like, what does payments volume look like when we get their results after the bell today. In terms of the numbers, we're expecting to see adjusted EPS expected to be $2.58 a share. Revenue is expected to come in at above $9.5 billion. In terms of some of the analyst commentary coming into this, Bernstein out with commentary today saying it's, quote, 2024 shaping up to be a, quote, narrative-changing year for many payment companies as underlying growth slows. That echoes some other analyst commentary that I've seen, that they're expecting to see a little bit of slowness when it comes to volume for payments growth. Another headwind that we'll want to hear more about, we'll probably hear more about that on an earnings call versus when they actually release those results, is we know they're facing some legal action from the Department of Justice. The Department of Justice has accused Visa of holding monopoly power over the debit card market because they hold more than 60%, or they're accused of holding more than 60% of that, and they're accused of holding monopoly power there. So that's been a headwind for Visa. And you mentioned its comparison to MasterCard in terms of the share price. MasterCard has been a better performer this year compared to Visa.
And that's interesting. One thing that stuck out to me, too, is I was kind of looking back through history, how Visa does. It's only missed 2 times on earnings going back to 2016. And ironically, one of those times was just this last quarter. So we'll see if it's able to bounce back. Not a lot of volatility typically in Visa relative to AMD. Only about a 2.5% to 3% reaction is typical in Visa. So we'll see if that continues, too. Next one on our list, though, is Chipotle. CMG was a high-flying, multi-$1,000 stock. It has this big split, and it's been I don't want to say it's been a dud in the sense of it's not performing well, which it hasn't, but more so it just doesn't get the same attention now with this lower stock price. That seemed to be one of the things that drew activity to it.
Yeah, that's a great point when you think about that. And also they have a leadership change happening. So Chipotle certainly in focus. Results expected to be 25 cents a share. On bottom line, revenue is expected to come in at $2.82 billion. We'll want to hear more about what costs look like, what input costs look like, and if there isn't, kind of any inflation in terms of ingredient inflation. Does it give it more room for pricing power, any potential increases to the cost of the burritos itself? One of the things that Chipotle has also worked on this year is just its speed in terms of delivering to customers, not actual delivery, but once you're in there, the speed of service. That's one of the things that the company has a focus on this past year. But we will also want to hear more about what the leadership change is going to look like. We know they have an interim CEO now because Brian Niccol going over to Starbucks. So that's one of the things we'll want to hear more about, and if the interim CEO is going to end up ultimately taking that role over permanently.
I think that's a really, really good call out. The shakeup at the leadership piece. We haven't really had a chance to hear a lot from Chipotle since that's happened. So pretty big, kind of, I guess, wrench into the story when it comes to CMG. 5-year growth for CMG each year is almost 30% in earnings right now. That's just incredible.
Yeah.
When you think about, like, Chipotle's not some new on-the-scene company. They've just been executing really, really well. We'll see if that can continue under potentially new leadership now going forward. Hasn't missed on earnings since early 2023, so we'll see. Another name that moves quite a bit around earnings, almost 7.5% is the average move. Yeah, go for it.
And just to add one other thing, and you know, with that move, we know we will want to hear, as you mentioned, more about the C-suite because we know the CFO pushed off his retirement because of the move with the CEO. So Jack has been a big part of the growth that we've seen at Chipotle. So they needed him to stay on as well in order to do a more effective transition. So it is expected to be, kind of steady as she goes, or the continued improvement that we see with Chipotle if Scott Boatwright ends up continuing on as CEO and not just interim CEO.
Yeah, well said. Next one on the list, Eli Lilly. I'm not one that, really spends a ton of time looking at the kind of pharmaceutical biotech space. Just think there's so much to explore there. If you're not really like in tune with what's going on, I think it can be difficult. But this is a name that's found its way onto like my revolving watch list just because it's been such a high flyer with its exposure to those new weight loss, kind of diabetes drugs that have been kind of all the rage within pharmaceuticals. It beat earnings last time, Diane, by 50%. Its earnings versus what the estimate was beat by 50%. That is a massive. That's not even a home run. That's a grand slam, walk-off game winner.
Yes, indeed. I mean, the expectations still high coming into this report for Eli Lilly. We'll go through the numbers really quickly before I kind of elaborate more on my thoughts on this space. Adjusted EPS expected to be $1.53. Revenue is expected to top $12 billion for Eli Lilly, and you're right, they knocked the ball out of the park on their last quarter. A lot of that has to do with the growth in the weight loss drugs. Of course, it's the diabetes space as well, and the piece of that they have is the tirzepatide. We know that is the underlying formula. This GLP-1 space, et cetera, has had such growth for certain companies. So Eli Lilly has been a front runner in this space, and one of the challenges has been keeping up with demand. We know recently they've come off of supply shortages list with the FDA. So now they're going against the compounders and saying they want the compounders to be kind of taken out of the picture because they believe that pulls market share away from them. Now, analysts don't see it that way because one of the things that Eli Lilly would have to its benefit, especially obviously on the diabetes side of the drug, is insurance coverage, right? So, demand was strong in their latest quarter for both Mounjaro and Zepbound. Mounjaro, the diabetes treatment version of the drug, Zepbound being the weight loss treatment of the drugs. And these have been monster performers for both the companies in this space, whether we're talking about Eli Lilly or Wegovy, Ozempic, Novo.
And weirdly, it's not that high of a bar set if you look at kind of what they reported for last quarter, almost 4% or $4 rather in EPS. Only $1.50 is the estimate this quarter, so a little bit of a more tepid, I think, expectation. But the stock also sort of reflects that too, as it sort of leveled off. So we'll see what happens. Diane, any final thoughts on any of these names before we take a break?
No, I think we have a lot to chew on today, especially as we get closer to the bell.
Yeah, no doubt. We're going to look at Visa and we're going to look at CMG. There's really no wrong answer with any of them. They're all going to be big earnings. They're all worth watching. We're going to look at Visa as well as Chipotle with the chart master, a couple example trades as well, right after this.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. Time now to chart and trade our upvoted stocks. That would be Visa and Chipotle. For that, I want to send it back over to my colleague, Alex Coffey, and the Duke of Data, also chart master, Rick Ducat.
Thanks, Diane. Yeah, we got the Duke of Data, Rick Ducat, here with us. Take a look at Visa. The Duke of Visa today. Take a look at this chart you have, 1 year, 1 day. A name that's found some resistance, it looks like.
Yeah, repeated trouble getting above, or with significant progress at least, above like 290, 291, around that area. Topped out right back here. Made some highs beyond it, closed above it, made 52-week highs. Steep drop off though very quickly. Second attempt. Stopped right at that same point, did not make any new highs. Not the greatest signal here. So now what we have is kind of this triangular shape. We're down here at these lows after earnings, connecting these subsequent lows pretty consistently, giving us this good, trend line to watch here. But now we've got this high and the subsequent lower high to give us these boundaries to keep an eye on here. We can also see there's been some heavy volume recently too. This was during this, period that we saw here of decline. So look for heavy volume during the earnings that are coming up here as well. Look for heavy volume to show conviction on the part of a move to the upside here. But for now, we're above our moving averages. They're trending upward here, but we're stuck in a triangle shape still without making a ton of significant progress.
Yeah, and sometimes when you see those big spikes, they oftentimes correspond with big moves or events. So you'll oftentimes see them around the earnings event, of which we have one now here on the calendar for the next 24 hours. So perhaps a volume spike in store there. Talk to me about momentum though. Sometimes that can kind of play tiebreaker for us technically. When you have this sort of uncertain pattern of the triangle, does momentum give us any more clarity?
Mostly what we're seeing with the RSI is that it's following along with the price action. You can see corresponding peaks here, and then a lower high here and here. And unfortunately for the bulls, they could not hang on to that overbought area, and during the second attempt they did not make it into the overbought area. So definitely showing slowing momentum here, but you can also show this, that we've seen higher lows here, and even like this too as well, a little bit more steeper in the shorter term here. So we once again, triangular shape here, but the tiebreaker, as you kind of put it here, is that we are above the 50 midline here. So it is more of a bullish lean as we head into earnings, and we don't even get much help with the price action. We're kind of like in the middle of the recent range we've been in here, so not even a clear lean if we're like very much toward the bottom or very much toward the top of the pattern.
Both not uncommon though, going into an earnings event that's likely going to actually play tiebreaker for us. So now that we look ahead and we think about the fact that we got this event on the horizon, we're about to find out what the fundamental picture looks like. That will likely send the stock one way or another. Where are some places we might find resistance, places we might find support?
The upside's more fun. Let's start there. And we also have a very convenient zone to talk about that we highlighted earlier. The distance between our old high from back in March, I think, and then our more recent high from in August here. So between like 291 to 293, that's our resistance zone based on the price action here. We also have the +1 standard deviation channel as well, that you can see we have this yellow line here, 1 standard deviation above our blue linear regression line, a further source of potential resistance. So there's even more weight in that area. If we do get some kind of upside breakout, just for perspective, +2 channel comes in near 304 or so. But to the downside here, we have recently crossed above an important point. See this green line here?
Yep, I see it.
Point after a gap down, subsequent low point, 21-day EMA, also linear regression line, 281 to 282 or so.
Okay, and then it looks like that volume point of control below there. You got volume nodes, so there's tons of support levels. It's really just, hey, those old highs. That's an area to target to the upside. We're gonna take a look at an example.
Hey, Alex, I called 100% trade on this here SPI today.
Upside. What I looked at for an example trade with this in mind, a little bit of elevated volatility going into the report, looking at a premium selling short put vertical.
Now we got drama.
Most importantly, and relatively short dated, but not so short dated that if the earnings come out, we're going to find out the fate of this trade immediately after. It goes out to November 15th.
Fat cats are back.
272.5 put vertical, looking for about 60 cents credit. Now, maybe you would be comfortable going up to about 75 cents credit, and maybe as low as 50 cents credit. So it's always like a range, a comfort range, depending on where you want those break-evens and risk, reward metrics to be. Those are sort of our loose guidelines, somewhere between 25% and a third of the width of that particular spread. So $2.50 wide, 60 cents. That means you can make $60 on $190 in risk. Break even would be $274.60 to the downside. So you got a little bit of cushion over the next few weeks if it is a little bit disappointing in terms of price reaction.
Ladies and gentlemen,
the next one, which is Chipotle.
If I ever get this guy to shut up.
This stock was a $3,000 stock. It seemed like it always was getting attention, particularly around earnings.
These Chipotle and AMD. So we got SPX just had a knife right here to the 63. Now Fat Cat just got back, so maybe one more pullback is necessary, but we got a little candle right here to support. It's amazing sometimes.
Now we've got kind of a rising wedge type shape. Two trend lines pointing upward, converging toward each other here. So more recently,
we're at 263
above our moving averages and found them supportive after a downside test there. Now we're moving upward, pushing beyond some of these horizontal levels that we have highlighted here. We'll talk more about those more specifically in a minute here, but the general trajectory is more toward the upside right now, but we're approaching some areas where, we've had some technical importance in the past.
Yes.
Out to me too is it does seem that this name kind of gets moving in a direction and then kind of stays in that direction. There's some inertia to the trend. Not a lot of volatility along the way, but sharp moves generally with its trend. So we'll see right now kind of on a little bit of an upswing. Does momentum confirm the upswing?
Yeah, and when we look at momentum here, maybe it's not telling us exactly what the Bulls have wanted to see for the entirety, but the more recent news is more positive here. So just backing up a little bit, long slide downward here. It's always kind of curious how, even though the stock is going upward here, we have a general trend of slowing down. So it's complicated when it's going into the overbought area. Those are more the short-term signals, but the general trend was downward here. We've managed to stay true to that trend line for the most part here, but it's kind of looking like we're breaking to the upside now. You can also see we had a sharper upside trend in the RSI that was broken, but our more mildly sloping dark green trend line is still in play there. So we're above the 50 midline, uptrend still in play, downtrend being broken as we are, for now, above a resistance area. So that would be more positive.
Much like what we saw in Visa, looks like a name coiled, ready to make a move. We got earnings to
now if you go back
that catalyst. Are there some levels
and redid that?
Yeah, when you look at the volume
that first and second one, did that right, he'd be saying we're at a 1, 2, 3.
Stand out fairly clearly on this
we
one.
have
so
not
these
broke yet.
Automatically are some areas to keep an eye on here because they've been important in the past. But we can also look at just the price action.
That's on the daily.
Point, that was around where we opened then and recovered above it with a big breakout. Low point, low points. And now we're at a similar point once again. Dark red line around 60.50 or so. The next step upward, 63, our pink line. Low points, congestion area and volume node you can see here. So 60.50, 63 to the upside. To the downside, green line here. Around that was the highs. We also have 21-day EMA, volume profile, point of control, all near about 58 or so. Below that are light green line, high points, low point, 56.30 or so.
Yeah, it looks like the upper end of that value area near that kind of 65 mark. But some levels along the way, definitely some overhead supply that could act as resistance if the stock does make a jump post-earnings. Rick Ducat, appreciate the technical look on both Visa as well as Chipotle. Let's take a look at Chipotle example trade now going into earnings. What I looked at here was a call debit spread. This is a strategy, of course, risk defined, but looking for a move higher on this particular stock as structured, with it being an out-of-the-money spread. What we're looking for is actually a move higher to even break even on this one. What we're looking at here for this particular case is 62.65 November 8th, so 1 week earlier, expires next Friday. 62.65 for a dollar debit means 63 is the break even. You can make $200 on this strategy on just $100 in risks. You can see right now we're kind of trading in this range. You need to move higher to 63, you can break even, and then beyond that, if it gets to 65, that'll be your max profit zone, where again, for $100 in risk, this is
we ain't got there yet.
$200 in profit. So 2-to-1 reward.
62 would be resistance.
Break even at 63. So risk defined. Thanks to Rick. We're
On
going to send it back to
Chipotle.
New York and Diane.
All right, great setup there, Alex. That's Alex Coffey and Rick Ducat. Thanks, guys. Up next, we've got FOMO for you. We will preview Alphabet's earnings. Those are on tap after the bell today. Next Gen Investing. We'll be right back after this break.
Chipotle.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Chipotle.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab Investing.
Okay.
40 customizable themes, up to 25 stocks in just a few clicks.
Get each and every angle, the whole picture, everything.
Jim.
On Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a
hell.
Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights. I'm Tom White.
I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you.
Chipotle
ready
should
to go
do good.
At 12 p.m. Eastern on the Schwab Network.
It's already had its run.
Welcome back to Next Gen Investing. It's time for FOMO. And today we discuss one of the biggest companies in the world ahead of earnings. That is Alphabet. Still with me, Diane King Hall, live from the New York Stock Exchange to help set up what is going to be an exciting afternoon. Let's talk Alphabet. Search dominant, media dominant with YouTube. I mean, this is one of those ecosystem companies.
It is. And I mean, and this really is the kickoff for the massive slate, as you mentioned earlier in this show, of numbers that we're going to get from big tech. I mean, when you think about it, the 5 companies that we're going to hear from this week in terms of that sector account for market cap of about $12 trillion. And Alphabet is first up at bat for this space. And when you think about them in terms of the Mag 7, they've been trailing in terms of performance. Yes, it's up more than 20% year to date, but they've been trailing, their peers within the group. Adjusted EPS, we're looking for $1.85 a share. Revenue is expected to top $86 billion. You mentioned search, Alex. In terms of the expectation for search, the street is looking for more than $49 billion on that metric. So that is one of the things we're going to want to pay attention to. Another thing that investors are going to be looking to hear more from is that AI spend. We know there was a lot of time spent on it in the last quarter, and the CEO, Sundar Pichai, talked about them. They would rather overinvest than underinvest in that space. And the street was a little concerned about that because they've been wanting to hear more about, okay, what is the payoff for this? But again, they reiterated that their plan, they view this as a long-term plan. And then if you think about, some of the other commentary out of the C-suite, you had President Ruth Porat, who was once upon a time the CFO, talking about the spend, and that we can expect to see about $12 billion each quarter this year on this AI spend. So we'll expect to see that. But you're right, we're going to want to hear more about search, especially when you think about the rise of these AI assistants and how there's been some analyst commentary about the potential for that pulling away from the search prowess that Google, one of the subsidiaries of Alphabet, has had for decades now.
Yeah, this is going to be a complex earnings report. You got to think about Google Cloud. You got to think about their traditional search revenue. You got to think about YouTube. You got to think about, hey, even if all those numbers are good, how much of that money do they just turn around and spend on something that ultimately they're hoping brings return to shareholders? But the jury's still out on how effective that is. They got Waymo investments. There is just so much here. And then you throw on there's always sort of this cloud over these really, really big dominant companies in terms of like, what about what you're doing is perhaps monopolistic, and there's the regulatory overhang. Now, we probably won't hear a ton from the company on those, but we know that that's sort of ramped up in terms of the scrutiny around Alphabet as of recently. Am I missing anything?
Yes.
I feel like I listed like 10 things, and I feel like I'm probably still missing 10.
You're missing something.
I mean, yes, because look, it's for Alphabet, that's it. It's like A to Z. So we know they cover a wide variety of things, whether we're talking about search or Waymo, it's FSD, etc. But I think you mentioned a great point about one of the overhangs, that even if they beat results, one of the things that's held the company back this year is all the regulatory pressure they've had and the challenges they've had on if they're monopolizing certain segments. It's had some wins, it's had some losses in terms of that space, especially when you think about European regulators who have been coming after big tech for that. It's not surprising to see that pattern because Europe has more stringent requirements when it comes to regulation around tech. And Alphabet has certainly been in their crosshairs all year. Now, I want to kind of go through one of the notes that we saw recently in terms of expectations going into this. This one's out from Wedbush. They are, pretty much in line with what street expectations are. They're not expecting to see a massive beat in terms of this quarter. They don't see this quarter as being, a big catalyst, especially given the regulatory challenges that you mentioned. They're expecting that advertising growth, that its numbers are achievable for Alphabet. So they see that, and their view is again in line with the street. And they do say that there is been some recent commentary about decelerating search growth, and you wonder if some of that has to do with the rise of this AI and these AI tools that may be pulling away what some of the demand that used to go to search is now going to AI instead.
You know what else is super interesting too, Diane? We have that chart up on the screen there, but if you would have just looked at the last 3 months of that chart, so like that last, let's call it quarter of it, I'm not super technical, but I'm sure if Rick Ducat was in here, he could tell us that looks a little bit like an inverse head and shoulders, which I know from the Series 7 exam is a reversal pattern. So for those who are looking for something optimistic on the chart as well, a little bit of optimism from this earnings could set up a little bit of a bounce technically based off of that setup. When we're talking this name, though, the next tough question is, with all the things that we're going to have to digest from the market, how does this stock typically, act and perform around earnings? We know long-term, most, analysts like this name. This is a big part of many portfolios because of the size of the company. but it also moves like 5% around earnings. So it's not without risk if you decide to be involved here, Diane. And even the last few quarters, it hasn't missed on earnings since, early 2023, but 3 of the last 4 quarters have been down moves. So it's not as simple as, hey, you beat on earnings, you beat on revenue, stock go higher like it is for others.
It's not, because again, one of the challenges in the past had been that AI spend, and the street had been disappointed in seeing that and say, well, okay, well, if you're spending this much, show us the result. What is the result of this spend going to be? But I want to go back to something you said earlier about, what the chart looked like. And I'm not a chartist as well like Rick Ducat, but you make a great point that I wanted to, it brings up another point to my mind that Wedbush made, that saying while they don't see this upcoming quarterly report as a likely catalyst for Alphabet, they do think shares are, quote, attractive at current levels, with shares trading below the market multiple. So that is certainly something to keep in mind that I think dovetails with your point, Alex.
You know what I love about that particular note is, it kind of sounds like they can be right no matter what happens. And that makes it a good analyst note if you're trying to keep those fees coming in. But jokes aside, I looked at an example trade here that kind of takes that into account, which is, hey, there's a chance that it is disappointing. There's a chance that it doesn't go the way that you think it's gonna go, and it's risk defined to deal with that. So you protect yourself from the move being adverse to what you think, but then also you can participate if the move happens in the way that you think it may. And so it's a call calendar spread. It can be very customized depending on where your target is for the stock. But what I looked at here was the 177.5 call calendar that sells next Friday and buys the following week. So you're selling November 8th, buying November 15th. It gives it a little bit more time to work out in the event that a big move happens one way or another, or a big move doesn't happen one way or another around earnings, because you really need this to move to the strike or in that zone for it to really have a chance. That zone, of course, around 177.5 where the strike set. What really stuck out to me was this is a 35-cent debit. So you get exposure to the upside for every one of these spreads that only costs $35. And that's not to say that $35 is zero, but it's smaller than even the trade we looked at in the last segment of around $100 in risk or $190 in risk. So a little bit smaller trade, but one that looks for a jump post-earnings and hoping the stock ends up around 177.5 to really have a chance to hit that apex of that profitability path. Any final thoughts on Alphabet as it kicks off what's going to be a very tech-heavy, mega-cap-driven week with all these earnings on the calendar?
I'm just excited about them, kind of kicking off this big, heavy tech focus this week. And I mean, think about where we are with the NASDAQ hitting another record today. So the tech sector has maintained momentum, and, Alphabet needs to continue that momentum if we're going to continue to see these trends play out.
And coming up next, we're going to talk McDonald's. They just had earnings. The numbers were a little bit disappointing at first. Stock went lower. The CEO and the leadership commented, turned the stock around. We'll be right back. Stick around.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's time to bring in our next guest. Joining us now, Kevin Green, Senior Markets Correspondent for the Schwab Network, to discuss MCD, McDonald's, post-conference call. And I don't always say that, but Kev, this one made a difference when you look at that chart, a little U-turn once we heard from the company.
Yeah, you did see some buyers actually stepping in after the earnings announcement here. And you know, obviously they've had a lot of issues over the last, 3, 4, 5 trading sessions here with this E. coli breakout. And you did see the earnings announcement itself, or the numbers weren't that spectacular to say the least here, but they were able to try to calm investors, at least for now. They do believe that the E. coli breakout is not going to actually have a material impact on their upcoming quarter here. And that is why we have seen some buyers actually step in. They did actually report earnings per share coming in at $3.23. Market was expecting around $3.20, and they did see a little bit of a recovery when it came to same-store sales in the U.S., growing around 0.3%. On a year-over-year basis. That was better than the street's expectations, but the international operated markets did see a decline of around 2.1% down on a year-over-year basis. Once again, this has been a situation where they have been able to manage for the most part from a PR standpoint. Hopefully they are seeing some positive effects with trying to be a little bit more proactive when it comes to this event and taking those slivered onions out of the supply chain. So that's why we saw the turnaround. Now, and you got to say, if you're looking at it from a technical standpoint, given the news and given the earnings announcement, the stocks actually held up fairly well compared to what we saw for Chipotle, 8 years ago, 9 years ago, where they had kind of this similar type of scenario when it came to the E. coli breakout.
I think that was one of the concerns going into this. Was this going to be kind of an isolated incident with regard to McDonald's, or was it going to be a wider problem? Which, if I recall correctly, the Chipotle one turned out to be a wider problem because it was I think it was a novel, I forget the exact virus that was going on there, but it does seem like this is contained. But McDonald's had challenges earlier this year as well, and I think one of the things that they did was, they brought back some value to their menu. Does it seem like the worst is behind McDonald's, especially when you look? I know there was weakness in global comps, but U.S. comps, you saw some recovery there, especially if you compare quarter over quarter. Does it seem like the worst is behind McDonald's?
I mean, they still have some headwinds that they are facing, especially when you're looking at the international demand around the Middle Eastern countries. So I think that's one thing to kind of keep in mind. And then, too, bringing that value menu back, I mean, it was actually impacting margins to the downside, but their franchisees, which the majority of the operated McDonald's locations throughout the globe are actually franchises. The corporation only owns like 10% of all of the locations, but the franchisees really wanted to keep that value menu available because they are actually seeing some positive tractions where individuals are buying that value menu and then adding on additional items to it. So it has been a benefit for now, even though it might be squeezing margins a tad bit, but if they are able to increase traffic, that should be a tailwind for them. I'm not sure if this is going to be the end of these bad situations for McDonald's. E. coli can actually have a reverberating effect over a couple of months. So we'll have to see what the total fallout is going to be. But once again, from a technical standpoint, there's buyers that have been stepping in here, and that should give you at least some near-term confidence that maybe this 50-day SMA is going to be able to hold for now.
Yeah, speaking of the technicals, Diana and I were just saying we're not, big chartists, but we're not blind either. And one thing that really sticks out to me is over the last couple of years, this $300 mark's been like a brick wall. It looked like it finally broke through convincingly to the upside. Now with this gap back into that, not an earnings catalyst to back through it, it kind of seems like a little bit of a failed breakout. What does that mean for the technicals going forward?
Yeah, I mean, we have to kind of consider this. It's considered to be a consumer discretionary, but you could make the case that maybe it's a consumer staple, just given its impact on the global consumer. So it does get a little bit expensive when it comes to valuations. And if you're not having that top line growth and you're not seeing really good organic growth, not only here in the U.S., but also internationally, it makes it very difficult for prices to continue to advance to the upside. So I think that's probably why you're seeing a little bit of a pullback. And in fact, if you actually see a pullback down to around $281, technically that still would be in that bull trend, and if you did have some buyers actually stepping in there, that could kind of give you a little bit more of a reset to try to retest that $320 level and try to break higher. But once again, this is a consumer discretionary that you can kind of view as a staple, and so I would not expect any type of really big outsized moves one way or another, just given the structure and the nature of the business.
And Kevin, is there anything else that stood out to you, whether it's numbers, foot traffic, or any analyst commentary off the back of its latest results?
I think it's the commentary coming from their leadership team. I mean, if you're saying that it's not going to have a material impact when it comes to your financial, that's a very bold statement. And if they actually miss on that and they do see a deceleration when it comes to foot traffic, I think the stock probably would be at risk for a significant pullback here. But, we have to take them at their word right now. And in 2 months, 3 months from now, we'll see if that's going to be the case. So I think that's kind of the biggest risk that they have for this company in the near term. It's just making sure that they can mitigate some of this risk. What's really nice about McDonald's and what's kind of different about what happened with Chipotle, McDonald's has a very diverse supply chain. As you can kind of tell, I mean, they really try to centralize it in the different regions, and that has been a tailwind for them. So they can kind of mitigate these issues as soon as they arise, which is exactly what they did, and they have been fairly transparent and proactive when it comes to this certain situation. So I give them a little bit of a win for now, and they got 3 months in order for us to see if there's any material impact on the top line and/or for U.S. same-store sales.
Yeah, and the E. coli might be unique to McDonald's at the moment, but the international struggles is not unique to McDonald's. That's a trend we're seeing across all these multinational companies. We'll see if that continues. Appreciate it. Kevin Green, as always, with the insights today on McDonald's. Coming up next,
yes, sir, Kevin Green.
By George Tillis to look at crowd favorites SoFi. Hey, don't be mad at me. Stock's down 5%. It's not my fault.
I'm waiting for my big trade.
After this.
Tickle my ear and I'll be right back. Warm this coffee up.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Welcome back. Time for Under 30. Today looking at SoFi. Joining us now, George Tillis, Senior Markets Correspondent for the Schwab Network, to help us break down the numbers and the reaction. George, stock's under pressure, but it does seem, if you're looking for a silver lining, if you're a SoFi bull, holding on to that $10 mark after breaking through there, it does look like buyers were ready and willing to jump on that dip. What's going on, though, with the numbers? Like, you look at them, it doesn't seem like they were all that disappointing.
Yeah, they weren't. I mean, if you break it down, I mean, just the numbers alone, we've talked about this company quite often in the past, and I mean, for all intents and purposes, if you look at the stock since July, it's actually had a really nice run. So if you look at the numbers, 5 cents came in on an adjusted basis versus 4 cents estimate. The sales number came in higher than estimate. It was higher by close to 30% year over year. They raised guidance for earnings. They also came in, by the way, with not only a beat on sales at $697 million, but they came in with a net income profit, in this case, of $61 million. And we've talked about the problems that SoFi has had in the past. And one of the problems has been the fact that if you go all the way back to 2017, prior to this quarter, at least on a full year basis, they haven't been profitable. So they're moving in the right direction. So I think this is the reason why perhaps the initial sell-off earlier in the day has been bought back up. There is still quite a bit of short interest in the stock, around 17% of the float. This may be a little bit of a short covering, but for all intents and purposes, one of the problems that still exists, in my view, for SoFi, which has been growing its customer base, it's growing its products, it's growing its technologies across the board, from investments to insurance, starting out having been, originally a student loan company. It's providing private banking and all sorts of investment services and insurance services, mortgage services. So it's becoming more of a comprehensive technology company as well as a finance company in tandem. But right now, based upon these numbers and figures and the expectations of further profits going forward, right now I think the problem still lies in valuation. If you just consider the adjusted earnings for the remainder of this year, they did increase it by a penny. It's close to 12 cents now versus 11 cents, and about 26 cents for next year. It's trading at around 103 times forward earnings for this year, as well as about 44 times next year. Now, again, the issue really had been in the past, and I say the past because it seems like it's a turnaround story here for SoFi, so this may be promising a continuation play, is it hadn't been profitable, and it's actually been increasing its share count substantially. If you just go back to where it was in 2017, the share count had increased by 25-fold, but its revenues had only increased less than 5-fold. And the problem being is it has had to finance that net loss for so long and grow its capital base in terms of technologies and product offerings. It may have found an inflection point. So I think that's why they're buying it up today. It comes down to, it was a profitable quarter from a net income standpoint. Guidance was raised. And even going forward, they're expected to continue to be profitable in the next year. So it basically lessens the pressure on issuing of shares because they don't need to issue as many shares, and that share issuance is decelerating or slowing down. But the problem may still lie in the volatility because of the valuation. And just to give you some context on valuation, I'm just going to use the 2024's PE of 103. If you look at PayPal, which is a payment processing technology company, that stock is trading around 17 times forward earnings. If you look at JP Morgan, which we all know is a major international commercial depository bank, it's trading around 11 times forward earnings. So the problem still lies with SoFi is it's expensive on a forward multiple basis, but the profitability profile is improving, which is meaningful.
Yeah, I noticed that because, as you mentioned, within the quarter they beat across a variety of metrics. It seemed to be that payment trends were improving, the charge-off rate was improving. Would those be viewed as tailwinds, though, outside of today?
I think so. I think that anytime you reduce the charge-offs and improve your credit allocation and credit quality, that manifests in a better earnings profile on a forward basis. Plus, they're still expected to grow revenues in the high 20% range. So Trailing revenues about 30%, still forward revenues at 28%. And I talk about this all the time with Alex and Jenny. Irrespective of revenues decelerating, that's fine, as long as it's being made up in accelerating earnings growth, which seems to be the case for so far.
And George, a stock's run a long ways in a hurry when the CEO of the company flat out says, hey, our stock's down today because it went up 40% in the last month. That doesn't happen all that often from the leadership of the company.
Yeah.
And hey, they're probably right, to be completely honest with you. But hey, George Tillis, appreciate it as always, senior markets correspondent for the Schwab Network. Diane, any final thoughts on the market day, how it's shaping up? Is it the calm before the storm?
It looks like it is the case. I mean, we continue to see similar action to how we started at the top of the show. That mixed market action really seems to be, in a play. Continuing at the moment with tech, NASDAQ being the leader, and I think that will hold up to be the case through the close today until we start hearing from those heavy hitters. First up.
I'm looking forward to it. Hey, and storm doesn't mean bad. It just means movement. I'm looking for some movement here, Diana. Appreciate you joining me for the hour. Diane King Hall, of course. You see her throughout the coverage on the Schwab Network each and every day. And thanks to you, the viewer, for tuning in every day and joining us here on Next Gen Investing. The watch list is up next.
This election season, stay out of the muck and the mudslinging with Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and the brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, away, off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
Have you set yourself up
As long as people want to buy it,
correctly?
it can go up.
No.
The Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
I want to say this is about the stupidest thing I've ever watched my whole entire life. I thought there's many of them that come from this here channel alone. When it comes to whoppers, and this one kind of disgusts me. Very unprofessional. Okie dokie. What's this there? Tell them to buy more Tesla? I will. Starting today. Them buy more Tesla. Sell into the news. A few of them were saying that. Oh, here's my little girl right here. That's what she has to say. I love what women have to say.
500, also new holdings and CrowdStrike. And our panel standing by to break down this morning's JOLTS report came in well below expectations. Fewer jobs than what were expected, in fact, at a 3.5-year low. Let's take a look here at the markets. We've had back and forth action. Started in the red, moved in the green, and then back into the red, at least right now. Looking at the Dow intraday chart, it's back down. It's down 72 points. Though, the S&P and NASDAQ are still gaining. The S&P's up 0.25% at 58.36. The NASDAQ
Tesla target?
0.86%, up 174 points at 20,525, making it the 9th day in a row for gains for that tech-heavy NASDAQ. Now, the small cap's down about 0.5%. Oil and gold are mixed because gold, I should note, hitting some new highs. It's at $27.81, up over $25. Oil is at $67.23. That's pulling back 15 cents.
SPY bounced right off that 6,200, like I said. Jimmy called.
Right? You say, whoa, that's.
It's right in here.
Bitcoin's had an incredible run, up about 150%. Is that right? 100 and something% over 1 year. Certainly an incredible move for Bitcoin. Let's get to.
You can say that again, girl.
Market here on Schwab Network. You have a few things you've been watching. How about McDonald's had its quarterly report?
Yeah.
What say you? What stands out?
Yeah.
Nicole, yeah, you know, after food safety concerns earlier in the week and last week, McDonald's came out with earnings today and actually did pretty well. $3.23 a share versus $3.18 expected. $6.9 billion in revenue versus $6.79 billion expected. The stock traded down as low as $2.86 pre-market and then was up on the day. Now down about around a dime as we get to the 2 o'clock hour Eastern time. But revenue growth 3%, U.S. comp stores plus 0.3%, and global comp store sales down 1.5%. But this is a stock, as you know, Nicole, that has traded on some food safety concerns, already $20 off its highs from just a short time ago. So, you know, absorbing a bunch of information here and actually hanging in there pretty tough today.
$20? Where are you coming from, brother?
Yeah, I mean, we're watching a lot of food names, right? Shake Shack and Wingstop and you know, a few others that are coming out, right? Yeah, big one, huge. And then to turn away from food for a moment, then you have tech highlights to watch, some of the big names getting us ready. How about AMD?
After the bell today, we start getting large cap tech earnings, starting with AMD and Google. First, we'll do AMD. They're expecting to make about 91 cents a share on revenues of about $6.71 billion. You know, the question they're going to have to ask and be asked and prove is, are they the strong Blackwell competitor? And they, you know, their MI325X chip, is it competitive and is it at a lower price? Can it compete with NVIDIA? So, you know, already a week or so ago, we had Taiwan Semi, which came out with some pretty good earnings. The bar here is pretty low as this stock is sold off and actually gone in a different direction than NVIDIA stock. So the bar is a bit low for AMD, and we'll see if this stock can impress, be the solid number 2 competitor in AI.
I see. And what about Alphabet Google? You're watching that as well, right?
Google Alphabet, another large cap tech coming out with earnings after the bell today. They're looking for $1.85. That would be a 19% increase on revenues of $86.2 billion. That would be a 13% increase. This stock, interestingly enough, because of Department of Justice and regulatory pressures, is the cheapest valuation of the Magnificent Seven. How about this stat, Nicole? Over the last 9 quarters, they have averaged buying between 15 and 16 billion dollars worth of stock per quarter. So this is a company buying a lot of their own stock back via repurchases. So it'll be interesting to see another stock where the bar is a bit low. And you can say that for a lot of large cap tech. So it's going to be an interesting day to see both these names, both of them significantly off their highs.
Yeah, understood. Kevin Hinks, great to see you. Always. Thanks so much. Appreciate it. Let's take a look at the bigger picture. Joining me now, Nick Tell, CEO at Armory Group. And we're going to talk a lot about the market, the election, the economy, some of the chaos maybe. Welcome.
Thank you,
nice
Nicole.
to see you.
Good to be here in
So
person.
where does your mind start here on this conversation?
I think there is right now a real question mark on what happens post-election, as we're seeing both candidates really putting politics ahead of good economic policy in order to get sound bites rather than sound economic policy for the economy going forward. And really the election is going to determine, once the candidate gets chosen, what the market's going to think about those policies and whether they think they're likely to actually happen.
Yeah, and that's the whole thing. I mean, I think that if you were to ask 10 people on the street, do politicians sometimes say things and then, you know, it's sort of muddled or it doesn't actually happen? It's not, it wouldn't be uncommon for many of those folks to say, yeah, you know, I mean, I think politicians do say some of that stuff. So now at this point now, you know, we have no real candidate that seems to be the clear winner, right? What kind of chaos could ensue? Because really, we have nothing to go by. We can't say the incumbent versus the newbie. The incumbent's not the incumbent, it's the vice president. The newbie's not the newbie, he's the former president.
That is correct.
So I feel like some of the comparisons are not identical either.
They're not, and I think chaos is a great word, because we've had chaos here, geopolitical chaos, and the Biden administration has not done a great job to help solve that. I'm not sure the other two, the new candidates, Harris and Trump, will do so either. But Trump, by definition, and I've had some personal experience with him, basically uses chaos as a negotiating strategy. And he looks at that as a way to confuse and to pit people against each other. And that's my biggest concern, is that there's already chaos in the world. Now we add chaos with candidates that basically that's what they intend to do as a strategy. And some of the policies that Trump is talking about are ones that he could actually implement on his own. Massive deportations, tariffs, without help, without the assistance of Congress. And that's really the types of challenges we've got if he gets elected, what impact it's going to have on the economy. It's all about sound bites, but ultimately it's going to create and basically create worse inflationary pressures. If they do mass deportations, we have, you know, basically an economy that'll grind to a halt, because those are important laborers for our economy. And so that's the uncertainty that's around this presidential candidate and this election, because it really is making a choice on what type of stability versus chaos that you're looking for.
Well, you've made it clear how you feel about a Trump administration. How do you feel about a Harris administration?
I think Harris is...
Because when they asked her, would you do anything differently, she said, I can't think of anything.
I know, that's, you know, talk about the mistake of the century for her candidacy to basically not in any way try to distinguish herself from the Biden administration in that interview. That was an easy layup question. I think at the end of the day, she will be different, but how different, we don't know. And so, but the fact is that stability is not a bad outcome. You know, things have improved significantly. Inflation is on the minds of all Americans, but you've had inflationary pressures declining. What you don't want to do is create issues that then can cause inflation getting worse again. And now it's just a question of, is stability better than instability and better than chaos? And so even some of her policies I don't agree with, but nevertheless, but they're going to require Congress, like, for example, price controls. Disgorgement of profits. Those are all nice sound bites, but at the end of the day, will only make inflationary pressures worse. And so I'm not a big fan of the policies, but nevertheless, I think that stability is going to come out of that election if she gets elected, where I think we'll have instability with Trump.
We might just get much of the same, and we're sort of plugging away, and folks may be okay with that.
But it's not a bad thing, you know, because right now with inflationary pressures declining and wages going up, Eventually,
you have
wages
the
will
national
catch
debt going up too.
Well, that's fiscal. That's a problem with both the Republicans and the Democrats. That's fiscal irresponsibility, simply because they're trying to.
Will
you
it
know,
go up more with one than the other?
I think they both will. I think neither one is fiscally responsible, you know.
Yeah.
And so they're going to have to deal with the fact that the spending is a way to sort of buy votes.
His argument pertaining to tariffs is he feels that GDP will be growing so quickly that the tariffs won't in fact cause inflation.
But again, tariffs only are relevant to the extent that the prices are too low, and as a result, manufacturing jobs, you know, go out of the country. But, so you already, by definition, have to increase pricing to make the jobs to come back. If that's your argument, that tariffs are that really it's an issue with cheap goods. And so that's where it doesn't make a lot of sense. Ultimately, manufacturing jobs
No, right,
back
that's
with
support.
tariffs, but that could take 10 years.
Yeah. Well, job openings at 3.5-year lows, confidence at 9-month highs. So you do
Spy
have
close
sort
to the
of
shoulder
that
line.
with,
Right. And
stuff
it's
happening.
not a bad thing, right? You know, where we're at right now.
For Trump, big picture, you know, some of the policies that he's trying to implement, he can also look to his past 4 years, where prior to COVID, we had a booming economy, wonderful employment for many different races, not just one. There were some bright spots to the Trump administration where they're not. Were you
Yeah,
doing
no,
research, right?
I can't.
And he didn't cause wars or cause a ton of crazy geopolitical chaos, did he?
He didn't, but at that point in time, you had the administration, and that's why 25 of his former administrators have said that they kept him in check. And a lot of the chaos that he was creating through his sort of statements were being kept in check by his administration.
Right.
I'm afraid that's not going to be the case. He's
Right.
learned his lesson, and so what he says he's going to do, I think he will do.
Right. And what's your biggest fear?
My biggest fear is, again, is the chaos that he creates by just talking about different extreme aspects, just resolving the Ukraine war, just simply for the sake of Ukraine, resolving the Ukraine, the massive deportations in order to solve for supposedly
But
the
why does
immigration
this matter
problems.
to the U.S.? You said the economy will go down with the massive deportations.
That's why it matters.
And what other Ukraine you mentioned?
Well, tariffs is the other that is
tariffs.
the tariffs.
So you're
and
worried about a recession
I'm worried,
under a Trump administration?
I'm worried about a weakening economy that comes as a result of all these statements that ultimately get implemented.
Nick Tell, CEO at Armory Group, thank you very much
Thanks for
being
having me.
here. Appreciate it. There you have it. Now we're a week away, folks. I mean, you have early voting underway, too. If you haven't voted yet, you probably can do so. Coming up, Options Corner, Tom White joins us to highlight unusual options activity from the day and how investors are looking to trade on recent news of Cisco Systems, Caterpillar, D.R. Horton. Stay with us.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Well. Kind of feeling something coming. Oh, this could be it.
Trading the trending names every day. I'm Tom White, host of
It
Fast
has to
Market.
hold here.
Ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. Time for Options Corner, where we analyze unusual options trades we're seeing throughout the day. For that, we welcome in Tom White, host of Fast Market here on Schwab Network. Good to see you, Tom White. A lot of interest in options trading, no doubt. Cisco Systems is the first name up where you found a bullish trade. Some of the background and what's on your mind here with this bullish trade.
The stock's still having a decent day, up over 1%. And I think this is on the back of their partner program announcement that came out after the close yesterday. They're having their summit going on right now. This is the biggest change to their partner program in 30 years, where they're going to start some modest investments of about $80 million into Cisco U and some of the other tools that they're going to use as they roll out AI. Now, you got to remember that Cisco, most of their customers are in the Fortune 500, the big global footprint. So as AI continues to roll out, Cisco is right there in the middle of it with their networking and their security offerings that they have. Now they're going to invest in that with their partners, expand their relationships with them. And this might allow for more cross-sell. They just recently came out with, rolled out some new incentives that are going for WebEx AI, other tools, AI Agent Studio, Cisco AI Assistant. So they're getting the mix of that networking portion of AI as maybe the picks and shovels where NVIDIA builds it. Cisco actually puts it out to their customers, and they're investing in that. So you're seeing a nice little pop in the stock. They don't report earnings until the 13th of November, so we've got a few weeks until that takes place. But you're seeing a nice 10% pop in the shares so far this year, and a really big ramp up since the last quarter. Their last earnings results were pretty big, and I think somebody's setting up for maybe some more positive sentiment in the shares because we saw some unusual call buying out in the January cycle, and this was in 57.5 strike calls. Trader bought over 10,000 of those, paid an average debit of about $1.73, so that break even of 59.23 over the next 80 days. That's about 3%, 4% above the current share price in there. So you don't need a big, massive move in there. They did sell out of a long existing stock, option position in the January 60 call. So keeping that same duration in the January cycle, but rolling the strike down to the 57.5. Call volume is about 3 times normal daily average volume that we've seen in Cisco over the last 5 trading days. So yeah, people piling in. Maybe this is going to be the next catalyst to the upside here in Cisco for the shares.
And as you said, so it doesn't need too much upside and has had an incredible run.
Right.
I mean, in 3 months, it's up 15% and hit some new highs. So a bullish trade there. Next up, Caterpillar. We're waiting on earnings on Caterpillar tomorrow morning, but you found a bearish trade.
Yeah, this stock's run up to close to all-time highs. It's pulled back here over the last week, but we did just hit those all-time highs above $400 a share recently. This has been on a tear, even though a lot of the data on the manufacturing side has been relatively weak. We've seen PMIs and ISMs on the manufacturing side below the 50 level, so they're not expanding, they're actually contracting at this point. And if you looked at some of the recent data points as far as the manufacturing numbers, the new order segment, which Caterpillar relies heavily on, have actually been below 50 also. So contraction there, but the stock doesn't seem to care because it's had a pretty good run, up about 31% so far this year, just below the all-time high of $403. Now, they got earnings, as you mentioned, tomorrow morning ahead of the bell. The option market's only pricing in a plus or minus 3.5% move. It typically isn't a massive mover on earnings, but now I think something's different taking place here, Nicole, is that the bar is really high going into these results. Now, last quarter, they announced that they had a $28 billion backlog but new orders aren't maybe coming in. The macroeconomic environment maybe not conducive. I think that's what's setting up for Caterpillar, and I think that's the way this trader is setting up, because we saw some unusual option activity in really near-term options. I think this is an earnings play that this trader put on, where they're buying a put vertical that's slightly out of the money to the downside, with the expectations that, hey, this stock's going to fall post earnings. Morgan Stanley just recently, about a week and a half ago, downgraded the shares to equal weight, or to underweight from equal weight. They put a $332 price target. They lowered it from $349. So maybe sentiment a little bit too high going into these results, but the unusual option activity I spotted was in the November 1st weekly cycle. They bought a $15 wide bearish put vertical. They bought the 380 strike put, sold the 365 strike put 2,500 times, paid an average debit just below $4 on these. So the break even for this trader, he needs it to go under 376 over the next 3 days. That's only about 3% below the current share price, about what that one standard deviation move is expected according to the pricing in the option market. But put volume is about 3 times normal daily average volume in there that we've seen over the last week of trading. So somebody putting out an earnings play here with expectations that, hey, this stock's going to go lower post earnings.
Yeah, and look, I mean, we've seen a lot of stocks going lower post earnings, even ones that were a double beat and raising guidance, right?
Yeah, and I think that's you make a good point, because we've talked about this a lot on the other shows, is high bar and low bar. Well, Caterpillar's got a high bar. The stock's up over 30% this year, just off all-time high. So the bar's high in here, and we've seen that. D.R. Horton, that stock cratering today. It wasn't a good report, but the bar was high. That stock was just off all-time highs. American Express sold off. GE sold off post-earnings. So, yeah, a lot of names that with expectations maybe already built into them saw some profit-taking and pullbacks in stocks, even though some of the reports were good.
Yeah, and I wonder, too, how the FTC's probe into Deere and the repair policies that Deere has had, if that will have any effect at all on Caterpillar. I mean, I think about China, I think about industrials, I think about agriculture, I think about all these things that can move Caterpillar one way or the other, but also something like Deere's story on repairs being probed. I wonder what it could mean. Any final thoughts here?
No, I think that you make a good point, because that's a high margin part of their business. Just like John Deere is the servicing of this equipment that they sell, and we see that out of GE, and that's why the stock has done so well. It's not just the sales of what they're making, it's the actual servicing and the contracts that they have with some of their customers in that realm. That's really high margin business. That's been driving maybe a lot of the gains here in Caterpillar, but we'll have to wait and see. We'll find out more tomorrow morning.
Yeah, all right, next up we look at the home builder, we look at D.R. Horton, which had a miss and actually is selling off the most it's seen since 2020, so in many years, at least, right? At least 4 roughly. And there was a lot of optimism surrounding a lot of these home builders, and with the rate environment, but now not so much. What stood out to you?
Well, what stood out to me was just the decrease in guidance that the company gave. I think they're moving forward, they're expected to make $38 billion, and they actually lowered that for the next fiscal year to $36 to $37.5 billion. So they're lowering guidance. They missed on revenue. They missed on EPS. The CEO basically came out with some commentary that affordability is still an issue, and I think the big story behind some of the home builders has been those rate cuts, right? They want the rate cuts. There's not enough supply. They're going to sell more. The mortgage market's going to start to explode with lower rates. Well, Nicole, the 10-year yield, which the 30-year mortgage rate is based off of, is up 60 basis points since the Fed cut 50 basis points. So that's putting some headwinds into the affordability. And then you go back to the home prices. Those are still at or near all-time highs. So that affordability that the CEO of D.R. Horton mentioned is coming into play here, where people can't move because they just can't afford it at this point now. They've given some breaks to buyers on their mortgage rates, giving them some incentives where they can get in lower than the 6.5% or 7% 30-year mortgage rate. So that shrinks margins also. So that's a concern for this company moving forward. but that's why you're seeing the 8% pullback in the shares today, and some of the other home builders, which the bar has been really high, are pulling back also. But one of the unusual option activity that stuck out to me today in here, and not only in D.R. Horton, Lennar, we saw some call sellers too, but out in the November 15th monthly cycle, so just 17 days to expiration, a trader came in and sold, just out of the money call, sold 10,000 of the 165 strike calls, collected a credit of $4.10. So that means this trader will profit as long as the stock remains below the break even of 169.10 over the next 2.5 weeks. That's only about 2.5% above the current share price. Call volume about 10 times normal daily average volume. So this trader is taking advantage of the pullback, selling out of the money calls with the expectations that the stock's going to settle, move lower, or maybe go a little bit higher, just remain below that 169.10 break even.
All right, Tom White, a good look there at three important names: Cisco Systems, Caterpillar, D.R. Horton, finding some trades for us, options trades, real trades. Tom White, great to see you. Thank you so much,
Thanks.
Tom. Coming up, we will focus on the cannabis space ahead of the election, right? We're about a week away. It's exactly 1 week away from today. Each candidate setting its policies for a little bit of everything, including the marijuana industry. So what do we need to know? Stay with us.
Trading at Schwab is powered by Ameritrade, bringing you futures and Forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
This election season, stay out of the muck and the mudsling. Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. I'm Nicole Penelides, live on the floor of the New York Stock Exchange. We have a few movers for you in the market right now. We're watching VF Corp. That's the owner of Vans, North Face. A lot of great retailers. It's moving higher today after reporting its second quarter earnings. The adjusted numbers, the earnings came in at 60 cents a share, beating the estimates of 38 cents. Revenue, 2.76 billion, narrowly beating estimates of 2.72
I apologize.
billion. The company said it was able to cut debt after this month's sale of its Supreme clothing brand to EssilorLuxottica. The CEO of VF Corp saying he feels good about where the company is headed next quarter. PayPal sliding today after reporting mixed earnings for the fiscal third quarter. The fintech company reported adjusted earnings of $1.20 a share, beating estimates of $1.07. Revenue $7.85 billion, missed 7.88 estimates. And despite the revenue miss, PayPal's payment volume increased 9%. Its transaction margin dollars rose for its fiscal year, now expects adjusted earnings per share to grow in the high teens compared to the earlier forecast, of low to mid-teens growth. All right, it's time to focus on cannabis. The election is upon us, right? It's a week away. What is everyone in the marijuana industry saying? What do they expect? What are they hoping for? Joining me right now, our next guest, Morgan Paxia is with us.
That is funny as
Co-founder,
heck.
Managing Director of Poseidon
I just said that.
Management. Thank you so much for being with us. I want to take a moment to try and go over the policies of each candidate.
Okay, I've
In the
had too
meantime,
much.
People should know cannabis stocks. While some of them may have
them all.
state wins, the last 6 months have been particularly tough. I was looking at Tilray down 30%,
Yep.
Canopy down 60%, MJ down 30%. So it certainly Curaleaf is down 50%. So the group in 6 months has come off the highs, but many in 1 year are still higher than 1 year ago. What say you about the group, and does one candidate stand out in a better way and, brighter
goes the
eyes
spy.
for someone in the cannabis industry?
Right, that resistance line.
The great thing about this national election is both candidates
Resistance,
have
I
a
hear.
position on cannabis for the first time, since this was made illegal many years ago.
Oh, yeah?
Each candidate has a different position, which is also good from a voter's perspective. They have some choice here. Trump's position is more of a incremental progress he's in favor of rescheduling cannabis to Schedule 3, which we are seeing progress on that. We'll have a hearing with the ALJ on December 2nd. He's also pro-states' rights. He said he would vote in favor of Florida's adult use legalization initiative, which we are obviously in support of as well. Kamala Harris' position is more of a comprehensive federal legalization. Has even made her top 6 priorities of things that she wants to accomplish should she win. So in either situation, the industry is finally being recognized, at least from a political position, but we like to see how the actions follow the words around this. And certainly Florida is very much on our mind. Amendment 3 is a major initiative for our industry to see it pass. It requires 60% voter approval, and polling does seem pretty good, but as you said, we're a week away, and it still feels like that race is very intense. Governor DeSantis has become quite vocal on the matter.
Well, you would love if federal legalization were to happen in an instant, right?
We would. Our industry is still very young, so we think intra-state, which means within the 4 walls of the border of each state, maintaining its own program but having federal recognition is probably the better move forward for this industry at this point. As a good example, we have this Farm Bill hemp, intoxicating hemp, that's proliferated in the country without any regulations, and it's really hard for these states to enforce it. The federal government is nowhere to be seen on it, and it's causing a lot of noise. And so that's why we think it's better for the states to be able to maintain programs but have that federal recognition. Even if we get rescheduling, say in the next 6 months, that doesn't necessarily mean we get banking access. It doesn't mean that we get capital markets access. And these are reforms that are badly needed, and Congress has not been able to get anything done, even in the most simplistic banking reform in our industry in over a decade. So though we want federal legalization, we just want to be realistic about how this gets done, and that it's in the best interest of letting a legal industry thrive and not have competition from illicit or bad actors.
We've shown so many names while you've been speaking, cannabis names, some here at home, some in Canada. Are there clear leaders in the group in your mind in the next, year or so going forward, the ones that are really the leaders?
Right. Well, the Canadian names are largely not a part of the U.S., right? So like you mentioned, like Tilray being down 30%, I'm sure they've been expanding into alcohol, right, with their beer brands, but they don't really have U.S. exposure. Canopy has created this Canopy USA entity with some assets that they're trying to consolidate. But then from the U.S. side, obviously we look at we're fundamentals. So we like companies like GTI that has really good management, great balance sheet, great capital allocation. and it really depends on how they're investing in these states. If you're looking for like a pure play on Florida, you see like a True Leave, which has done very well year to date, even though the stock is coming off a little bit as there is a little bit of uncertainty going into this final week. Some of the Florida names have been or more Florida heavy names like a True Leave or an Air Wellness. They have been selling off a bit. But this industry, you know, we need some federal reform because we need these companies to be able to not basically hand over all of their cash back over to the government, but to be able to reinvest that into growth and to being able to be more shareholder friendly. But even independent of that, you know, like Green Thumb Industries is just the best of breed in our industry.
Yeah. Look, I don't know if you can recommend or not recommend specific stocks or the ETFs. Should everybody have cannabis in their portfolio? I mean, should it be a big allocation, a small allocation? And what kinds of pot stocks should they own?
Yeah, there's quite a dispersion in how these companies look at this point because we've had a lack of capital flow into our industry for a long time. I certainly have probably a disproportionate amount of my net worth associated with this industry, but it is emerging. There's companies that will not make it through. So investors should be cognizant that you know, there are risks to an emerging industry, and certainly we get some federal reform, and these things will likely trade a lot higher, but we don't know when those things will happen. So that's why we like the fundamentals. We like to look at the companies and who's actually driving value, you know, with the shareholders in mind. And most of the companies out there in this industry are not necessarily doing that, but there are a few that are definitely, you know, doing well.
And getting federal, you said as soon as we get federal reform, surely they'll move higher. I don't disagree. Sounds like a plan. But trying to get federal reform is incredibly difficult. You know, depending on who's on each side, forget about, you know, okay, you need Harris probably in the White House, but you got to see who's on both sides of the aisle and, you know, in Congress, because to get sweeping okays is probably not likely to happen so fast. But that being said, are you a believer in cannabis stocks? Would you tell people to buy them today?
I'm a believer that there are some really great opportunities in this industry. I don't think it's a blanket statement. I think you just have to be, you know, we're sector specialists, right? So we have a really good insight into both public companies and private companies. But one area that we are actually most excited about seeing progress in actually changing how this country works with cannabis is the Commerce Clause lawsuit, where the industry is actually suing the federal government and the Attorney General. That's being led by the Boyd Schiller Flexner law firm, who is an incredible law firm with taking matters all the way to the Supreme Court and winning. And we have actually the next step in that is we have oral arguments in the federal court, the First Circuit Court, December 5th. So that lawsuit is progressing, and I think that is really a change agent for this industry.
Yeah, that's an important point. December 5th, so we'll wait for that too. But that could be big news, right? That could be big news that day. Thank you so much, Morgan. Great to chat with you. Morgan Paxia, Poseidon Investment Management. Thank you. Still ahead, Technical Tuesday. Kevin Horner is standing by. I'll take a look at key trends. What's happening in the S&P 500? New holdings. CrowdStrike. We'll be right back.
Jimmy liked that one. Didn't really have much to say about it though. Spies triple topping. Spy triple top. Riding deep. GoCo. Wonder where Mike is. Okay.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the watch list. It's time for a Technical Tuesday. We have some stocks to watch, the charts to watch. Joining me for this, Kevin Horner, as he does every Tuesday, Senior Manager, Trading Services Education at Charles Schwab. Good to see you. We're watching the S&P 500, the key levels. Wasn't that long ago, right? Middle of October, that it was hitting some new highs. What levels are you watching today?
Well, I probably fall into the watching too frequently camp here, Nicole. So daily chart, paying attention to that 20-day moving average. We actually tested it with today's intraday low, it looks like, and found buyers at that ledge right at what amounts to 5,800, basically. Pushed off it quite nicely. We're up about 20 points, and from that level at 5,800, we're up 44 points already. So a nice intraday move, and the candle looks beautifully green for the day. So we're going to watch that 20-day moving average. Something different would be a close below the 20-day moving average, which has not happened since we broke it to the upside back on September 12th. So we're going to continue to look for that. If we get weakness below the 20-day, I'm sure short-term traders are going to look to cover some of their longs potentially, given the opportunity that it could bring us back to the former highs, the breakout level we experienced in July. Which really we did not see a true break of until beginning of September, of course. So that would be around 56.65. That happens to be coincident with the 50-day moving average. So there's that zone of longer range support. And yet, Nicole, I keep putting those lower levels in, believing that at some point we're going to see this kind of pull back in a deeper manner. It just hasn't materialized. So I think for the short run, traders just got to keep a close eye on that 20-day and decide how they want to act the first time we close below it. Just hasn't happened for 6 weeks, so got to look for something different here.
Yeah, I mean, everybody's watching all the major averages to see. I mean, the Dow hit highs not that long ago. People are watching the NASDAQ composite to see if that's going to hit new highs even today after 90 days of gains. So a lot to watch here. New Holdings is a name on your list today. Why are we focusing on this name here for Technical Tuesday?
Well, longer range traders may have been paying attention to this. It's up about 95% year to date when I was writing my notes this morning. But the reason it made my list was because of the move it made yesterday, breaking out from a nice $2 range of consolidation the stock made after bouncing really, really strongly in mid-July to create a new level of resistance. We banged our heads on $15 a share 2 to 3 different times over the last couple of months, and yesterday's price action finally broke it to the upside. And so traders in the short run are probably wondering, does this have legs? Can it start to continue to trend from here, which would require working against something like a short-term moving average, perhaps a 10-day, which would be very speedy, maybe a 20-day, a little more proper time frame for most traders. But you know, getting started early on a breakout like this is common, but it's just as common for a trader to be patient and let the stock get thrown back to the breakout level at $15, which is always a possibility. And so some traders might start small, take a small position of 20-25% of what they want, see if it can continue to push higher, see if it just runs away from this range of $2 that it established. That's entirely possible, as much as it's possible it could get thrown back and offer bulls a confirmed entry, if you will, after having tested the $15 ledge of possible support. So a few different ways to look at it, but breaking a $2 range certainly for 2 days looks bullish in the short term here on new holdings.
Okay, look, especially as it's hitting some new highs, definitely worth noting there. Last but not least, we look at CrowdStrike, which, in the summertime hit a new high of nearly $400, but then sort of came down, trying to claw its way back. Some of your thoughts on CrowdStrike?
Well, we give up 50% of the move, right? We had a pullback of 50% from the peaks we saw in July to that August low following the global technology issue that hampered so many people, so many groups, areas of the market, domestically and internationally both. And the rally back has been nearly 50% as well, and yet we are at a very important level. A lot of traders watching this 324 level. We got to it, retreated, so it looked like we might be trying to work into the gap zone and start filling, but it didn't last, it didn't hold. What bulls are going to suggest is that we pulled back to make another higher low, which does bode favorably. The trouble here is that we have the potential to run to 324 again and again fail. And if we failed at 324 once more, we are getting a little long in the tooth for the rally back to have additional legs. So the concern could be if we can't get through 324, that we
146, 246
breaking down. Of course, if we get through 324, then you're going to see the bulls come in here stronger. But ultimately, that's really the short-term level we're probably watching here. There's proper risk versus reward even now.
Apple had a good little squeeze out of the flag.
The trader has to believe on the long side, if they're bullish here, while that risk reward might be good, they have to believe that it's going to break higher, because ultimately, if it's going to meet resistance, that's not proper risk versus reward here. So bulls can be patient. Wait for the close over 324 would be a better entry here. But if you're feeling a little aggressive, you do have proper risk versus reward with a belief that you're going higher. It really is kind of right in the middle of things here. But I had to bring it up because that 324 level is so important historically to what we've seen over the last 4 months or so.
All right, Kevin Horner, great to have you on always. Every Tuesday, Technical Tuesday, looking at names we care about. And of course, the global outage, that global IT outage was huge. What a debacle that was. And as you noted, trying to, come back from that. Thank you so much, Kevin Horner, Charles Schwab. Good to see you. Good Technical Tuesday. Still ahead, we'll bring in our panel talk all about the JOLTS report, the job openings, the quits, the layoffs, what you need to know.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab. Schwab, a modern approach to wealth management.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading.
and sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to the watch list. Time to focus on this morning's labor data, looking at the JOLTS report. That's job openings. And those numbers, in fact, the fewest job openings since January of 2021. Surprised folks. So what does it mean here? And what's our interpretation going forward about labor, about our economy? Noah Yosef's with us, Chief Economist, Head of Research at American Staffing Association, and Jordan Shapiro, Senior Managing Director, Head of Financial Services at Bach Rock Group. Thank you so much for being with us. Noah, what stood out to you? I mean, are you worried at this point that we do have a slower economy, that these numbers can start to come down, whether it's jobs that are created and job openings will continue to go lower, or what say you?
Good question, Nicole. So prior to the month of October, we saw that labor market churn was really defined by two key trends. The first being a decline within new opportunities on the labor market, as shown by job openings as well as hires. The other key trend was a stagnation within separations from the workforce, as shown by quits as well as layoffs. And so in that context, what we see within September's JOLTS data is really an acceleration within both those two trends to the downside. We saw that job openings decelerate by about 400,000 new opportunities. In addition, we saw that layoffs ticked upward by about 200,000 existing positions. Now, it's important to take these numbers with a grain of salt, because over the past month, the labor market was hit with a 1-2 punch of $2 billion hurricanes, in addition to temporary, however extensive, labor strikes. Therefore, what we're seeing is that the cadence of cooling within the labor market is likely milder than what the JOLTS numbers are showing. However, it is going to take a while for these trends to be accurately reflected within future labor data.
You know, as we're talking, it says Visa plans to lay off around 1,400 employees and contractors. It's restructuring its international business, so there are some layoffs there. But the layoffs, which did tick higher, historically are not particularly high. It almost feels like, are we at this sort of Goldilocks spot? I don't know. Jordan, what do you think?
While the initial reaction to this morning's jobs reports was slightly negative, I don't view this as anything more than a return to a more normal labor and hiring environment here in the United States. It's important to recognize there's some duality in these numbers as well. If you look at knowledge workers or highly compensated workers, particularly in these sectors of finance and insurance and professional services, we added nearly 150,000 new job openings in those sectors, while we did see decreases in your typical hourly wage sectors of hospitality and leisure. The 400,000 jobs isn't particularly concerning to me because we still maintain a historically low level of unemployment, and this relative stagnation in job openings will also have an effect of cooling wages and, in some aspects, reducing some of the competition for some of these highly skilled and highly compensated workers. We've seen wage growth significantly in the post-COVID recovery years, and that has been a contributing factor to inflation. A slight cooling of the job market, fewer leavers, fewer quits, fewer people changing jobs will mean that there will be less competition for employers. That will drive down wages overall, make talent, in some instances, easier to acquire.
Yeah, look, we'll continue to get more on this, but within the report, what was interesting, you mentioned some of the quits. Look, there's fewer quits, but that's also because, as you both well know, like, wage growth is not soaring. It doesn't say, hey, I'm going to quit job A and go to job B because I'm going to get so much more money. That's not happening, so it doesn't inspire somebody to quit so easily. At the same time, with higher rates, maybe employers feel a little more confident. So it's hard to know. So you have slower wage growth, which is probably good. You don't want wages soaring. That's inflationary. if employers feel confident, you know, what do we say here, Noah?
Well, I think it's exactly what you said, Nicole, and that is the fact that as the labor market continues to cool, we are still seeing a slower amount of labor churn. Employers are not as willing as they once were to bring on new headcount, and similarly, employees are reading the tea leaf and they are less confident about their chances on the labor market at large. What this all suggests is that the balance of risks is still tilted in favor of the labor market. Even within last month's blowout jobs report, we still saw a concentrated amount of non-farm payroll gains within just a handful of sectors. Quite similarly, we also saw that wage growth accelerate very modestly compared to years past. And so therefore, I would expect a data-driven and recently labor-conscious Fed to still pencil in a 25 basis point rate cut when it next meets in November.
Yeah. Jordan, just a couple of seconds left. Quickly, final thought. That's anything you want to add in here?
I think it's important to understand that this is a strong labor market in the U.S. and job seekers with skills and even those who work in hourly positions still have better opportunities than they have in any of the prior years as we continue through the post-COVID recovery. A healthy labor market should have a balance of job seekers, quitters, openings, and companies hiring. And the 7.5 million openings level combined with today's unemployment rate tells me that we are in a very healthy labor market. And I expect that to continue to normalize, which will have the effect of keeping wages steady and allow companies to continue to grow strategically as they look to hire.
Jordan Shapiro, Noah Yosef, thank you. Good look there at the labor market right now. That's the watch list. I'm Nicole Petalides. Thanks for being with me. Keep it right here. Market on Close with Oliver Rennick next.
This election season, stay out of the muck and the mudsling with Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, away off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's no
anywhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in. Good afternoon. Welcome to Market on Close on the Schwab Network. I'm Oliver Rennick. Thanks for tuning in. Hour left in the session. Pretty fun one here. We're getting warmed up as the next 10 days are sure to be exciting. Starting to see some of that percolate through the market as we do have some earnings. A couple pretty big moves, a little bit of volatility, finally a little pushback on bonds. So a few things to go through here as we do have earnings this afternoon with Advanced Micro. That's going to be a fun one. Alphabet 2. Visa, don't forget about it. And Chipotle for your brisket check-in.
AMD.
Gotta recommend it. Not the stock, of course, but the brisket. Don't think there's any anti-brisket compliance rules. All right, Russell down about 40 bips right now. That's not too big of a deal. Had a pretty good start to the Russell earlier this week, so just kind of giving some of that back. The NASDAQ is where the money's at. That's what really counts. Big tech with a pretty good session here. That is up 2%. Everything but Tesla higher across those companies. Of course, Tesla's earnings behind it, so might see some more interest in some of the other names here. Probably let that one go for now.
Now Power Hour.
It's going to be hot and new. Alphabet's going to have to prove its search business is not being encroached upon by AI.
Yep.
Folks like Zuckerberg and others who would like a piece of
Prove it.
So the tech story is going to be a little bit mixed, but it's been that way. Keep in mind that the last 3 months hasn't
Prove
been
it first.
necessarily that's driven the rally. It hasn't detracted from it, but that broadening out of the rally, some of the breadth and advanced decline ratios, whatever you look at that shows something outside Mag 7, it's been solid. Now the economic situation has also been solid. Today we saw a little bit of a miss with the job openings, and so we have yields coming in a tad with bonds rallying back from early weakness. That's pretty notable. Biggest move though is in Bitcoin. Let's talk crypto for a second here. I'm not really a big believer that there is political implication within the market right now. There's certain things you could argue, as some of the betting markets have skewed even further one direction, but that might not apply to the Bitcoin thing. In other words, politics might be showing up there. Now, at the same time, though, there's other evidence that we've just got some frothing up in general happening, so I would still be careful about tying things to politics. Obviously, the Republicans are talking a lot more favorably about crypto and Bitcoin, and so if the betting markets do skew further in that direction, which they kind of are right now, then okay, fine, willing to make that argument. It's not an unreasonable one. However, usually with markets, it's just easier to kind of go with the stuff that fits together with everything else, and what fits together everywhere else is that there's risk-taking happening. Stocks are near at highs. The big tech category is about to break out. We've had tons of gains in gold and other assets already, so Bitcoin is now kind of catching up in a way, considering the last 9 months. It's been stuck in that little downtrend up there, so it got out of that downtrend. Now the big question is if this near-term breakout is going to turn into a new trading range beyond the range that has been since the old highs, that mid-70-ish record. Keep in mind that every time we've made highs since Bitcoin started trading with the 6 handle, the relative strength has actually ebbed with each successive new high. So that bottom line there, the RSI, you want to see it pick up again, and you want to see momentum build to launch this thing like it has in the past. So that's what I'm watching for that. And it's possible that it could be a political scenario that's getting priced in, but right now you don't really need a whole lot of outside information to explain what's been happening in markets. The chip makers are rallying too. Semiconductors are really the heart of the tech trade and really the key to the market. Alongside the Mag 7, they both have been obviously huge winners on the year, and they are still holding up and looking good, trending higher. They're almost actually perfectly equivalent now, percent change on the year. Not a coincidence, given the connection fundamentally between the Mag 7 companies and semiconductors. We're up 51% on the year. So you don't really need to search too far beyond the basic fundamentals to explain market strength. Economic data continue to surprise. The confidence levels skyrocketed according to this morning's consumer confidence figure. So all of that generally checks out when you look at economic data that have been holding in. We did see that the job openings came in a tad. Those have been generally trending downward, but the market is also still expecting to get cuts from the Fed, even though the economic data have been beating expectations. We got the 50 basis points, and the Fed didn't seem to blink an eye about that. Now the market's assuming we get another 25 after the election, quite literally the day after. So generally there's plenty of bull case here across risk assets. Now next week, and we'll see what happens to volatility. There's certainly, I think, still an argument to be made that you can get a little extra of this if things go smoothly in the election. Volatility drops afterwards is an easy scenario to imagine if it's not a wild situation or it gets contested, etc. So it still argues some of that, but right now, with continuing strength in the economic data, we had a little sell-off in the housing market after DHI earnings, but for the most part, that's been very reliable. So the market pushing back somewhat on the recent bond selling today with yields coming in, and you can trace that back to jolts, basically. It's a notable bond rally, but also within trend too. Bonds have generally been selling off, but today, a big reversal in treasuries is interesting. Let's see if it develops into something. A lot of the session still feels like kind of a warm-up for the main act. You've got 3 sectors higher. They are the important ones. Perhaps also that most sectors are down today. Also gives you a reason to perhaps buy bonds a little bit. I got Kevin Hanks here with me in studio. Host of Fast Market.
It's on my headline.
Yeah, which one?
How do you get the S&P to go up 1/3% when 8 sectors are down?
Yeah.
And that is, as long as 2 of them are communication services and information technology, you can manage that.
Big tech, baby.
Yeah.
Some days we've had
left side of the visualize tab. It's incredible that much covers so little in terms of sectors.
100%.
Yeah.
That's where we've got so much going on, the next week or so. But it seems like to me, if you go Occam's razor, simplest explanation for why generally you've got risk assets doing well. It seems to me like it's because we've got big tech companies about to report, and they haven't really been missing that much this year.
Yes. Here's the thing. I think the third quarter, most big tech consolidated across the board. Google, Alphabet, AMD, bar pretty low on both those names going into earnings today. NVIDIA is about the same price it was in June.
Yeah.
So I think this is going to get, if you want this market to go higher, this is the group that has to do it.
Yep.
And it started today, and is it going to happen? I don't know. But here's the fun part. You get the long list of names coming out with earnings today, they all funnel into NVIDIA.
It's really true.
There's the byproduct
week.
of everything we're going to talk about today. NVIDIA's going to trade with it.
It's a different situation for markets that we're kind of used to by now.
Yeah.
You sort of have to be still reminded of it every season because the market has never had that degree of concentration to this extent that moves, that skews the market cap. I mean, you still have to go back to the 70s, 80s for like the Nifty 50, but then it was different because a lot of those companies were being broken up too. We've accumulated market cap mass in a handful of companies, and all of them are so connected that this week is sort of an implicit NVIDIA update in many ways.
There's things I have not seen in my 40 years in this business. One of them is I've never seen income and outlays come out right before payrolls, and I've never seen so many large cap companies all being the top customers of one company.
Right.
And how all their earnings, and it's all going to be a CapEx story, and it's all going to feed into NVIDIA. It's why I love this business.
And NVIDIA's up $1.50 right now, 1%.
What can get it to finally break away from 140?
Yeah.
Maybe this.
Yeah. This is going to be a point of the market that obviously could be very much a sort of make or break situation because, to your point, I mean, that's all kind of built up on each other. The interrelatedness of these companies, key man risk, if you will. But the message also is that there's a lot of confidence. I mean, literally look at the confidence number from today.
Yeah.
Look at the charts of these companies at or near highs for the most part. And then the other stuff around the edges, like the crypto markets picking up and whatnot.
crypto market is some story. I don't know what
I'm
it
with
is
you there.
because I'm not an expert.
It might be a
there,
Trump thing.
But that is
it might be.
There's something going on.
For sure. Out of all the possible places where you might see politics show up,
yeah,
it's going to be in the thing where it moves the most on how much people talk about it.
Yeah.
So that I get, right? We might be able to remove that for a second. Today, bonds rallying back. What do you think about that, given the strength of consumer confidence?
I thought it was, if you look at the 1 minute charts, where if you want to check a move on something, go to the 1 minute charts. It was the auction at noon. We got the results of the auction. Pretty strong bid, and I think that put a bid in notes across the board.
The 7-year.
Yields come down. Yeah, it was a 7-year, but it correlated pretty high to the 10-year.
Yeah.
And I think they bought the 10-year based on that.
Well, in the last time,
theory.
No, I think you're totally right. By the way, we've also seen the 7 years move the market in the past. 3.668 was the high in the previous auction. This one was 4.2. So I think people basically saw that and came in to scoop up what they saw as
You can lock
a deal.
4.2 yield.
Yeah.
I'm sure there was some demand for that.
Yeah, exactly. So demand rose, and we did also see bid to cover was 2.74, 2.63 previous auctions. So timing-wise, I think it also aligned with that. Trend obviously has been on the bearish side for bonds. Next 2 days, probably as equivalent of ranking data on the economy as for the stock market.
Yeah, the last 7-year bond, what was the yield, like 3.66?
Exactly.
So if you like 3.66, you gotta love 4.2.
Exactly. So that part I get. Are we going to be able to keep that going through the big pieces of data the next 2 days, though?
Yeah, show me the data and I'll show you if we're going to hold on to that. I mean, some of the expectations for payrolls are pretty muted in terms of jobs, but pretty firm in terms of inflation. So where does that fall in terms of bonds? It's hard to say.
Yeah.
You got to wait for the numbers. You got to trade them.
All right, GDP update, and then obviously we've got inflation, which is going to be big.
GDP looking around 3.
GDP looking pretty nice.
Yeah.
I do wonder, like, if the market right now is 100% odds of that 25 bips the day after the election.
Yeah.
That seems like the weakest 100 that I've ever seen before.
Well, it certainly doesn't. It certainly seems like a number that needs this data not to be where it's about to come in.
Right.
It's one of those. If it comes in here, you got to think that number's going to shrink.
I mean, if you look at since the initial cut, we've seen rates go like this. And by the way, I think it's perfectly explainable. And we talked about here why yields could go up, but it's really not happened before. Usually when they're cutting, it's a totally different scenario.
There can often be a bounce off of like a rate cut because it's anticipated, and then it gets overdone, and there's a little correction. Not this much of a correction.
This is telling us that they're that they're stimulated basically.
Yeah.
So then I guess if they are in that thesis still, they'll do it again. But then you would think yields would go bananas.
So, and I'd like to see Jerome Powell with a lie detector going, if you knew all the data now and knew this was going here, would you have cut by 50 basis points?
Yeah.
And see what he would say.
Yeah.
It's a pretty interesting conversation.
For sure. All right, well, we're going to have with our guest too. Thanks, Kevin Hanks.
Yep.
Good setup for the session. A little bit of pushback for some recent trends with bonds rallying for a change. But equity is still holding up pretty solid thanks to tech. Joining us, Kevin Nicholson is a global fixed income CIO at Riverfront Investment Group. Kevin, welcome back to the show.
Thanks, Oliver. Thanks for having me.
Let's talk some bonds there. Obviously, we've been in the middle of this big spike in rates for several weeks since the Fed cut. Seeing today, the 7-year auction of all things, maybe jolts put a bid. What do you think of the action today in bonds, Kevin?
Well, today we started off with upside pressure on bonds and yields were moving higher until we got that 7-year auction. And that 7-year auction was strong. It stopped short by 1.9 basis points. And so that just led to the demand for bonds. And I think that is what turned the market around today. But overall, we still see that there's going to be upside pressure on bonds going forward.
Think it's sustainable? It sounds like you think going forward, so upside pressure for yields, you think we're going to keep selling bonds, or you think today might change the course and we get some buying pressure?
No, I think that we're still going to see yields go higher ultimately. Okay. When you look at, the day after the Fed cut, or the week after the Fed cut, I wrote a piece and I said that we were going to see a bifurcated market where the front end of the curve was going to come down and the long end of the curve was going to go higher. And the reason that I say that is because assuming that the Fed gets to a 3% neutral rate, if they do that, if we look historically over the last 40 years, there has been a spread differential of roughly 143 basis points median between the 10-year and Fed funds. So our forecast is to see Fed funds hit 3%, as the neutral rate, and then see the 10-year go up to about 4.5%. And if the Fed has neutral rate higher than that, then we will see the 10-year somewhere a little bit north of that 4.5% range.
Okay, really good call, by the way, because that's the bear steepening that we got. What kind of data do you think need to arrive this week to corroborate that message of economic optimism that steepening seems to suggest? Kevin, do we need to see GDP surprise, hold above 3? Do we need to see employment print solid? Or if the Fed's going to cut again, can we just kind of ignore the data and ride with the stimulus they're giving us?
I think that it's going to be a combination of all of that. I think that the Fed is biased towards cutting, and so I think that we'll get a 25 basis point cut. However, I do think that we need to see the economic, GDP come in solid. And right now, I think even after today the GDP now building in net exports, they still are forecasting 2.8% GDP growth for Q3. So I think that we will see a solid GDP print, and I think that the jobs number, non-farm payroll, that's going to be the X factor. And unfortunately, because we've had 2 hurricanes, we've had, a very short-lived strike by the port workers, but we also have the Boeing strike. That report is going to be a little bit muddled, and it's going to be hard to see through the noise. So I'm kind of discounting the non-farm payroll number as really driving the Fed to a decision in the coming week.
Understood. Do you think there's any political pricing happening, any election bias in these markets at all right now, or can we explain this all through the Fed and the data, Kevin?
I hate to be political when I think about markets, because at the end of the day, I think that the market likes gridlock. But we are starting to, the market is starting to react as if there will be a sweep of one party or the other. So we will see what happens. But at the end of the day, I think that we're going to have gridlock, and it's going to help the overall markets, and it's going to help equity markets probably more so than fixed income markets, just because, the market likes certainty. And if we get gridlock, the market will know exactly what to expect.
And do you think that will lead to lower vol? What do you think right now in the market suggests such an outcome might be possible?
I think that ultimately it probably will lead to less volatility. Right now, I would say when you're looking at from the polls, it is it's a dead heat. So I hate to think that what we're seeing right now, as far as the markets
Well. What happened? Mr. Schwabi?
Schwab. I can get full service wealth management, advice, and trade on Thinkorswim.
You know, Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Oh.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Market on Close. Matt Bartolini joins us from State Street Global Advisors, Managing Director. Got some ETF talk ahead of us here. Matt, thanks for being back on the show. Good to see you again.
Yeah, thanks for having me.
Give us some of the year-to-date numbers real quick, and then we're going to get into a couple of specific funds you guys have been working on. But ETFs with stocks near highs and crypto prices rallying again and bonds getting juicy. I imagine the flows are flowing.
Yeah, I mean, the flows are great so far this year. We've had over $800 billion of inflows into the U.S.-listed ETF industry just year to date. But I think what is more interesting, if we look on a rolling 12-month basis, this was the first time last week where ETFs took in more than $1 trillion over any 12-month period ever. And that it really just shows the continued use case, but also how investors are deploying capital and using ETFs as that choice to allocate to both equities and fixed income, because for fixed income, those flows are already at records with over $220 billion so far this year.
Wow. So I knew those were juicy already, because that had kind of been one of the main themes of the year in our ETF talks. But now with rates turning around, I wonder if some of those flows might be stymied a bit.
No, I mean, I think
We're at resistance levels.
Allocating. Actively managed fixed income ETFs have taken in record flows, so that fixed income bucket is being spurred by areas that can maybe enhance that yield generation. But then we look at it from a sector perspective.
Same as SPX.
Credit strategies like bank loans, high yield, investment grade corporate bonds, convertibles. As a combined group, they have over $50 billion of inflows already this year. And it really is an overweight to credit, which I think speaks to the interest rate environment. Falling interest rate yields, falling yields on money markets and T-bills are pushing investors towards higher income solutions to earn that yield in this type of declining market environment.
Okay. So I guess, like we saw in the auction today, the flows will follow with the yields going higher too, because folks want to get that income. So I guess the kind of mindset might shift a little bit, but flows are still flows. All right, how about equity versus crypto? The year started off in ETFs with the launch of the Bitcoin funds. And now there is price action coming back up to new highs. So who wins out this time around?
Well, I mean, equities continue to take in the lion's share of the flows. So they have over $350 billion of inflows, particularly into U.S. equity exposures. There's been a lot of home bias because of the concentrated nature of market returns. So equities continue to be bid up within the ETF structure, just allocating more into those risk assets. But like you said, there was a launch of Bitcoin ETFs at the start of the year. That met some untapped demand, and we saw significant inflows into those structures. And we continue to see some inflows as the market continues to rally in the cryptocurrency space. But overall, I think the big takeaway from ETF investors is that ETFs are being used as the tool for action to allocate capital, because when we compare it to mutual funds have outflows so far this year. ETFs have over 800 billion of inflows, and they're being used to capture different macroeconomic exposures, thematic trends, and then just structure long-term portfolios as well.
Okay. Few funds that you guys have been working on as partners. Firstly, let me knock out the maybe slightly less exciting one, but I'm a municipal bond guy by background. So you guys have got a muni fund, My Income ETFs. Tell me about this real fast, Matt. Give me the 60 seconds on it.
Yeah, I mean, it's a suite of target maturity ETFs focused on municipal bonds, actively managed by our teams at State Street Global Advisors. And it is really trying to meet a challenge from investors of how to structure reliable cash flows at a time of elevated interest rate volatility. And we're doing that in these target maturity ETFs, and they're actively managed to maybe harness some of the mispricings and inefficiencies that we do see in the municipal and corporate bond market. So really interesting products at a time where you have declining rates, but also higher interest rate volatility.
All right, nice, fun stuff. Okay. And plenty of use for munis, of course. Just not quite as flashy as some of the stuff maybe you guys are partnering on with Galaxy, which is more crypto, blockchain miners and whatnot. I'm assuming going to be a little bit of a higher beta asset.
Oh yeah, I mean, so obviously there's the launch of spot crypto ETFs, and we continue to hear from investors that there's a challenge associated with investing in the broader ecosystem because many clients had a positive view on cryptocurrencies. And then how do you allocate to the firms that are underneath, supporting that infrastructure of the blockchain, of the digital asset ecosystem? So these funds are meant to sort of meet that challenge and meet investors where they are, providing a solution to invest in the entire digital asset ecosystem that includes cryptocurrencies, but also blockchain, miners, and other cryptocurrency infrastructure firms. Then we also have one version that it uses a dynamic options overlay program to manage some of the volatility because cryptocurrencies still have that sort of volatility component as a developing and complex asset class.
Okay. Now, how they compete and how do they compare to say just
227.
buying levered funds? I mean, there's like levered ETFs, single stocks for MicroStrategy now. I mean, if I want to get massive bang for my buck, there's a lot of competition out there now for in the crypto land for ETFs.
Yep.
Yeah, I mean, these are completely different. These are fundamentally driven portfolios managed by Galaxy, using their deep-rooted expertise and insights to manage and curate the portfolio, to find those opportunities of those firms on the leading edge of innovation within disruptive technologies like blockchain, AI, and other cryptocurrency infrastructure firms like data centers, high-performance computing. So they're completely different. They're going to be far more diversified than any single stock could be. And I think that's one of the big challenges from an individual investor perspective. You never want to get your theme call right and your stock call wrong by owning a single stock. So these Galaxy ETFs allow you to invest in this digital asset ecosystem sector and do it in a very diversified but actively managed way from experts who know potentially where to look.
The only catch I see that maybe I have a little block here as a crypto cynic, but for me, I've never really seen much diversification of returns across crypto assets. A lot of times they are pretty highly correlated. I mean, even if you look at the coins themselves, they all pretty much follow whatever Bitcoin does, and a lot of these stocks kind of to differing degrees of what type of beta you take on. It just seems like there's a lot of beta trade more is the question rather than alpha. Do you really think there's a lot of stock picking distinction? Are these companies going to go in different directions?
Oh, definitely. If you look at the broader market, the firms that are in these ETFs, they're not very well represented within your broad market capitalization portfolios. So they're a little bit of a hidden allocation there from that perspective. So you're going to get some diversification because you're going to look and feel very much like, or very different to the overall market itself. And then in terms of the beta of different coins, of course, those are going to be correlated. But if you look at the underlying holdings, there are energy firms in here, there are software firms, there are data REITs.
Yeah,
so it is all encompassing across the ecosystem.
Yeah, and you got some traditional, recognizable ones in there. In Deco, for example, Taiwan Semi, Micron's in the mix. But then, of course, you got Riot, got TeraWulf, you got Hut, a lot of miners that are going to be similar, but obviously there's management differences. So, all right, well pitched. Appreciate it, Matt. Thank you.
Thank you.
Good stuff. Matt Bartley, Managing Director, State Street Global Advisors. All right, a lot of new crypto methods to trade. Good timing for it, too. All right, when we come back, we're going to look at some options flows, going to figure out the levels to watch. S&P's 5840, kind of testing maybe some of the recent resistance levels, but the selling today has been in the Russell. S&P's getting dragged higher by big tech.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Little knife. We can get to the 63.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
S&P's up a little more than 1/3% as big tech is firming up into the close. NASDAQ's ripping. Kevin Green joins us for a look at the options. KG, big tech going to be enough to pull us back into the higher end of our range or what?
It appears so, Oliver. I think today is probably the largest option volume on the SPX 0DTE that I've seen in a very long time. The top 3 traded contracts have traded over 100,000 contracts on the session here, and those contracts that have been targeted is pretty much where we are at right now. The 5440s, or 5840s, 5850-ish strikes are the ones that are really catching a bid. I think it's going to be a little bit difficult to try to break above that. You could probably get to 58, 55. That would be the upper end of that range. And maybe we get some additional buyers to step in here, but we're pretty much closer to the upper end of resistance rather than maybe potentially going back over to support. Now, the technical setup right now, if you kind of look at it, we had a nice little, move to the downside yesterday. When you're looking at the close, we opened today a little bit weak, came back, getting really close to that 5,800 level, had some buyers stepping in, and that's where we've been catching a bid pretty much ever since here. And that's really how we have been managing these really strong positive days. It's not so much a really great open. It's usually a weak open hitting an area of support and then buyers stepping in rather than us opening strong and then fading into the day. So I actually like this price action more than what we've seen over the last couple of trading sessions here, but overall it's actually a really decent day. I would just once again be a little bit surprised if we're able to break above that 58, 55-ish area, because you're sitting at around 80 to $90 billion worth of exposure above those levels.
Yeah, it's a pretty nice little pattern to slip and then bounce, find buyers, and continue to hold at least. So you kind of test the strength a little bit and make it through. I do wonder, though, some of the other stuff going on. I mean, the kind of nature of the zero-day options. There was a little bit of action in some of the kind of speculative GameStop meme, DJT. There's some pretty juicy stuff going on in there. Do you see some of that mania creeping back in?
I mean, that mania has actually been around for the last, week, 2 weeks here. Actually, if we're looking at 0DTE options, we haven't really seen that much activity, especially when you're getting over that 100,000 contract level. So maybe there's a little bit more froth or speculation in the market, but if we are having positive speculation in the market, that can drive prices higher, and that's really what we want to see from a broader investing standpoint. The price advances in the market. Now, is it going to be enough for us to really kind of break above these really key areas of resistance? I'm not sure. I think that's going to be more catalyst driven. We have some earnings coming after the close here that could be those catalysts. We have Google and AMD. But yes, you're seeing a lot of you've seen a lot of volatility spikes. DJT was halted earlier in the session here today. The uranium and small nuclear reactor plays, the ACLOs, the SMRs of the world, seeing a lot of flows to the upside
good example.
As well. So it's still there. It's still there, but that does signal risk on for now. This is actually really good. We're not outside of this range that we've been following, but you'd like to see us at least holding that 5,800 and trying to recoup some of the losses that we saw going into the close yesterday and earlier this morning.
Yeah, good call on the nukes, as that's kind of been one of the hotbeds of speculative fervor right now. Oklo going nuts again at $25. All right, so let's talk some stock specifics then, since it seems like that's where most of the action is. The index level kind of seems a little ho-hum right now. How about AMD ahead of the report? What do we got?
Yeah, this is actually going to be an interesting one. So there's a lot of bullish speculation.
Everybody's got their eyes on AMD.
Report here, Oliver. You're looking at around a $10.84 expected move. That's if you kind of back out the time value that we're going to have remaining for the rest of the week here. And so you're kind of looking at the upper end of around $176.59, and the lower end of that expected move sitting at around $154.91. You are seeing some positive flows going into the 180 level, so a lot of buyers kind of stepping in there. But that would be a tall order, and you can kind of look on that chart. Once again, that's going to be an area of resistance that we have seen. We had a head and shoulders pattern earlier this year that was setting up where that was pretty much the base of that pattern until we failed. We tried to retest it again, failed, and that could be another area of resistance here in the near term. So you don't have that much wiggle room if you're just trying to go long calls or long puts. This would be a scenario where knowing the IV is relatively high, leveraging any type of put spread strategy or a call spread strategy, depending on if you're bullish or bearish, probably would be a little bit more beneficial, if you will, rather than just going long call, long put, just because the speculation and the call skew right now is very expensive.
Okay, so it's
elevated
IV, but a little bit more on the bullish side. So kind of, I guess more people are going to want this thing to rally than not. Either way, depending on what view you have, you probably want to have some volatility harvesting component. You want to sell something as part of your trade.
Yeah, and when you're talking about that call side skew, it's really sitting at the 170 and 180 level. That's where you're getting a lot of these buyers stepping in. I mean, the 165s, yeah, you had a little bit of attention today, but 170 to 180 seems to grab a lot of the attention. And going long just the 180s itself, we have seen some pretty big block orders getting into that. And if you actually have a really good announcement and you're able to break above, I mean, we had that technical level, once again, that green line. If you look across, you got that head and shoulders, you got that attempt once more. I mean, if you break through that from a technical standpoint, you could get some dealers to actually try to cover some risk. This is also a histogram kind of showing you that skew. Downside, not very much. You can see them pretty much on every $10 increments, but on the upside is where you're really seeing a lot of that speculation taking into this into this name right now with that 180 level, pretty much that big gamma wall that it's going to. That the stock could be attracted to, but might have a hard time trying to break out in the after-hour session if we actually have a knockout earnings announcement.
All right, and that's according to the market maker move right now, which is about $12. That gamma wall pretty well aligns with that to the upside for the most part, pretty close. I mean, very specifically, maybe off by like $1 or so. But so if we get through 180, then like it's going to take something monstrous, and that would be a huge deal for AMD. If it's weak and it slips, and you're looking for maybe the more patient kind of wait to buy a dip to the point of or kind of where we started about the market buying dips, then maybe it's at that like 150-ish area you got there.
Yeah, I would agree with that. I would say the expected move is sitting at around $10.84 because you got to back out some of the time value. I mean, those options are still going to have time value over the next couple of trading sessions, right? So if you're looking at that upside move, it would sit at around $176, $175, give or take. So there is a little bit of a sweet spot, if you will, between 175 and 180. That kind of gives you a little bit of opportunity if you are a speculator. That's not a recommendation by any stretch of the imagination. It gets you out of that expected move, but also kind of lets you capitalize on the IV crush that could happen after the earnings announcement if it does try to touch or approach that 180 level, which could be, once again, a kind of a tall order here, but This is a stock that's been falling behind when it comes to the performance in the AI space compared to NVIDIA, so this could be a catch-up trade. We've seen a lot of catch-up trades in this market over the last couple of weeks, as you talked about, with the speculative nature of some of these, of these markets, nuclear or even others.
Yeah, and last week we saw some strength in some of the less exciting semiconductors, Texas, Lam, Western Digital, a few kind of earnings ramps there, so maybe AMD will get the same love. Pressure's on them. All right, thanks, KG. Appreciate that. 180, maybe a tall order for Advanced Micro, but call skew going into the report. Let's go to the NASDAQ, talk some IPO potential, as well as preparing for earnings after the bell. Alphabet, AMD are our highlights. Don't forget Visa, Chipotle, though. 20 minutes till the bell.
NASDAQ's up 200 some points. Well. Chum.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab.
A modern approach to wealth management.
Welcome back to Market On Close. Let's head to the NASDAQ, where Max Cavasso, Managing Director of the Market Intelligence Desk, is standing by. Max, we've got equities supported by big tech right now ahead of this afternoon. What's top of your mind with the giants set to report?
Yeah, so look, I mean, earnings have been off to a bit of a mixed start here. You know, it looks like we're going to have EPS growth for the 5th straight quarter, but it's going to be the lowest growth rate since Q2 of 2023. Obviously, the main event's really starting this week with 5 of the 7 of the Mag 7 reporting this week. Other companies, such as AMD, also reporting tonight. So, see if there's any leeway there. I mean, we've kind of been in this sideways range here, just below all-time high. So, if we get good prints there, we could definitely see the market really start to take off. To the downside, though, again, we've been kind of treading water. If it's a weak print, the bottom could fall out there. So those are going to be crucial for the market in the coming days here.
When you look at the components that matter for companies in the IPO pipeline, it seems like the economic figures are in favor of going public right now. How about the whole AI theme and trade, though? Are there companies specifically in that industry waiting to see if the all clear is still there?
Yeah, I mean, we're seeing activity, kind of across the board. I think obviously the backup in rates has kind of given some, a bit of a pause here after the Fed cut 50 basis points. Everybody thought, oh, potentially it's off to the races, but obviously we've seen the reversal of that. Obviously, another 25 basis points of cutting expected, at the November 7th meeting. So the backlog is still there, waiting to go. And again, that's across sectors, not just AI, seeing healthcare as well. But I think the backup in rates has kind of put hit the brakes a little bit. on there. But again, we do still have that backlog there waiting to go, just kind of waiting for the all clear. And we'll see what we get in the next few weeks here with rates, earnings, and obviously the election coming up next week as well.
It's interesting so far this earnings season, back to your point on performance, is that the biggest beats have been banks, some of the consumer stuff, the market arguably taking a little bit more of kind of a traditional sort of pro-cyclical economic tilt. What do you make of that?
Yeah, I mean, look, I think it's a bit of that kind of wait and see. They're looking at the cyclical moves here. I think there's going to be a major focus, obviously, on the election next week. What the outcomes are. You're getting a bit of a mixed picture between some of the odds markets and betting markets versus the traditional polling. So I think that'll be kind of a big catalyst. Obviously, earnings are important, but that could be a real catalyst for some of those sectors, depending on the outcome of the election next week.
Got it. You think the numbers this week for the economy should be supportive of stocks and the going public thought process, or if rates blow out, does that freak people out?
I mean, I think it could be. We're again another mixed picture. We've seen jobless claims, increase, openings decreasing, but at the same time, consumer sentiment pick back up, at the most recent print. So we're seeing that mixed bag. It could be there. And again, if we get positive earnings prints today, we have a GDP Wednesday, jobless claims, payrolls Friday. So there's some big numbers there. And again, it's really, how does the market interpret that? Is it negative? If the numbers are weak, does that support the Fed, cutting potentially even more and, potentially a further drop in rates? Or if it's too strong, do they maybe take their foot off the gas in terms of cuts and kind of pause a little bit, primarily focusing more on potential, reflation trade. So the opportunity is there. I'm interested to see what we do, because again, we've seen kind of counter movements. The Fed cuts and then rates backed up, right after that. So we'll see what the market does. I think again, the election is going to be a big overhang, until we get a clearer picture next week. So I wouldn't be surprised to see a bit of a wait and see, and then a big move either direction next week.
All right. Hey, of the Giants reporting in the Mag 7, what's the main one on your list? You got a personal pick? Which one's going to be the most action-packed or means the most?
I don't know if there's one in particular. I think it'll be looked at in a totality. Again, it's a bit of a lower bar, it seems like, for this print. They haven't blown out like we've seen in the past few months or past few quarters, where everything's been driven by their numbers. So this one is again a bit more of I think it might have a bit muted reaction
like yesterday
previously. And again, given how everybody else has performed so far, haven't seen huge reactions. We'll see how they do. But I'm not looking at anyone in particular at this point.
All right, thanks, Max. Appreciate it. And
thanks,
right now, it doesn't really matter because they're all up. Max Cabasso, Managing Director of the Market Intelligence Desk at the NASDAQ. Got a big picture team. We got a good one coming up. Kathy Jones and Liz Ann Saunders taking us to the bell in a moment. Be right back.
Will.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at the whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
You wouldn't see in mine, baby.
I'm very good at trading.
I have a trading system that I've used for over 10 years now.
See how we come down and we're going to hit the 208 EMA. She had no, boom, baby. I had no doubt, honey. You see any emotion coming out of my face? I had no doubt we were going to come down and hit that 200. EMA. And no emotional showings that you can see, but inside, man, boom, there I am, right there. Time to exit the trade. Out. See where's it? Get out. Market, get out. Randy. Swap. What a beautiful trade. Do, 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 do. Oh my God. Look at that. All day long. And all of a sudden, 2 minutes. Bye-bye. Bye-bye.
To Charles Schwab. Good to have you things on this afternoon with a lot ahead of us over the next couple of days and week, really 2 weeks, I guess. Lizanne, when we think about stocks, earnings first, the baseline expectation with a lot of these companies close to highs, is it that things should go smoothly here?
Well, so far so good in terms of the traditional metrics like the beat rate and percent by which companies beat. What I find interesting about this season is the expected dip from about 13% growth in the second quarter to only 4.5% if you use that blended expected growth rate right now, back up to 11 or 12% in the fourth quarter. That seems like an odd mix for this sort of V bottom in earnings, which is why during earnings season, especially for some of the high flyers, I'd pay at least as much attention to outlooks and watch what analysts do for Q4 and maybe even into the beginning of 2025 to get a clearer picture of the sort of forward trajectory from an earnings perspective.
Okay. The big tech trades still dominant, but as we were talking about in the last conversation too, since earnings, like dominant from a market cap perspective, obviously, but we've had some pretty good strength in some of the other stuff throughout earnings. Does this have the potential, this part of the season, to skew that market cap back, Lizanne, or do you have a strong bias on kind of what type of breadth participation we might be seeing?
Well, I think on a day like today, when we had the breach about 4.3% intraday on the 10-year, I think that has been a contributor to some underperformance again by small caps. You still have about 43% of the Russell 2000 that is negative earnings, a similarly high percent that is some combination of not profitable and zombie companies. So on the margin, the moves up in rates tend to hurt those areas. But I think the broadening out is not from the Mag 7 to one other segment of the market. I think it'll be a series of rotations, inclusive of times like today where you're going back into the mega cap tech and tech related names. It's just a little bit more of an on the surface series of rotations relative to what were under the surface rotations happening in the first half of the year.
To that point, Kathy, today we saw a pretty notable spike in yields early on, only to get some pushback. Seems like one of the first days in recent memory where the bond bulls were able to overwhelm. And I know your team's been looking for a little pushback to some of this higher yield steepening. What'd you make of the action today?
Yeah, the JOLTS report was, weak enough to take some of the fury out of the move up in yields that we've seen. But I think we're really sitting here waiting to see what the jobs numbers have to tell us and what the Fed does at its next meeting. So we've had, since mid-September, really stronger than expected economic data, and that Citigroup Surprise Index, Economic Surprise Index, or the Bloomberg Economic Surprise Index really moving up and 10-year yields moving up along with it. So we've had a stronger economy, that we've repriced the path of Fed rate cuts to a slower, shallower pace. And now we're waiting for the next set of data. Unfortunately, the jobs numbers are going to be kind of a mess because of the hurricane and the Boeing strikes. I'm not sure we'll get a clear reading on what's going on from that. And then we have a Fed meeting, and of course, in the middle of all this, we have elections that have consequences in terms of economic policy longer term. So all of that has had the buyers step back. But now we're at yields, 430 on the 10-year, et cetera, pretty extended. If we get any kind of soft data, I would expect those yields to come back down a bit.
Okay, that's a good point. So I guess when we've come this far, bulls might be itching to jump back in if something doesn't go as
256
expected or come in as strong. It seemed like our ETF
Red
conversation
knife.
earlier with State Street was about also flows, pretty ready to pick up yields at this point. The 7-year auction, any sign of appetite there that might extend to the longer end of the curve, Kathy?
It's doubtful. 7 years is usually kind of an orphan anyway. It's not a real popular spot on the yield curve, so those auctions tend to be kind of below subpar most of the time. So I'd be surprised if people jump in to a 7-year or to even a 10-year right now, just because why not wait and see what the numbers and the Fed tell us in the next week or so.
Fair enough. Lizanne, on that subject, the market's basically saying 100%. Fed's going to give us another 25 bips after the election. Should we expect that number to vacillate, to change at all, or are they confident that this response by the bond market to the first 50 bips is good? Part two is, do they want yields to keep going up?
Well, I think the jobs report on Friday will hold the key to that. We also get PCE, which of course is the Fed's preferred measure. PCE doesn't tend to print well outside the band of consensus expectations, because once you have CPI and PPI in hand, you can, at least talented economists,
We keep hearing PPI and CPI every single week.
Outlier in terms of reports, but as we saw with the most recent jobs report, that can clearly move the needle. That was the deciding factor.
I think we're getting too reliable on the numbers, baby.
Probabilities move between now and the November FOMC meeting.
Look at that sell-off.
But it probably would be because of a significant outlier in the jobs report that goes just beyond some of the vagaries, as Kathy pointed out, related to the Boeing strike and/or weather.
Jimmy wants to swing.
A good reminder too on that subject again, which is that if the only thing that can move that November cut odds would be a monster like beat, it seems like probably unlikely to happen in a quarter in a period that's got a bunch of weird things happening. But I guess volatility both ways, or is the bias generally that those incidents will keep numbers muted? I'll give you the last thought, Kathy.
Yeah, I think there is a case we made for a pause at the November meeting. If you're sitting at the Fed, and remember, not everybody was on board with that 50 basis points. They voted for it except for one person, but in the dot plot, it shows that they weren't all particularly enthusiastic about that. So they could pause and say, look, we don't have enough good data to tell us where things are going right now. Let's take a break.
One more minute.
It's not likely. I think they would have signaled that ahead.
Oh man, I want to swing this so bad.
Case, but you never know. So either a pause in November or December is not out of the question, and I wouldn't be too surprised by it.
Okay, thank you very much. Great stuff, ladies. Nice way to finish our session. Thank you, Lizanne Saunders and Kathy Jones. All right, last minute before the earnings. And then it begins. Alphabet, AMD, Corvo 2 in the Apple chain. Be right back.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning.
Boom, that will keep.
With Schwab.
Accelerate your market knowledge.
And shift your perspective into full gear. Real-time example.
Man, I was looking at something here. Okay, well, there you go. And there you have it. I'm going to take it easy, lay down, take a nap. Get some energy up, start trading again. Didn't do much today. Seemed like these knives are coming unexpectedly. And then real hard, so you get stuck in them. So, we'll see you tomorrow.